Okay, good morning, good afternoon, good evening, wherever you are. Thanks so much for joining us today for the Euro Traders Summit, online summit here today. If you, let's see, that doesn't sound right. There was a little miscommunication about time, so if you're not here right now because you thought we were at a different time, we apologize. Or if you were here an hour ago thinking we were supposed to start, we apologize. It turns out that those people in London, England, go by a whole different time than we do. Hear me out, hear me out. If it's like 10 o'clock in the morning here in Texas, it's like 3 in the afternoon there. And I don't understand that at all. How do they even, when do they breakfast, for heaven's sakes? I mean, next you'll be telling me they drive on the wrong side of the road and don't say "the" in front of hospital. It's all very strange. At any rate, we're glad you're here, and we apologize if the time mix-up has put things awry. But the good news is we are recording, so you can watch this at your leisure whenever you'd like. Of course, it's best to have you here live because then you can go ahead and ask questions and comment, and we certainly encourage you to do so. By the way, I'm coming at you from here in the satellite studio in Texas. Our home is in our headquarters is in Salt Lake City, Utah. Today we'll have Bobby Hiller presenting first. That was not supposed to be the situation. It was going to be Daniel Sinnig. So again, if that throws you off, we apologize. Essentially, whatever schedule you received in email, we're just switching it up by putting Bobby Hiller up front, and then everyone else will fall into place behind him as scheduled. So again, the first person, and I think we've actually adjusted the website. So if you go to metastock.com/Euro-Summit, Euro-Summit, it will tell you today's correct schedule. So to be very clear, Bobby Hiller is up first, then Daniel Sinnig, then whomever else after that. So go to metastock.com, and I'll put it here in the on YouTube. So again, we're simulcasting on YouTube and go to webinar today. So if you're watching us on YouTube, make sure on either end, make sure you ask lots of questions. And if you have a second, do go ahead and like and subscribe. It helps us a lot here. And we do have live webinars about twice a week, usually. So it's a good thing to do that, so then we can send you notifications when we have webinars. All right, I'm going to go ahead and turn on a video or something here so that I can check in with the fine folks in Utah and make sure they're all set to go. Again, please do, as soon as you log on, make sure you say hello, say hi, and give us just a minute. We'll be starting here in about 5 minutes. Thank you so much.
Metastock is a tool for traders like you to analyze the markets. Metastock helps you take the guesswork out of trading by offering a methodical, systematic approach to some key questions all traders come up against. Questions like, how do I decide which securities to trade when there are literally thousands to choose from? Which strategy should I use, and how do I test that strategy before spending my first trading dollar? When should I enter and exit a trade? How can I...
Hi there, Greg Lewis, Metastock Software. As the marketing director, I get asked all the time, what is Metastock? How can I help my trades? Well, stick around for about 3 minutes and I'll tell you.
Metastock is an award-winning software and data package that has been helping traders for over 35 years. Simply put, Metastock is a tool for traders like you to analyze the markets. Metastock helps you take the guesswork out of trading by offering a methodical, systematic approach to some key questions all traders come up against. Questions like, how do I decide which securities to trade when there are literally thousands to choose from? Which strategy should I use, and how do I test that strategy before spending my first trading dollar? When should I enter and exit a trade? How can I effectively manage the securities I'm interested in? And of course, how do I know where prices will go next? At the core of Metastock are the Power Tools. The Power Tools give professional-grade analysis tools to private traders like you and me. You can scan the market with the Metastock Explorer to filter and sort securities that show buy and sell signals based on your criteria. The Metastock System Tester lets you test most strategies through a process called backtesting, which allows you to see how your strategy would have performed over time. You can easily manage and monitor the securities you are interested in with Quote Center. Quote Center lets you sort on a variety of criteria to view the data that's important to you. Then just double-click on a security if you want to see its chart. With the Metastock Forecaster, you can even take advantage of patented technology to view probable future prices. If you're an options trader, you're going to love Metastock's Option Scope. Option Scope puts all the critical info at your fingertips, displaying sortable, customizable, color-coded options data, including the Greeks. And Metastock has solutions for traders of all levels and interests. If you're just getting into trading, you will appreciate the education offered by our many built-in systems. In addition to pointing out buy and sell signals, Metastock explains how they work in an easy-to-follow commentary window. Metastock has built-in systems based on popular strategies like MACD, Bollinger Bands, turtle trading, candlesticks, and many more. Metastock even has the very popular and exclusive Rahul Mohindar oscillator system, or simply known as the RMO. And as you become a more experienced trader, Metastock grows with you. Advanced analysts will enjoy the comprehensive list of trading systems and indicators, and the ability to build their own systems. And if you're a day trader, you can't do better than Zenith, the real-time news, data, and analysis package offered by Refinitiv, a world leader in market data. Add on the world-class support, and it's not hard to see why Metastock has won the Stocks and Commodities Reader's Choice Award for 26 consecutive years. To find out more about Metastock and how it can help your trading, visit metastock.com or contact a product professional via phone, email, or chat.
Okay, well, make sure I'm got, yeah, we'll be starting in about a minute. I got Bobby Hiller ready here on the other end. Again, if you're late because we gave you the wrong time wherever you are in the world, in all seriousness, we do apologize. Of course, we understand there are different time zones, but sometimes, of course, they can be confusing, I think, to all of us. So we apologize. If you have any questions at all, please do go ahead and ask them in the chat. If you have any questions for Metastock outside of this discussion, our sales professionals are available all day today at metastock.com/saleschat, and I'll pin that, or I'll put that down here in the description on YouTube or in the chat. All right, I'll go ahead and get offline because we're going to be starting here in about 30 seconds. And thank you again, everyone, for attending, and successful trading.
All right. Thanks, Greg, so much for getting us all started up here. Welcome, everyone, to the online Euro Summit for June of 2023. Really excited to have you all here today. Apologies if you're joining and you had a little bit of confusion with the start time today. it seems we didn't have our London or the British summertime matched up to the Eastern time zone correctly, which caused just a small change in schedule. From what you saw with our London posted time, that's all going to be the same, except I'm going to be presenting first today to make sure that everyone else's time slots are lined up correctly. But don't worry, we still have all of our speakers and they're all going to be on today, so no worries there. Oops. I actually threw a schedule up here real quick in case you guys want to see. I updated this. Instead of having me present at the end, I'm going to be going first today and just kind of giving you guys an overview of Metastock. And then we're going to have my friend Daniel Sinnig. He'll be on at 4 p.m., followed by Colin Abrams, Chris Tubby, and then Steve Bigalow. So we're really excited to have you all here today. Don't worry, the entire session today is going to be recorded. So you can come back to our YouTube channel, youtube.com/Metastock at any point and watch all of the presentations today. Also, if you saw something you really liked and you want to hear it again immediately, and you're watching on YouTube, feel free to just rewind a little bit. You can watch it again and then catch back up, however you want to do it. But yes, this is the correct schedule now that we have it all updated here. And yeah, we might be starting a little bit early for those of you that are based in London, but that's just because I'll be presenting first today, and then everyone else is still going to be at their slotted time. Before I jump too far into things, we do have to just real quickly go through our disclaimer. So this demonstration, it's designed to instruct you on using Metastock and the accompanying software plugins, and it is not a recommendation to buy or sell, but rather guidelines to interpreting and using the specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. So basically, I'm just here to kind of teach you guys a little bit about Metastock and some trading tools and things of that nature, but not giving you any actual trading advice. Now, for those of you that aren't very familiar with Metastock, so we are one of the longest standing technical analysis platforms out there. So you can utilize our software for scanning the markets, for testing your different trading ideas, for forecasting likely price movement. You can also get real-time alerts, commentary, and signals, plus a whole lot more. And it's starting as low as $59 a month. I'm going to be jumping into a lot of the specifics today, but honestly, I won't even be scratching the surface of everything that's included inside of Metastock. So for that reason, we are offering to let all of the attendees get a trial of Metastock if you just want to try it out. Or also, we have some really great deals going on for some of the trading systems inside of Metastock that are going to be from our speakers going on today. And you can find that trial as well as get that offer for those systems that will be presented throughout the day at metastock.com/Euro deal. So just to let you guys know a little bit more about me, I've been with Metastock now almost 7 years, so less than 2 months away from being here for 7 years. I was with the sales team and an account executive for about the first 5 years. And then the last 2 years or so, I've been in our business development department. And I absolutely love my job. I think I have a really interesting and unique job, and I'm very appreciative of it. Basically, I get to work with all of our international partners. And we have dozens, if not hundreds of partners that are all over the world. And so the great thing is, I won't say that I'm a professional trader by any means. However, I do get to work with professional traders all over the world, and I get to help implement their systems into Metastock. And I get to see so many unique and creative ways of being able to analyze the market and, unique ways to be able to trade and be profitable. And what I'm hoping I can do today is just share a little bit of the knowledge that I've received from working with all of our partners and working at Metastock throughout the years, and just kind of, pass some of that knowledge on to you guys and help some of you find some ways that you might be able to improve your trading today. And, a lot of the speakers that we have on today too, I've had, an opportunity to meet and speak with them too. So yeah, once again, I'm not a professional trader, you guys, but I am pretty savvy with the Metastock platform, and I know how to utilize it to help me trade far better than I used to be able to before I started working here. I'll tell you that much. Just to get you a little more info on Metastock. So we were founded back in 1982. Like I said, we were one of the longest standing technical analysis softwares out there. A lot of people didn't even know what a computer was, 40 years ago. And there you see the Metastock version 1 on a floppy disk. So we were actually purchased by Reuters back in 1995. A lot of you are familiar with them. They're one of the most respectable, well-known data providers in the world. And yeah, they did purchase us back in 1995. So we released our first real-time data feed based on their technology for Metastock back in 2005. And then we released Metastock's Zenith platform back in 2012, so a little over a decade now with the Metastock Zenith. And we actually divested from Thomson Reuters in 2013. And so Reuters became Thomson Reuters, and then Refinitiv, now they're owned by the London Stock Exchange. So lots of name changes, but throughout this period, we've always had the same Metastock core group here. It was actually the president of Metastock back then, Scott Brown, who purchased Metastock from Reuters. So, and he's still like the owner and CEO today, Scott Brown. And the reason we kind of divested from them is now we're able to move with a little less red tape. We can make decisions and improve our software more efficiently now. We actually just had the 10-year anniversary for that on Tuesday of last week. So just over a decade there. And we still have many, customers that have been with us since those very, very early days. And we're so appreciative of that. But I hope that kind of just gives us a little bit of credibility so that you guys know that we've been around for a really long time. We have partners that have been around for a long time and with us throughout this. So we're, a very reputable company. And I think a lot of you might be able to benefit from some of the things that we have to offer from all of the feedback we've received from our clients and partners over the years. So you don't have to take my word for it. We've actually been rated as the #1 technical analysis software for over 30 years in a row now, according to the readers of Stocks and Commodities magazine. And for our Metastock real-time software, that's been rated #1 for over 10 years now as well. And if you can remember, we released that back in 2012. So pretty much ever since its release, we've been winning the best analysis software in our price category. All right, so to go a little bit more into what I'll personally be kind of showing you guys today, the walkthrough here is how do I find securities to trade? So we'll review that a little bit. Also, a really big question, when do I get into and out of a trade? I can help you answer that question. And what system should I use? As well as how do I test my system before I get into a trade to make sure it's going to be successful. So we're going to go ahead and touch in on all of those different points today. Plus, I'll show you guys a little bit more of just, Metastock in general and how it all works before we move on, to the next speakers today. All right. With all that being said, let's go ahead and look inside of Metastock. So yeah, I won't be showing you guys just a PowerPoint all day. We're actually going to spend the majority of our time here in Metastock now, just kind of showing you guys some things. I had a couple of charts here earlier. Let's go ahead and close these down. I guess I can close them all at once. Oops. No. Close all. That's what I wanted to do and not save. All right, so I'm going to go ahead and open up a chart here. I just went inside of our Metastock Power Console, and these are our main power tools here on the left-hand side. For this, I'll just be jumping into a chart. First off, I'm going to show you guys kind of the basics of a chart, what it looks like, why Metastock's unique compared to some of the other platforms out there, and then we'll go through answering all of those questions for you. So what I'm going to do is pull up, let's do clean chart in here. Actually, that's not too important. I'll just I typed in a symbol just because it's an easy one. I know off the top of my head, F for Ford. We'll go ahead and open that up. And I want to show you guys just a blank chart at first, a clean slate. Let's start from there. So here we have a chart, a pricing chart. This is a bar chart of Ford Motor Co. And all right, I know you might be seeing this. You're like, okay, this is something that I see all over. Maybe nothing too special here. Well, what I want to do is kind of show you guys where Metastock is special, where it is, better than a lot of those other platforms out there, and why you should consider utilizing our charts, just like all of our partners do. So, as mentioned, yeah, we do have the bar chart here. I can hover over it and kind of look at the pricing. You'll see we have the X and Y axis listing the dates down here, the price down here, all pretty standard basic stuff. With Metastock, you can simply double click on your pricing here, and you have several different options here. So not just like the standard bars and Candlestick, etc., but we also have like 3-line break, the point and figure, Heikin-Ashi charts as well. I really like to utilize Candlesticks, so I'm going to go ahead and select those. Maybe I want to have my up color and my down color. Oops, that's up fill, sorry. My up fill and my down color set. And we'll go ahead and apply that just to show you guys, okay, you can start to customize it here. You can add a little bit of color, a little bit of flavor. So great, but still, I'm sure you can do that with a lot of your other platforms, and that's maybe not so fantastic, but let's start to look at a little bit more here. So a really common indicator is the MACD. That's the moving average convergence divergence. I'm sure a lot of you are familiar with it or have heard of it in the past, but just to kind of apply it here and show you guys a little bit of how this works. So this is the version with the histogram. So you have your signal line here, as well as the moving average. And whenever you get a crossover on the moving average with your signal line, if it's crossing up, that's telling you that you're getting a buy signal. And if it's crossing down, that's telling you that you're getting a sell signal, generally speaking. There's a few different ways to look at it. You can also utilize it for looking at overbought and oversold conditions, and et cetera. And so one kind of example of that right here is you can see this last crossover here where the red line goes above the blue dashed line. And that's basically telling you, according to this indicator, that's where you're getting a buy signal. And so you might see this on a lot of people's charts. They might have this down here. These lines that you're seeing, the blue lines that are vertical, that is the histogram, and that's basically telling you the difference in between the moving average and the signal line. So it's just telling you the gap there. It makes it a little bit easier to kind of measure that and view that when you're looking at all these days side by side here. Now, as I mentioned, I wanted to show you guys where Metastock gets a little bit unique compared to some of the other services. So instead of just having these basic indicators on here, and I should say we have hundreds of them, and you can also easily create your own and customize them. Where Metastock starts to get unique is with our expert advisor here. So I'm going to right click on my chart and hover over this expert advisor, and I'm going to come right here and hit attach. And now this pulls up a list of the expert advisors that I have saved onto here. I'm going to go ahead and scroll down and select the MACD by Metastock. That's the MACD by Metastock. And I'm going to hit OK. Now you'll see quite a bit has kind of changed on the chart here. There's a few things that happened. And again, keep in mind that I'm showing you guys a really basic indicator here, but the things that I'm showing you apply to all of the expert advisors that we have within Metastock. So this can benefit you not just with a basic indicator, but also the far more complex ones. But now, wherever I have this crossover down here of that MACD, remember I said when it crossed up, it gave me a buy signal. Well, what this has done is it's placed that buy signal up here on my actual pricing chart, making it really easy to see. Like maybe sometimes you can't tell down here, like, did that actually cross over? And did that cross up or down? It might be hard to tell at first glance, and you're not sure exactly which day it lines up with up here. So there's a number of reasons, that this can be beneficial, especially once you have a more complex system and you have a lot of things going on the chart. It might be hard to see if you're actually getting, the buy criteria from that mixture of indicators or whatever it may be. And with this, it makes it very easy to see, but it doesn't stop there. That's not all that's unique about this expert advisor, and not the only thing that's so great about it. So not only does it make this far easier to see with the actual signals and kind of telling me what they are, another thing that it's done is it's kind of identified those bullish and bearish zones for me as well. And sometimes that can be tricky to really see too, like if you're zoomed in farther or maybe zoomed out too far and you can't tell if it's a bullish or bearish zone, but basically it's saying after a buy signal and in between the next and right before the next sell signal, that's a bullish zone. So according to the MACD, this is where I got my actual buy signal, but this whole zone here is bullish, and that's green in this highlight ribbon that was created by the expert advisor. So that's another benefit of it. But what I would say is even more impressive is the expert commentary that comes along with this expert advisor here. So once again, I just did right click on my chart, and I'm going to come here. I've already attached the expert advisor, but I want to view the commentary for it now. So I've gone ahead and clicked on that, and I'm actually going to hold this bar over here so we can see the most current days here. And this is the commentary that just showed up for us. Oops, so I put it down here, and that's okay, just so that you guys can easily read this. So this is letting me know, it's on this bar here where we see this upside down triangle, or kind of just pointing downward. It's letting me know on this date, this is the close price, this is the current change in value today, the MACD value, and also the signal line value. And it's telling me in this commentary that currently the MACD is bullish since it started trading above its signal line. It crossed above its signal line 14 periods ago. So that was right here, about 14 periods ago. It's letting me know the chart I'm looking at, the increase since the last crossover, which is actually really impressive there, the high and low range. So just lots of information in here. It's also giving me some other info too. So like I mentioned before, the MACD can also be used to kind of tell you overbought and oversold conditions. And it's actually currently in an overbought range. And so with that, it says pricing may continue to move higher for some. Wait for prices to move lower before considering any short positions. So yeah, lots of info, sorry, that you can see here with the commentary. And it's also letting me know there have been no divergent signals coming from this within the last 5 periods too. Well, I just want to show you guys a little bit more of how this works. So I'm clicking this arrow here, and that's basically moving that. Yep. Hey, yeah, no worries, Greg. Thank you. Issue on YouTube. Okay. All right, perfect. I am still seeing a black screen on YouTube on my end. Okay, perfect. Thanks, Greg. All right. Yeah, I think maybe there's a quick internet issue or something over here that might have happened because I had some weird screen things going on as well. All right, sorry about that, guys. So kind of back at it. So with the expert commentary, you can actually jump around. And so I could jump to these different signals and read about it. Like when I actually get a signal, it'll tell me, hey, you just got a buy signal today within that commentary. You can also set up alerts to happen within the commentary as well. So it's a very unique and useful feature there. Now, all right, so you might be telling yourself currently, like, okay, I see the MACD, I like that. You can get the buy and sell signals on your chart, and you can kind of see the commentary, you're liking that. But maybe you don't want to go through like 100 charts a day to see, or I should say potentially even thousands of charts a day to see when you're actually getting this buy signal or sell signal on your chart. So what I'm going to do next is show you guys a useful tool to actually help you find these buy and sell signals. And then also, I'll show you guys how you can back test them as well to see how they've performed historically, and also show you how to test like some of the other trading systems inside of here as well. So let's go ahead and do that. So I'm going to jump back into my Power Console here. And currently I'm under the Chart tab. And what we're going to do is go down to the Explorer. So I'm clicking on that here. And now with the Explorer, I actually have something typed in here already, but there are hundreds of different explorations kind of built in that you can utilize within Metastock. You can also very easily create your own. So again, I'm really just demonstrating a really basic indicator today. Something to look out for throughout today's presentation. Most of the speakers, most of our partners that are also presenting today, they have their own built-in explorations in the Metastock. So you can search for the different type of criteria that they utilize. Like some of them are searching for different candlestick patterns. Some of them are searching for buy and sell signals based off their different trading systems and strategies, or momentum, or whatever it may be. But again, I'm keeping things basic for kind of my portion of it. I just want to show you guys kind of how the software works, so that you know that it's really easy to utilize and that you can use it with all these different systems. So what I've done is I just typed MACD into the little search bar up here, and it brought up the MACD expert system. If I actually hover over this, it'll tell me what this scan does. So this will show me the MACD buy and sell signals. Oop, and it tells me a little bit about it. Oh, I scrolled above the wrong one. I'll actually just double click on it. So it's going to show me those buy and sell signals with either a 1 in column A or column B. And I'll show you guys that in just a moment here. It'll also let me know about the overbought and oversold conditions in columns C and D. But anyways, so I'm just going to have that one selected here, and then I'm going to come down to my data list. And one thing that you'll notice on this instruments right here, so I currently have 100 selected out of 321 plus thousand symbols. So there's over 320,000 symbols available to you in Metastock. Now, maybe you're saying, whoa, that's way too many. I don't want to have to be able to sort through all that, et cetera, et cetera. Well, don't worry. You can very easily, customize this so you can manage your public list, and you can have everything show up that you want, or only the things you want. If you only trade European stocks, you can have just like the European region set up in here. If you only trade like the Americas, or whatever it is that you may want to watch or have loaded into your platform, you can do that. So it's very customizable, and we're also more than happy to help you with anything as well. So if you're curious of kind of how this works, or if you want to change yours to look more like what you see me doing today, something of that nature, hey, jump into our chat room at metastock.com, or give us a call, whatever it may be, and we're more than happy to help you out with that. But just so you know, we do have over 320,000 securities available for you guys. So really, whatever markets that you're monitoring, whether it be stocks, futures, Forex, ETFs, et cetera, we likely have that data available for you, and you can use the tools in our platform to help you analyze them. So I ran a scan earlier just to kind of make sure, that that I was going to get some results to be able to show you guys during this. That's why these are already selected, but I just used our public online data list, and I went into our index constituents, and this is currently has the FTSE 100 selected. So what I'm doing is I'm running a scan on the FTSE 100 to search for either a buy or sell signal with the MACD. That's what that is saying there. Over here, this says data loading, so records to load. This is kind of just a default number that I'll often use. You actually don't need to utilize this many records when just searching with something like the MACD, but that's about 5 years worth of data, just so you know. And I often recommend to people, like if you're running scans, utilizing a certain amount of data, I normally recommend you use the same amount of data that you were looking at in your chart. And that's how much data we were looking at in my chart previously. So that's the reason I have that selected there. Excuse me, I'm gonna take a quick drink here. All right, and now here it says exchange date and time, so I'm just using the current exchange date and time. on a daily interval. And I'm using the Metastock real-time software here, which means not only do I have the daily and above timeframes, which come on Metastock daily charts, but I also get intraday data too. So I can look at an hourly chart, a 5-minute chart, a 1 minute, etc. This is for exploration, so I can do 1 minute. I can also do custom, so I can do my own, like a 2-minute time frame. So whatever time frame you utilize, you can use that in Metastock. When you're looking at a chart, you can also look at tick charts. You can select the number of ticks as well. So lots of different features. For demonstration purposes, I'll just keep it on a daily chart because that makes it nice and easy. So this means we're utilizing the MACD on daily bars instead of intraday or something of that nature. Next, I'm just going to click Start Exploration. So I hit that and my Explorer pops up here. Sometimes it takes just a couple of seconds to get going, especially when we're broadcasting here. But you'll see that it actually went through this really fast, and you'll notice this rejected rate. So 89.9% were rejected. And this is actually a good thing, because what this means is of these 100 securities that I was searching for the MACD signal, 90 of them here, so 90 out of 100 did not have a signal. So say I wanted to look for these buy and sell signals, instead of opening up my chart with the expert advisor attached and scrolling through 100 different charts, this just saved me from looking at 90 of them. And then I can actually go over here and I can sort by the columns in here. So if I'm just searching for a buy signal, this exploration is set up to let me search for the buy and sell in the same one. That's why you have these columns listed like this. But so 2 securities on the FTSE 100 are giving a buy signal today. And then if I sort by the sell, we can see that there's several in here giving a sell signal. And then also we are doing an overbought and an oversold scan as well. So there's another 2 in those. And I'm just kind of sorting by them here. But so that'll show you how you can save time. If you're looking for something that has a signal today, you can use the Explorer. You don't have to only select 100 securities. You could select, thousands if you wanted to search like the entire New York Stock Exchange or something of that nature. You can do that as well. For demonstration purposes, I figured I'd just do a real quick scan. You can also run multiple scans at a time. So I only did the scan for the MACD, but if we were doing multiple, they would have been listed in here as well. And as soon as the MACD completed, I could have started going through this and doing my analysis on this while the others were running in the background, and then they would all list up here. But a great thing about this is you can actually take this and then do a lot of work with this from here. So I currently, let me confirm actually. So I have my charts currently set to open up on a daily interval with the MACD histogram. That's what I have my default set to right now. So what that means is when I've ran this scan, I can simply double click on one of these securities. So I'm going to double click on this Flutter. And this is actually a template. So it looks a little bit different than the last chart we looked at because I only had the expert advisor attached. Now I have the what's called the MACD expert template applied here. Oops, let me go to the last bar here. I wasn't showing the last bar, but you'll see we have that buy signal on the chart for today because that exploration identified this for me. So I know right now, today, we're getting a buy signal on this chart. And this might be a little bit hard to see with the theme that's applied to this one. So I'm actually going to come down here and show you guys we have tons of different built-in themes. You can kind of customize your own. Let's go ahead and look at this Chrome theme. So just change the theme here. Now you can see that a little bit better. Here's my buy signal generated on today's bar that I was easily able to find in seconds with my exploration. And now, I can also keep that exploration tab open. I have it on another screen right now. Pull it back over here. So I could also, jump into another one simply from here. I double click on it and then it opens up the next one. You'll see it has that buy signal here. And I could change my default if I realize, oh, this one's a little bit hard to see with these settings attached. I could change that. But if I come back into this Chrome, you can see that buy signal right there. Now, let's say that I had ran this exploration on a much larger list, or if I was looking to sell too, sometimes you can get a lot of results. So maybe I was trying to weed out having to look at a lot of charts. But if I ran this on like 1,000 different securities and it gave me, 20 to 200 results, maybe you want to filter that down even further. And there's a lot of different ways you can do that too. So you could select like just the ones that you want out of here. And then you can open multiple charts at a time and then just simply click through your charts. You can save these to your clipboard or open them up in our quote center, another app within Metastock. Lots of different things you can do in here. You could also do something like when you're running your explorations. So if I come back into this Explorer, so if I had selected multiple explorations, so let's maybe do, I could add like a Bollinger Band crossover or something of that nature as well. So I just typed in Bollinger, I select that. And then currently, if I look over here, so this is letting me know, all right, I'm doing a scan for the MACD and the Bollinger Band. And I can actually use the results from the preceding exploration. And basically what that means is only the 10 that I had results for from my first exploration here are going to be ran through my second scan. So if I wanted to add multiple criteria that weren't all included in one scan, because oftentimes we'll have an entire like system within one scan that's actually providing you multiple bits of different information within that scan. But if you wanted to combine some of them or maybe kind of use some of your own in a different unique pattern, you could do something like that. So I could then run another scan here to further reduce that list to save me even more time in my analysis. Now that's just one of the ways to use it. There's a lot of different ways, kind of as I mentioned, to use all these different tools. I just want to show you guys some of the workflows in here. Also, I forgot to kind of say this at the beginning of my session, but if you guys have questions today, don't hesitate to go ahead and put them into the chat box. We are running in both GoToWebinar as well as on YouTube. I'm maybe not always the best at looking over here to my right at the questions all the time. I am going to try to look over throughout the day or throughout my presentation for sure. Of course, at the end, I'll make sure that I've answered any questions that I haven't gotten to yet. And this kind of applies throughout today's sessions, though, even with the other speakers. Don't hesitate to interact. We like to, kind of answer your guys' questions throughout. If you're wondering something, probably a lot of our other viewers are as well. Excuse me. Okay, so to kind of keep going here, that's how you can run different scans and save yourself some time in searching for these buy and sell signals. And now let's see if we can maybe answer kind of the next question that was presented on the list is, well, how do you know, well, this could potentially let you know like which securities to trade because you're getting these different buy and sell signals on the MACD. Well, what if you don't know which system you should be utilizing? We have a tool that can help you with that inside of Metastock as well. Maybe you're like, okay, well, I've heard of this MACD, but it seems kind of basic, and I don't know if I would really want to trade with that. I don't know if it works on my market or my time frame. Well, we have another tool in here that helps with exactly that, and that is our system tester. So I'm going to come down here into the system tester, excuse me, and so I actually have a number of different system tests selected currently. I'm going to go ahead and unselect those, and we'll go ahead and do the MACD. Well, here's that MACD expert system right here. And once again, if I hover over this, it kind of tells me what this does. So this back test for buy and sell signals when the MACD goes either above or below its trigger line. And then it will exit again on the trigger or when you're getting an overbought or oversold condition. So that's kind of how this works. And there's ways that you can kind of go in there and change this too. You can even do optimizations with these system tests too that test different levels of different indicators or moving averages and things of that nature. Those tests take a little bit longer because it's doing tons of different variables per each indicator. But that's getting ahead of myself here. Let's go ahead and kind of keep it basic. Well, let's see how this MACD performs. Now, there's a number of things I can do. I can come into the instrument list here, and I could go and kind of do the same workflow that I had previously. So if I actually just turn this off, and I come down into my index constituents here, and I look at the FTSE 100, with the MACD, I'm loading 1,250 records. These kind of all match up from what I was doing with my exploration. Well, I want to do a test on this. Once again, I'm going to select my time frame for that. So we're going to do a daily test with the MACD, and you'll see there's this trade options button here. I'm going to go ahead and go inside of that and just show you guys what's included in there. So there's a number of different tabs, some of the important ones. So right here, we have the trading. This says initial equity. So you can put your own kind of parameters in here. So you're getting results for what you would actually personally have. So say you have a $10,000 trading account, or maybe this is just a certain trading account that you're testing out that has $10,000 in it and not your main account. And with this one, you have a high level of risk. You're willing to have up to 50% of your available equity in a trade at one time with this allotted $10,000. So that's kind of what that's saying. You can come into the broker tab here, and if you have, commissions that you have to pay for transactions or things of that nature, you can put that in here. If you're trading on margin and have interest on there, you can include that as well. And then in here, we also have trade execution. And so you can actually have this set up so that this scan is utilizing, like if you get a buy signal with the MACD, you can say, well, I want to buy at the close price, or I want to buy at the open or the high or the lows, etc. You can kind of match this up to what works best for you. Just to kind of give an example, so what I'll often do in my trading is, I obviously have access to Metastock and all of our different tools and features, but also I work a full-time job here with the company. So I'm working here, helping out our clients, helping out our partners throughout the day. Well, what I like to do is go in about 20 minutes before the market closes, and I can real quick run my scans, and I might have these scans set up to like different watch lists that I've created from previous scans or anything of that nature. But it allows me to pull up, say I run a scan against my active portfolio for any like sell signals for securities I might want to get out of. I can do that within just seconds, really. And then for my buy, or I guess I should say my sell, so I could say, all right, yeah, I sell 10 minutes before the close or 5 minutes before the close. So yes, I do want this to say that I sell at the close price, et cetera. Or if I'm buying at the end of the day, maybe I'm doing my scans to buy, I can say that, yes, I want to buy at the close. And your trading style might be a little bit different. Maybe you don't have time to get on right before the market closes each day and do that because you're at work also. And so really you're buying at the opening of the following day. So that's kind of what this realistic market prices does, this option here. So when I have this selected, if I get a buy signal on the MACD for a bar, well, really, if I'm going and it's a daily bar, if I'm going to buy that, I can't buy it because that bar just closed. So I'm actually buying at the opening of the next day, or the opening of the next bar, I should say. And when you do the realistic market prices, that's what it's doing in your scan for you. I hope that makes sense there, and I didn't get too wordy on my explanation. But we're going to just keep that selected, and we're going to go ahead and click OK. And I'm going to start this scan. So again, I'm testing 5 years of data with the MACD, searching for buy and sell signals with my account at my risk level of tolerance and et cetera. And so the results that come up from this test are going to be to my specifications. And you can customize this so that it meets your needs. And also you can do this with all the different trading systems that are listed within the system tester as well. So you'll see, it just takes a few moments here. Here is all of those different securities that are within the FTSE 100. Oh, you have a comment, Craig? Oh, so we'll go ahead and look at the system test here, and you can see the results. Now, I'm going to sort this by the net profit. And now you can see, okay, so this, if I trade with the MACD, it looks like I have slightly more winners than losers on the FTSE 100 when on a daily time frame. That's okay. You might say to yourself, hey, that's a lot of red. Well, it's actually, this is a good thing, because all this is it's data. And this is letting me know, hey, historically speaking, the MACD trading system has not worked very well just on these specific securities. So, if I come down here and I can look at these. So I would know that all of these ones here that did not give me a net profit, these are trading systems that have not performed very well historically with the MACD. But then on the reverse, you can also see the ones that it has performed really well with. So don't be turned down when you see red in results like this, because again, this is valuable data. This is information telling you, okay, which securities do tend to follow the MACD trading system with success. And that's all of these ones over here on the left-hand side. And something else you can do with this list is you can actually save these 100 securities, or maybe you would just save these top 50 or so well-performing ones into your own custom list. And then you just run an exploration every day across these 50 because they've been profitable in the past, or maybe just on the top 10 here, or et cetera. Kind of however you want to utilize it, you can utilize it. So again, if I just kind of come back here and look at this, so I can see with this instrument, I'm actually not sure what that is, the International Capital Group. It had over 106% gain in the last 5 years. There were 183 trades. Well, hey, this is actually something really interesting right here. So this is telling me only 79 of those trades were profitable and 104 were not profitable. And that's actually some interesting data once again. So you'll have to take this into your own trading analysis. You have to first determine, hey, are you willing to make that many trades in a 5-year period, et cetera? But also, are you comfortable with a trading system that actually has less correct outcomes than positive outcomes? However, the winners with it are obviously significantly bigger than the losers. And to kind of dive into that deeper, I'm actually just going to double click on this, and it's opened up the detailed view for that security. So we'll see here again, the performance on this. So I'm more than doubled my money. I had over 100% performance on this. The annualized performance on that was 21.41%. But again, yeah, there were slightly more losers than winners on these trades, but that's okay, because as long as your losers are small and your winners are big, it's okay if you have more losers, as long as you're mentally can kind of handle that. So you really have to be able to remove your emotion from your trading to be able to win with a system like that. There's some other really useful information listed in here too that I want to cover. So the annualized performance on this was 21.41%. And now if you actually look, or if you also look at the buy and hold annualized performance, so annual, that was only 2.57%. So this trade, so sometimes this is different. Sometimes there's a security that's just been going up and up and up and up and up. And so maybe it says your trading system performed really well on it, but had you have just bought it and held on to it, you might have made more money that way. Well, in this, that's obviously not the case. So with this one, you would want a trading system to be able to have made a lot of money on this security versus just buying and holding, because the buying and holding does not perform well with this, but the MACD has performed historically very well with this strategy. So I'm going to exit out of that. I actually didn't mean to close the entire thing. Let me go ahead and pull my report back up here. What's today's date? I'm thinking. So right. Oh, actually 100. We'll pull this back up. And, I often do the first couple of ones. Sometimes it can be one or two like really big trades that made it. So I will often come down and look at some of the lower tiered ones as well, just to get a kind of idea on them. So let's look at this one. So this one had 54% performance over that 5-year period. The annualized performance was 11%, and the buy and hold was 4.2%. So again, with this security, using the MACD trading system has performed within the last 5 years significantly better than just buying and holding with this security. And that's what that's telling me right there. And again, I can see the total number of trades, the average profit and average loss ratio. Also, you can see things like the highest profit and the lowest profit of those trades, the most wins in a row. This one had 6 profitable trades in a row. And the trade efficiency down here, the performance indices on it. So just lots of different tabs to look at here. And there's actually more up here. So you could, if you wanted to, you could see every single order and how exactly that worked. You can see, you know, how much I bought when it was opened and sold. You can see each date in here. You can see the positions. One thing I really like to look at, I should have shown this on some of those other ones, but is this equity bar. So this shows me over the last 5 years, how exactly has that performed with kind of a little chart here. And so I can see where there were some really good trades with this security, but this is actually a little bit choppy. So you can see at one point in time, so right here, it was up, the account was up to $16,000, but currently it's not up to that ratio here. So that's actually maybe something I wouldn't want to trade because it looks like it's been kind of up and down and I'm not so positive on its historical performance there. Oops, I keep closing that down when I'm not meaning to. Let's look at another example though. So we'll come down here. Let's look at another equity tab here. All right, this one's actually a little bit better than that last one. And the reason I say that is because over the last, I'd say about 3 years here, it looks like you know, my account size has gone up a little better, but there was actually a pretty big dip here and it was a little choppy recently, as well as it took a number of years before it really started to perform on this specific security. So I'm not sure if that's one that I'd really want to look at. Oops, I keep closing this. Let's look at another example. I don't know if I opened up the second one in here. Okay, again, with this one, it's been kind of choppy here. So yes, in the last 5 years, this has performed really well overall. It was the second listed on here, but it's been kind of choppy throughout the last 5 years. Like there's this period here where it really did not perform very well. So often what I'm looking for is just a consistent gradual increase on the equity over time chart. And that's going to tell me that a trading system has really maintained its matching to a certain security over the last several years. In the last year, though, honestly, this little period here, it has performed well. So it's something you could consider. But again, this is just data that's going to help you do better analysis of securities. Now, I want to show you guys a couple of other ways to use this too. I know I'm actually getting up on my time here. So I had ran that across the FTSE 100. Well, there's other ways to use the system tester too that I want to show you guys that can be really unique here. So if I actually scroll, I'm going to turn off the whole 100. So, and again, I have the MACD selected up here. Well, if I scroll down, there's an option where I can actually use my last exploration results. And if you remember from earlier, when I was using the Explorer searching for the MACD, I hadn't actually done this Bollinger Band example, but I had 10 results that came up from that exploration. And so those results that have a buy or a sell signal or overbought or oversold, et cetera, those 10 are listed right here. So maybe if I wanted to save a little bit of time on doing analysis, I could select just the 10 from that exploration and see how well these performed with the MACD. And yeah, so I'll actually go ahead and just show you guys that example really quick. So if I hit start, again, when I'm broadcasting, it can take a moment to get going, but there it goes. And I can view the results here. And now I can see it. And again, it's okay to see red because that's telling me, hey, this is maybe something I wouldn't want to trade. Well, these securities that did pull up, they did not perform all that great. Where did I just put that tab? I can open it back up. Well, there's one other example I still want to show you guys too, something that's, I think, a little more unique. Well, let's just take these same 10, for example. Maybe these are 10 that I've gotten down to from other criteria. let's go ahead and look at, well, we've seen what these look like trading against the MACD. Well, let's put it against a larger list. So what I'm going to do here in the search is put in PS, and that stands for Performance Systems. We actually have, this was our #1 selling add-on for like a decade, many years ago, the Performance Systems. And we now actually include them for free inside of our latest version of Metastock, where you have like something like 80 different performance systems that are all extremely and rigorously tested to have performed well historically. Anyways, you get all of these strategies just included with Metastock. Let me actually X out of that, turn that off here, and we're going to type in the PS and select all of these. And then just for comparison purposes, I'm going to also add the MACD Expert Advisor. So now we're going to be able to look at these 82 securities tested against these 82 strategies tested against these 10 different explorations. And I actually already did this report. Oops, or did I here? Report. I did this earlier today, just a little bit ago, right before we started, so that you guys don't have to wait, because that for system test would take probably about 2 minutes for this criteria. But just to save us that 2 minutes, because I only have about 8 left, let's look at this. So now this is different. So previously, right here, we had the different securities listed. Well, with this one, we're seeing the trading system is listed right here, because remember, I'm looking at 82 different trading systems with the same trade parameters I had selected earlier. So that $10,000 account size, willing to risk up to 50% in a trade just for that specific account and for demonstration purposes, and et cetera, across the last 5 years. So all of those settings are still the same. And now I can, again, kind of sort this by the best profit. What is this actually, whole bar here? Here we go. The average net profit, best profit was just that it could be an individual system, or sorry, security within that system. So the average net profit here, and then you'll see actually with this, again, I let you know that these performance systems have proven to historically have worked very successfully. So that's why we're actually seeing more green here than we did when just using the MACD. And it's letting me know of those 82 strategies, which ones performed the best on just those 10 selected securities. So again, you can choose the securities, you can choose the systems to do in this type of test. So with this, let's go ahead and look at this top one. So when I click into it, now you'll see there's actually one more page, because now what it's done is it's taken this performance system. This is the projection oscillator 1 results. And now I can look at this and I can sort this one by the net profit. And here are those 10 securities there that were from my last exploration. They're listed right here. And I can, again, dive deeper into these as well to see how they've performed and get these same statistics, that same equity bar. And here's actually a much better example. So we'll see in like the last 4 years here, this trading system has performed really well with this security. And we have a very gradual equity incline here. I don't love that it lost some right here, but in about the last 4 or so years, it has performed really well with this one. All right, let's go ahead and go back. There we go. And let's go back one more time into this list. So something else that might be worth looking at here is, let's see where the MACD ended up listing. So again, this is only on 10 securities from the FTSE 100. So you already saw that for the most part, though, the MACD does perform rather well on securities when you buy and sell matching its criteria. But of this list of performance systems, it's actually on these 10 specific securities, it's actually one of the least performing strategies here in comparison to all of these with my selected parameters. Now, again, your results may vary if you're using different records of data. So we have to keep in mind on today's presentation, I'm doing it, on June 19th, and on a daily time frame with this account size against these securities. So these results could vary depending on when you're running the scans, They wouldn't vary very much if you're doing it soon, but if you're looking at this 2 years in the future, that would be maybe why your results are a little different. But now what I can do is kind of go through and I could evaluate these different trading systems here. So maybe I actually want to use some of these top trading systems here instead, and then create watch lists with them. So there's a lot of different ways of using Metastock, but it's pretty straightforward on how to do that once you have just a general understanding of these different power tools that are included inside of here. I guess with that being said, let me, just because I don't want to go over on my time too much here, I think I've covered most things here, showing you guys, hey, you can search for buy and sell signals to help you find what you want to trade. But if you don't know what system to utilize in those searches, well, then maybe you use our system tester, and that can help you find the system that you want to use. And then you run explorations based on that. And then, of course, too, to get even further guidance on your trade within Metastock, when you're looking at your charts, if you can't always remember what a certain indicator does within the platform, you can utilize our expert advisor. And that'll help give you more clearly defined like buy and sell signals or commentary behind the strategies. Another example, like you'll see later today, is like you can have the expert advisor help you identify different candlestick patterns, and then the commentary will tell you what that pattern means and what to look out for and how to potentially trade it moving forward, or things of that nature. So with all of that kind of being said, I think I've given you guys just a general understanding of the base tools in Metastock. Well, some of them we didn't even touch in on the quote center or forecast or option scope, etc. But this gives you an idea of how any trader could really just pick up the software and be finding buy and sell signals and things to trade today, and also testing those systems to make sure that it's going to perform well for them. So let me jump back into my PowerPoint here now that we've looked at that, because you might be asking yourself, all right, well, how much does this cost? Well, you can get the Metastock daily charts, which everything that I did today, all of those tools and features, except for the intraday timeframes, which I didn't actually utilize, are available on Metastock DC. And you can get that starting for as low as $59 a month for the software and data. If you wanted our Metastock real-time software, that also comes with our Zenith data feed that has real-time news, fundamentals, etc. So far more information included inside of there. That starts at $265 a month, or actually less if you're just trading like Forex for the Metastock and Zenith combined. Another thing that I should mention that applies to our platform and basically all the presenters today too that have systems in Metastock, well, whenever you're signed up with us, we're going to give you free white glove setup and installation service. So we'll help you guys get started. We'll do a full one-on-one personalized demo in the software with you, teaching you how these power tools work on a one-on-one basis, answer all of your questions, and provide you tons of recorded training as well, all at no additional cost. As part of today's promotion, we are actually going to let you get like an extended trial of Metastock 2. So you can actually have 3 months access for the price of just 1 month. And you can sign up for that at metastock.com/Euro deal, or chat in with our sales team, metastock.com/sales chat, and they can get you started on a trial offer with that so you can kind of try it out. Or another thing to take advantage of, which is also available on that page, we are doing a extremely discounted package that's going to include systems from almost all of our speakers today. So next up, we actually have Daniel Sinnig, who's going to be showing his Power Bundle 360. It's one of my favorite trading strategies within Metastock. So really excited to have him on. So you can get his Power Bundle 360, the Steve Bigalow Candle Profit System 2.0, and Colin Abrams Paragon. These are all trading systems designed by actual professional traders, which I'm not one of, that are included in Metastock, plus all the Metastock tools. And normally, if you were to get all of this, the price point is over $5,000 to get it all. Well, as part of this promotion today, we're going to let you guys have access to all of those trading systems for just $1,995. And again, I should say there's already lots of systems built into Metastock, but these are all proven strategies from professionals that we've incorporated. And normally to get these, yeah, you're paying well over $5,000. So this is actually an amazing deal. So if you really want the best of the best from the platform, so you have the software and some of the best trading systems that we have available on it, I highly recommend this $19.95 deal. We're happy to answer your questions about it at metastock.com/sales chat. Or you can also pick up this discount where you get all these systems at extremely discounted rates when you buy them all together at metastock.com/euro deal. So definitely check that out, you guys. And now that I've done that, I should introduce our next speaker, Daniel Sinnig. So I actually have been working with him for a while now, but I actually got an opportunity to fly out and meet with him and do a presentation with him in Canada. So that was fantastic. I should say this is Dr. Daniel Sinnig. So he actually has an amazing background. I think you guys are really going to like him. And you're definitely going to want to stick around to see what he has to say today. Hey, Daniel, are you with us?
Hey, Bowie, how's it going? Hey, guys.
Hey,
How's everyone? I'm
it's
just going
going
to
pretty well.
change my webcam real quick. It's not the right one. Let's see if I can figure this one out so I can introduce myself properly. Just 1 second. There we go.
Yeah, of course, no problem.
I have two webcams on my thing. There we go. All right. Hey, guys.
Perfect. Yeah, we can see you
Happy
there.
to be here.
Great. Yeah, let me. Oh, and I should apologize for the mix-up this morning. We had our London time and Eastern times listed not matching up on the demos today. So my apologies to you and everyone else watching. But I think it all kind of worked out because I was able to jump on early, and we still have everyone listed at their London times because this is our Euro event, I should say. So again, sorry for that. But yeah, so glad to have you on, Daniel.
Awesome. Yeah, thanks, guys. I'm also super excited to be here, especially since I am, as you probably can tell, also from Europe. So it's nice to be at the Euro special event of Metastock. I think it's my first time, so really cool. And yeah, I hope you're going to enjoy what you're about to experience, because I think it's quite unique and will or has the potential to make you help you make better trading decisions. So let's see how this system that we came up with, which is based on AI, can help you to find potential trades and how you can take advantage of this. So with that being said, let me go ahead and share my screen and
perfect.
Get right into it. All right, there we go. Screen is shared. I'm going to switch off my webcam just so you guys have a full view. And Bobby, do you see my screen?
Yes, I see. Have you tried using an indicator but couldn't make sense of it?
Yes, perfect. So this is actually the question I'd like to ask to everyone out there. Has this ever happened to you? Have you ever tried using an indicator but didn't know how to interpret, or it confused you, or you couldn't really make sense of it? Did this happen to you? So if yes, please put a comment into the comment session. Yes. Yeah. Okay, I see the yes is coming in. Okay, so I think it has happened to all of us that we have, tried to use an indicator, but it confused us more than it brought us clarity to the market. And that's really not the purpose of an indicator. Would you agree? Because an indicator, if designed properly, it should be crystal clear and straightforward. It should tell you exactly what you should do. If that's not clear from the indicator, perhaps it's time to revisit or think about perhaps a different indicator. So what do I mean by this? Well, let me give you an example from a completely different domain, the world of poker. So poker used to be super popular 10 years back. It's still quite popular, but I bet most of you have seen a poker broadcast at least once in your life. And if you did, you probably would have noticed that this is a typical scenario where there are two players left in this hand, and four cards have been dealt. Before the fifth card is being dealt, each player has the chance to wager. And depending on how comfortable the player is to win this hand, or confident he is, he would wager more or less, or perhaps fold altogether. But what's also shown here, and this is only for the viewers on TV, are the estimated odds for each player to win this hand. Of course, this is only shown to the viewers on TV, but imagine for a second if you were a card cheat and you could stack the deck somehow, and you would know what the other player's hand is, then you could actually calculate these odds and play poker accordingly. And you know what these odds actually are? This is probably the most clear or crystal clear indicator out there for playing poker, because it will tell you exactly what to expect. For player 1, he has a chance of 80% to win this pot, and player 2 only 20%. And this is what I mean is a very clear indicator, because it will tell you exactly what to expect. And imagine if you knew these odds as a poker player, how would you play poker? Well, obviously you would only play this hand or wager if the odds are in your favor, and if they are not, you would probably fold. It doesn't guarantee that you will win this hand, but playing the long game, and over time you will have an edge and probably will this tournament. So this is for poker, but we were thinking a couple of years back, what if we introduced the very same concept to the world of trading? What if we could design an indicator which could display to you directly on the chart what the odds of winning your next trade are before you take this trade? Wouldn't that be awesome? And imagine this would exist. How would you trade? Well, I guess you would only take a trade if the odds are in your favor. And if the odds are against you, you would stay away. And oftentimes, not taking a trade is the best trade advice that you can get. So this has been our project for the last 2 years or so. And we have come up with a set of indicators which will display exactly this, the odds of winning your next trade. And this is what this presentation is all about. Now, if you had seen my last presentation at the Metastock event, I think it was the perhaps a US event, on May 10th this year, I called out a trade. I called out a long trade to go long on GXO Logistics. And this was on May 10th, and we entered this trade there. And look how this trade has played out since May 10th. So it didn't hit the profit target yet, but it's quite close for now. And I took this trade based on our indicator and the statistics that the indicator would tell me. And both were lining up, so I had a trade signal and I had statistics in my favor. And this was evidence enough for me, or confirmation enough for me to enter into this trade. And how this works, I will show you today. Now, the title of this presentation is Unlock the Power of AI and Discover High Potential Trades in Minutes. Now, before we get into the weeds of this, let me quickly introduce myself so you know what you're dealing with. So my name is Daniel Sinnig, and this is my business partner. I'm just kidding. So this is a picture I took at the Las Vegas Traders Expo, perhaps 2 years ago. And interestingly, the bounty hunter was right next to our booth. So also talking about trading. So I couldn't resist but taking a selfie with him. Anyways, so my name is Daniel Sinnig, and I am a managing partner of TradingIndicators.com. And TradingIndicators.com is an online store for all kinds of trading tools, indicators, trading strategies, scanners, and so forth. And what makes us a bit special, perhaps a bit different from most of the trading educators that you perhaps listen to during this event, is that we are actually software engineers by training. My background is in software engineering. For many years, I used to be a professor in software engineering at the universities here in Montreal, and teaching students how to develop robust software. But I was also always a trader by passion. And throughout all these years, I traded on the side. But of course, as I started out, I made all the mistakes that probably most of you have done as well. I overtraded. I took too much risk. I traded when conditions were not right. And after donating quite a fair amount to the markets, I came to the hard realization, oh man, trading is difficult and I need help. And for me, as a software engineer, needing help meant I need better trading tools which will help me make better trading decisions. So I started coding. And most of the tools that we now have in our online store, TradingIndicators.com, they have first been coded for our own needs to help us make better trading decisions. And only then, when we realize, wow, they help us, perhaps they will help others as well. And this is really how the story behind Trading Indicators started. And over the years, we have built over 500 trading indicators and automated strategies. We have clients all over the world, many clients in the UK and in Europe, in Canada, and in the US. We have retail clients, we have institutions as clients, we have trading educators as clients. So we all have one common goal to create tools which will help you make better trading decisions. All right. Now, before I get into these tools, a quick reminder. When you trade, keep in mind that trading is risky. And if you trade, only trade with risk capital, which should you lose it, it will not affect your lifestyle. When it comes to hypothetical performance or backtest results, keep in mind that these are not necessarily indicative of future performance. Okay, it's not that the loggers are also happy. Let's get into it. Now, if you remember, this was our objective. Is it possible to create an indicator which will calculate the odds of your next trade before entering into this trade? So we asked ourselves this question 2 years back. And so can this be done? Is this even possible? The easy answer to this is yes, absolutely. It is totally possible. We are able to display directly on the price chart, when it comes to Metastock and the expert commentary, the estimated odds of your next trade. And the way this works is that we look at historical performance of our trade signals and compare them with the exits, and then we calculate the win rate based on this. But you may say now, Daniel, what's going on here? Didn't you just read the disclaimer to us and tell us, historical performance is not necessarily indicative of future performance? Are you contradicting yourself here? What's going on? Good question. And we have asked ourselves the exact same question, which is, what are these statistics actually telling us? They're based on historical data. Is there any insight in these numbers going into the future, going into our next trade? And we're investigating exactly this question. What we have done to get to the bottom of this is we performed a very comprehensive case study, and where we implemented a swing trading system to be run on the hourly time frame. And we ran the swing trading system from January 2022 all the way into fall 2022. And it was a true swing trading system. So each trade lasted approximately 1 week, and we were trading long and short, and we performed this analysis over 84 big US stocks like Tesla, Apple, IBM, Microsoft, and so forth. And over the course of this test, the system generated 6,827 entry signals. All right, so we had all these entries, and then we looked at the performance. And the first performance that we looked at was, what if we had traded every single signal? So 6,827 entry signals resulting in 6,827 trades. And this was the performance that we have received. Oof, not very pretty. This doesn't look good at all. It's a losing system, and nobody in his right mind would trade a system like this. It's clearly not performing well. All right. So then we did something. We applied a filter to our system, where we only take the trade where at the time of the signal, the odds are in our favor. The calculated odds are in our favor. So for example, if a signal comes up in April 2022, we'd only take that signal if the odds as of April 2022 were in our favor. If they were, the trade was taken. If not, the trade was rejected. And this was the resulting performance. As you can see here, it's a difference between night and day. We suddenly now had a winning system. And all we did was looking at the odds at the time of the signal. And we had one simple rule. If the odds were in our favor, we took the trade. If not, we didn't take the trade. As I mentioned before, sometimes not taking a trade is the best trade advice that you can get. So we only traded 2,599 trades out of 6,800 signals, but the performance significantly increased. And this gave us so much motivation and so much evidence that we developed a whole set of indicators based on this principle, based on the principle that the indicator will tell you an estimation of the win rate for your next trade before you enter into this trade. All right, now, what are these three indicators? Well, we call them the Power Bundle 360. And there's a reason why 360, because we have one indicator for each trading style. So we have one for trend trading, one for counter trend or reversal trading, and one for everything in between. We call this opportunistic trading. I have a full circle of different trading styles. Now, our first indicator is called 1, 2, 3 strike, which is our trend trading indicator. And it is designed to spot strong trends. A strong trend is a trend where we have directionality. So prices moving in one direction, either up or down for quite some time, with an increase in volume and an increase in volatility. And if all three things come together, an entry signal is generated. The second indicator is divergence cloud. So if you're familiar with the concept of divergence, it basically stands for a disagreement. A disagreement between price and an indicator. If they don't line up, and something seems to be off. Something is not lining up, and this can be a telltale sign that a change in regime may be happening. Perhaps an uptrend is coming to an end and reverses to the downside. We call this a bearish divergence, or vice versa. A downtrend is coming to an end and may reverse to the upside, which is a bullish divergence. All right, this is our second indicator. And the last one is called volatility crusher, an indicator designed to detect strong breakouts. And in our book, a strong breakout is a breakout where price will continue in the direction of the breakout for quite some time. And you as a trader, you can take advantage of this by simply entering in the direction of the breakout, in the expectation that price will continue in the same direction for quite some time. Okay, so these are our three indicators. Now, I think it's time to look at some charts and check them out, see how they actually work. So let me switch over to Metastock. All right, so what do we have here? So this is a chart of MCore on the daily time frame, and I have applied our first indicator to this chart, which is called a 1, 2, 3 strike. And if I zoom in a little bit, I'm going to explain to you how this indicator actually works. All right, so the first thing you can probably see is that some candles are colored greenish and others are colored reddish. This is an indication of trend direction, which, when the indicator senses we are in an uptrend, it will color the candles green. Otherwise, they will be colored reddish. Okay, so we have trend direction, but we also have clear entry signals. So these are these bigger arrows here. For example, this one here, this big green arrow to the upside is a long entry, and perhaps this arrow here is a short entry. Displayed directly on the chart. Now, as you know, entering into a trade is only one half of the story. Once you're in a trade, you eventually need to get out of it. You have to manage it. This is why all our indicators, they also come with exit suggestions, which are these little arrows in the opposite direction of the entry arrow. So here we had a long entry, a partial exit here, another partial exit here, and the final partial exit here. Same for our short entries. Short entry here, one partial exit, another partial exit, and so forth. The number of partial exits that you want to take can be configured in the settings of the indicator. All right, so far so good. But you may ask now, where are these odds? Where are these statistics that you mentioned before that will help us to decide whether we should follow a signal or not? Good question. So in Metastock, these odds are available via the Expert Advisor option. Then you go down to commentary, which will open up a sub panel either to the left or below your chart. This can be configured. And okay, so now the sub panel opened up, and look here, long efficiency and short efficiency. These are the historical win rates for all the signals within our look back period, which is configurable, and by default it's 3 years for a daily chart. So we can see here that historically speaking, our long trades have worked out at 80%, and our short trades have worked out at 51%. So what does this tell me? How can I use this information as a trader? Well, the first thing that's fairly clear is that long signals have been working out better, historically speaking, over the course of the entire look back period, better than short signals. And you could take this as an additional insight that perhaps you want to ignore the short signals when they come up and only focus on the long ones, because clearly long signals have been performing better. That's one insight that you can take. But there's more. Now, like every other indicator, also our indicators, they come with parameters, which you can use to fine-tune the indicator to the chart. So Metastock, these parameters are available via the F tab here. You go to Settings, click Edit, and here you have your parameters. It's not so important at this point what they actually do, but for now they're just parameters. Okay, so let's, for example, change volume period from 52 perhaps to 42. Let's try that. I'm going to click OK, and I'm going to quickly reload the indicator. Let's observe what happens on the chart and with our statistics. So I'm reloading them. And after a quick seconds, when the indicator is reloaded, we can now see that, our stats have changed. Now the long efficiency is 77%, and our short efficiency went up to 57%. So long efficiency is a bit less, but still pretty good, but our short efficiency went up. This is direct feedback of whether a parameter change was beneficial or not. Without these statistics, you wouldn't know this. You would second guess based on what you see on the chart, but would be very vague. Now you have hard facts as to whether a parameter change was actually in your favor or perhaps against you. So let's do it one more time, real quick. Back to the settings, edit. Let's change this perhaps to maybe something lower, 32. Let's see what happens. Click OK, close it, and refresh. And let's observe. It's reloading, and it went worse. Now long efficiency is 69% and short efficiency is 48%. And you may say now, man, this looks tedious. This is something I probably would only do for 5 minutes and would give up because it's so tedious to always change these settings manually. And guess what? You are absolutely right. It is super tedious. And I always say that if something is not straightforward, takes too much work to do, you simply will not do it. It will not be sustainable. This is why in our latest generation of our indicators, we have came up with a brand new feature, which is called auto optimization. And as the name may tell you, a feature which will automatically find the best settings for you. So you don't have to fiddle around with these parameters. So let me quickly show you how this works. So for this, I'm going to apply now the latest generation of our indicator, to the chart. So Expert Advisor, attach. That's how we do it. I'm going to use the 1-2-3 strike AO version. AO stands for auto optimization. All right. So I click OK. And after a quick period, it takes perhaps 1 second longer to load. You will now see that, first of all, the visuals are exactly the same on the chart. But if you scroll down now to our statistics, you can see they have significantly improved. We're now at 88.89% for the long side and 77.14% for the short side. And this was because we now are using optimal parameters for this particular chart, for MCore on the daily time frame. And every time I change symbols, the indicator will recalculate and find the optimal parameters for you. And every time I change the time frame, perhaps, also the indicator will recalculate and use always the optimal parameters. And this has been a game-changing enhancement because now you're not using a one-size-fits-all approach anymore. You're using an approach which always uses the dialed-in parameters on a per symbol and per time frame basis. All right, so let's look at some other examples. So this was MCore. Let's have a look at perhaps Microsoft. Now, Microsoft has been trending up very nicely as of late as many tech stocks. So let's see how this looks at Microsoft. So here, if you zoom in here, we can see that we had a beautiful long entry for Microsoft in beginning of February. We're still in that trade. Actually, that's not true. We exited this trade a couple of days ago. So here with our long entry, one partial exit here, another one here, a third partial exit here, and then our final exit happened here. Nonetheless, a very beautiful run up to the, which made approximately, let's say 40, 50, 60 points. And if you look down here at our success rates, we had a long efficiency of 87% and a short efficiency of 72% with Microsoft. Yeah. All right. So these were two examples for equities on the daily time frame. But our approach is not restricted to just the daily time frame or just trading stocks. You can use it on anything which is price data. So let's change it up. Let's have a look at perhaps a Forex pair. Let's do CHF CAD, for example. On the, if this ever loads, on the, it's a bit sluggish because I'm sharing my screen, on the 15-minute time frame. Now, if I zoom out a little bit, you can see that it's exactly the same principle with our short entries, our long entries, but now applied to an FX pair on the 15-minute time frame. And there's no difference. And again, the indicator will use the auto optimization part to find the best parameters for you. And look how well these signals have been working out across the board. It is not always the case. You may find symbols where the statistics are not in your favor, where they're pretty bad. But that doesn't matter, because then you would just stay away. There's so many stocks, so many symbols you can trade. You can only focus on the ones which give you the best parameters. And this is the beauty about this, because it will help you to make an informed trading decision. It will give you insights and hard facts as to whether you should follow a signal or perhaps stay away. All right, one more example. Let's go Bitcoin. All right, Bitcoin USD. Let's see how it looks. All right, it's loaded. Okay, so here we have, actually this is not the, I jumped ahead, this is a different indicator. Let me just put the right indicator on real quick. Give me 1 second. I jumped ahead a little bit. So this is Bitcoin on the 15-minute time frame. Yeah, and guess what? Again, it will work exactly the same. Short entries, long entries, and the indicator will use optimal parameters moving forward. Okay, so this was our first indicator, but there are two more. So the second one is called divergence cloud. Divergence cloud is an indicator based on the concept of divergence. So let's have a look at another chart. Constellation energy, or back to equities now on the daily time frame. And our divergence cloud indicator is now applied. What you can see here is that, well, first of all, it looks somewhat similar to what you've seen with 1, 2, 3 strike. Some bars are colored, greenish and reddish. We have entry signals and exits. Okay, but it's a bit different. Here, the bar coloring doesn't show us trend. Instead, it shows us whether there is a divergence or not. A green coloring stands for a bullish divergence, and the red coloring stands for a bearish divergence. And if candles are just simply black, that means there is no divergence at that moment. So a long entry signal will only happen when we have bullish divergence, and a short entry will only happen when there's bearish divergence. All right, so with this in mind, let's see what this indicator does. So here, for example, we have a short entry, and along the way we have 1, 2 partial exits, and then we get out of the trade when a signal in the opposite direction came along, which is this one here, and we're still in this trade. No partial exits have been triggered yet. Let's look at another example. If I zoom in a little bit, here we had a long entry, 1 partial exit, a second partial exit, a third one, and the final LFE, long final exit, was triggered at this moment. And the indicator triggers these exits based on when it senses that the price move is either weakening or has come to an end. But it's all automatic. That's the beauty about this. The indicator will tell you, based on how price action is unfolding, whether it's time to perhaps take some risk off the table, or get out of the trade altogether. All right, and of course, also with this indicator, we have our success statistics. And sometimes with our optimization, we get up to 100% success rate across the board. So Constellation Energy, in our look back period, which started 1,000 bars ago, we only had winners. Of course, that's an exception. It doesn't always have to be like this. But the beauty about this is that you can now focus on the symbols where our indicators work the best, at least historically speaking. Yeah? And why wouldn't you? Why wouldn't you use the symbols where the indicators work the best? It will give you the best chances moving forward. Okay, let's change it up one more time. A different symbol, OGN. Okay, again, divergence cloud is applied to this chart. Let's have a look. Make this a bit bigger. Okay, so here, same principle again. We have our short entries, we have our long entries, we have our partial exits. Yeah? And as you scroll down, we have our statistics. So 88% to the long side, 100% to the short side in our look back period. And by the way, all this can be configured. You can configure how many bars you want the indicator to look back. 1,000 bars, 2,000 bars, 10,000 bars, it's up to you. Yeah? It's always a trade-off a little bit, whether you want to consider most of the recent price action only, or perhaps you want to go back for years and years. It's a double-edged sword a little bit, because obviously the most recent price action is the most important one. And whether you should go back 10 years for something you want to trade now is a different question. But you can always find a good compromise. My favorite setting is about 1,000 bars or perhaps 1,500 bars. It will give you just enough trades so that the statistics are meaningful. Okay, one more example. This was our second indicator. Now, the last one is volatility crusher. So this indicator is a bit different. So let's have a look as an example. So let me open up Bio. There we go. BioRad. The indicator is loading. And guys, by the way, I see the questions are coming in, and there will be some time towards the end to answer all your questions. So don't worry if I cannot answer these questions right away. Okay, so what do we have here? So it looks a bit different because this indicator is our breakout indicator. It's designed to trade and spot breakouts. And the idea here is that, when a breakout occurs, we bet on the fact that price will move in the direction of the breakout for a little bit more, but perhaps not too long. This is why our two targets, target 1 and target 2, are typically quite nearby. Now you want to go for a quick trade. Don't want to be in this trade forever. So here, for example, we had a short entry. We get out here, not too far away. And our second target, our last target, was hit at this point. Now just a little move, because the idea is it's a breakout, but it may not last forever. Price will just, follow through a little bit more. But of course, still you can take advantage of this. Here, we recently had a short entry. We're still on this trade, it's still open. Here we had a short trade which didn't work out. Short entry, and price bounced back, we got stopped out. Here, short entry, both targets were hit fairly nearby. Let me find another entry real quick. Here, a long entry. Now, both targets were hit fairly nearby. Here, another one. A long entry, we hit our first target, and then we got stopped out. Why stopped out up here? Because this indicator comes with a trailing stop, which is tightened as price action moves in our favor. This was where we got stopped out here. Still, in a profitable area. And of course, also this indicator comes with our statistics. And 92% to the upside, 88% to the short side. One more example, Pfizer. Let's find Pfizer. Where is it? Here. All right. Again, our breakout indicator is applied to the chart. Let's have a look. Okay, it's loaded. Same principle. Long entries, 2 nearby targets. Short entry, first target hit, then the trading stop was triggered. Probably still in profitable territory. Short entry, both targets were hit. Short entry, 1 target was hit, the first target, and then we get stopped out. But yet we locked in profit as we get stopped out. That's the idea behind this indicator. And it goes for just a little bit, in and out very quickly. So here, I don't know, 2, 3, 4, 5 days, that's it. In and out fairly fast. Same thing here. In and out, perhaps within 5 days. This trade was a bit longer, perhaps 10 days or 12 days. But that's the idea behind this indicator. Now you get in and out fairly quickly. And of course, we also have our success statistics with this indicator along with auto optimization. Okay, so let me go back to my slides. What have we seen so far? Well, we have seen the 3 Power Bundle 360 indicators, which all give you clear entry signals, but also exit signals. Because once you're in a trade, you need to get out of it. Now you have to manage your trade. Our indicators are not restricted to any time frame or any symbol. They will work on all time frames, all asset classes, and with all trading styles. So whether you're a day trader or a swing trader or perhaps an investor, it doesn't matter. You can take advantage of these indicators. All 3 indicators come with real-time statistics showing you directly in the expert commentary what has been the win rate, historically speaking, of our long and short entry signals, allowing you to make a truly informed trading decision moving forward. And they all come with auto optimization, finding the best parameters for you, so you don't have to fiddle around with these parameters, because that's tedious. That's a lot of annoying work. And you as a trader, you want to focus on what's really important, whether you should pull the trigger or not, and not whether this parameter is right or not. That's annoying. You should focus on the really important decisions as a trader. All right, now, but there's one more thing. There's one last missing piece that we have put together. And this piece is called super signals through Confluence. What? Confluence? What's this? Crazy long, complicated word? Well, Confluence is more or less a fancy word for when the stars align, meaning multiple indicators are forecasting the same price move. They're lining up. They all, for some reason, forecast the same thing. This doesn't happen very often, but when it does, you may be in for a big treat. So what do I mean by this, forecasting the same price move? Let's look at this example. Completely different example. So what do we have here? Well, a price chart, Euro USD 1 hour. We have a trend line here, which is descending. We have this blue line is an SMA, it's an SMA 200. No, this red line is an SMA 200. We have a FIB level here, retracement to a FIB zone, and we have an overbought stochastic indicator. So let's look at these things. A descending trend line is what? Well, it's an indication of a downtrend. Have you ever heard about what people say? The trend is your friend? Well, if trend is going down, chances are price will continue to move down because the trend is your friend. We are nearing the SMA 200. This red line here. This is often seen as a resistance level where price may bounce off from and then continue its downwards move. We are also nearing our 61.8 FIB retracement zone. Again, that's often seen as a resistance area where price may bounce off from. And we're overbought. So all these things are telltale signs for a bearish price move. Falling trend line. We're near resistance. We're overbought. So multiple indicators forecasting the same price move, which is that price will move further down. And this is the concept behind Confluence. Multiple things are lining up and forecast the same thing. Now, in our case, we are basing our super signals on confluence of our 3 power bundle indicators: 1, 2, 3 strike, divergence, cloud, and volatility crusher. And if they line up and forecast the same move, wow, you might be in for a super signal. We have different degrees of super signals: bronze, silver, gold, and platinum. And depending on how much the alignment is there, how much alignment is there. So for example, bronze, which is the most frequent super signal, occurs when 2 indicators are forecast. 2 out of the 3 indicators are forecasting the same move, while the 3rd indicator is not contradicting that move, at least. That's bronze. Silver goes one step further. 2 indicators are forecasting the same move. Actually, let me rephrase this. 2 indicators are in disagreement. It's a bit subtle here. 2 indicators are in disagreement, showing that the market is indecisive. It doesn't really know where to go yet. But then a 3rd indicator comes in, which can be volatility crusher, which act as a tiebreaker. Meaning that at that point, there's some clarity. Now, the market was undecided for a while, but then volatility crusher gave us a signal, either long or short, and basically then forecasting the decision of the market. Gold signals are very rare. They're very hard to spot. And they occur when 2 out of our 3 indicators have the entry signal on the same price bar in the same direction. Not just that they are currently in the same trade, the entry needs to happen at the very same price bar. That's quite rare. But again, if it happens, you might be in for a good treat. And then one more thing, platinum signals. All 3 indicators have an entry signal in the same direction on the same bar. This almost never happens. It's very, very rare. But if it happens, this might forecast the strongest price move. Okay, now, real quick, how does this look on the chart? So back to Metastock. Let me open up a different chart where our super signals are applied to. AMP. All right, applying it to the chart. It's loaded. And this is how our super signal indicator looks like. Yeah. Here we had a gold signal followed by a bronze signal. Look how price followed through. Here we had a silver signal, and then a bronze signal. And this actually was happening on Friday. So when the market reopens tomorrow in New York, this could be an interesting trade idea. Let me zoom out a little bit. Here, bronze signal. Here, a silver signal. Here, short, which didn't work out too well, but still some follow through. Here, bronze, and so forth. You get the idea. And this is the concept for our super signals indicator. We only give you either gold, bronze, silver, or platinum if multiple of our underlying indicators are forecasting the same move. Let's change it up one more time. HSIC. All right. Here, gold signal, silver signal, silver, bronze signal. You see how nicely price action follows through? We did have, one more time, a gold signal on our last bar. This is a daily chart. This happened on Friday last week. Again, when the market reopens, perhaps an interesting opportunity. What I do is when these opportunities come up, I look for a few more things just to double check what's going on with this chart. So one thing I look at is, for example, do we trade towards a resistance area? And here, you know, it is close to one. You see here, price bounced off from this level a couple of times. Here, actually here, bounced off here, and then here we had this big resistance area. We're very near to that. So perhaps, you know, this would be my final criteria that, we're a bit too close to this resistance area. Perhaps I would wait until price follows through above this area, and then I would engage. So this might be a bit too close to this area. All right. Okay, so this is the principle behind our super signals. Now, but there's more. So let me go back one more time to the chart, to the slides. Quick reminder, our indicators are built and optimized for Metastock. So you get our clear entry and exit signals. You get the real-time stats in the expert commentary. You get auto optimization. We have pre-built system tests with our package, but we also have, and that perhaps is the most important feature, we have scanning. Because you may have wondered, man, how did you find all these cool gold signals or any signal on the last bar? Because these are the most recent ones. These are the ones I want to find. Well, guess what? I didn't go through symbol and symbol manually. That would be crazy. No, I used Metastock's super powerful scanner. With our package, we have pre-built a whole, I think 10 or more scan queries for you, which you can utilize to run your own scans in Metastock. And this is a scan I ran this weekend. It was a scan for 1 to 3 strike, our trend indicator for entry signals. And I run this scan over, I think, the S&P 500 and some New York Stock Exchange stocks, which are on my preferred list. And what I can see here, for example, are all the trades which currently have a long entry signal. You can see it here. So all these ones have a long entry signal. So quite a few. I think we had in the end 30 or maybe 35 stocks which currently had an entry signal. That's quite a lot, 30 stocks. You know, me being in quotes a bit lazy, I don't want to go through all these 30 stocks to find the ones that I might be most interested in. No. But what's really cool about this is that in these scan results, you can see the success statistics displayed at the same time. And guess what this allows you to do? You can then sort your entry signals by the statistics, allowing you to focus only on the ones which have the highest stats, historically speaking. Do you know how much time you can save with this? And this is exactly what I have done. I ran my scan, had breakfast, and I came back after maybe 20 minutes. The scan was completed. I sorted my scan results by success statistics and only focused on the symbols of the highest statistics. And then I opened those ones up and did some manual analysis. This is how I identify my trades every single morning. This is for swing trading setups. That's super easy. Now, if you compare the scanning technique, I would classify this as generation 3 scanning. So generation 1 scanning basically is just plain old scanning. You run your scan, you get your signals, but then you don't know how to interpret these signals. You don't know how successful these were. This is what typically people do. Generation 2 is what you've seen on the screenshot before. You do your scan, you see in your scan results, directly there, your success rates, allowing you to rank and sort your signals. So you can focus only on the most promising one. But we even pushed it one step further. With generation 3 scanning, we are using optimal parameters, indicator parameters, on a per symbol basis. Typically, when you run a scan, the same parameters are used for every single symbol you scan through. Whether it's IBM, Tesla, Microsoft, or whatever, you'd use the same indicator parameters for your scan. That's a bit one size fits all, huh? What we have done is that we are optimizing parameters on a per symbol basis within Metastock. Meaning that for IBM, let's say, we use an optimal set of parameters. When Microsoft is there, we use a different set of parameters. For Tesla, we use a different set of parameters and so forth. So on a per symbol basis, the indicator and the scanner will always use the best parameters. Yeah, guaranteeing the highest accuracy when a signal comes up. This is what we call generation 3 scanning. All right, so one more thing. My trade for tomorrow. This is not trade advice, this is what I will do. You guys can do whatever you want. This is the trade I will be looking at tomorrow. Lennox International, again, it's a swing trade. And I identified this trade because of two things. First thing is, it currently has a gold signal. I scanned for this. This was an easy scan I ran in Metastock. Yeah, I could run a scan for gold signals. This one came up. I liked it. I liked it because we were in an uptrend for quite some time. So we are with the trend and there's no nearby resistance zone. There's a lot of room left. This is why I put my target all the way up here. And if you would zoom out, there's actually a resistance zone around this area, if I would zoom out a bit more. But I put my target all the way here. My stop fairly nearby at this recent swing low. So I like that trade from that point of view, but I also like the statistics. My stats told me that gold signals have been working out with 72%. Not as perfect as I wanted to have it. Sometimes you get gold signals at 90%, but still good enough for me, in addition with all the other criteria I've just told you. There's a lot of room left, and we are on an uptrend. So these things put together made me, or convinced myself, that I will consider this trade when the market reopens tomorrow. I will not go blindly into it. I'm not going to put my order right now, but I'm going to see where the market will open tomorrow. then perhaps put a buy stop entry at around 313. So I want price to move, continue moving upwards. This is this line here. But I will not place this order today. So I don't want market to jump down or up or something. I want to see what's happening when the market opens, and then I'll place my order. So this is my trade for tomorrow, and it took me perhaps, I'd say, 25 minutes to find this trade, including just starting my Metastock scanner for super signals, and I'm focusing on the couple of ones that were identified. I looked through 3 or 4 charts, and this is the winner. This is the one that I like the best. This will be my trade for tomorrow. Now, I've talked a lot about Metastock, and our indicators, they run great on Metastock. That's awesome, and it's a really powerful platform, especially since we have the Metastock scanner available. But we also do offer our indicators for other platforms such as NinjaTrader, TradingView, ModifWave, and so forth. So with this being said, if you're asking yourself, are these indicators for me? Well, if you're a day trader or a scalper or a swing trader or an investor or something in between, then the answer might be yes, these indicators can be for you because they're not restricted to any time frame or chart type. Yeah, they work on any of these things on all time frames, intraday, tick charts, or daily charts, weekly charts, no problem. Whether you trade futures or perhaps equities or FX or cryptos or something else, yes, you can use these indicators as well, because they work on all asset classes and symbols. There are no restrictions there either. And if you're a bit like me, you believe that tools, sophisticated tools, can make your life easier, your trading life easier. And if these tools exist, you should take advantage of them. Then yes, these indicators will be for you, because they will do most of the heavy lifting of trading for you. They will show you the odds of your next trade, and they will automatically find the best parameters for you. And you can scan for these setups. What more do you want? So if you believe in this, that indicators are there to do most of the heavy lifting for you, while giving you crystal clear insights on what you may want to do next, and yes, our Power Bundle can help you. Now, as a big thank you for enduring me this morning or this afternoon for you, with my thick German accent. So thanks for listening. I have a special offer for you. So thanks for staying on. Typically, we sell the Power Bundle indicators, which includes 1 to 3 strike, divergence cloud, volatility crusher, the 3 basic indicators with auto optimization and real-time stats. We sell these for $1,495. It's for life, but it's $1,495. But we have something special for you. As a big thank you for listening to us. So if you want to take advantage of this special, we're gonna add in all the stuff I've just mentioned: 1 to 3 strike, divergence, cloud, volatility crusher, and auto optimization and real-time stats. But we're gonna add to this a couple of other things. First of all, we're gonna include our 5-hour masterclass on demand, which will teach you everything you need to know about these indicators, about each of the parameters, how to use it with Metastock, how to run scans, all these things will be detailed there. But we're also gonna throw in 2 more things. The first thing is our super signals, where we look for confluence between our 3 underlying indicators. We're gonna put this in for free. So that's one thing you get. And the second bonus offer is called our Trend Radar indicator. I haven't even talked about this one yet. I'll give you an example in a second. So you're gonna throw this one as well. And there's one more thing. We're gonna cut the price from $1,497 all the way down to only $997. This is a limited time offer, and you can save $498 by taking advantage of this offer. And you will get all these bonus indicators. And if you want to take advantage of this, simply go to metastock.com/pb360. Make the purchase, and then you can send me a quick email, or somebody will send me an email, and I will manually send you these bonus offers by email afterwards. On this page, you will only see our Power Bundle special. As a big thank you, we're going to throw in all these additional ones. You can also scan this QR code. It will bring you to the exact same page. And on that page, you will see our Power Bundle 360 at this price, But again, I will manually send you all these additional goodies free of charge afterwards, which are our super signals indicator for Metastock and our trend radar indicator. I haven't even talked about this one yet. And it's an indicator which I believe everybody should have in his arsenal. We typically sell it for $197 and allows you to see what is my short-term trend, medium-term trend, and long-term trend doing directly underneath your price chart. So your price chart stays very clean, and you can see all these different trends below here in this heat wave-like or heat map-like visualization. So green color stands for an uptrend, and the red color stands for a downtrend. And for example, what we can see here is that that overall, price has been moving down. And we can see this just by looking at this color down here. This is our long-term trend, this red color at the bottom. You see it here. So long-term, we are in a downtrend. But every once in a while, you see this little greenish areas, which show that even though we are long-term bearish, there's some short-term bullish trends within here, in that trend. And these are entry opportunities for you. Because as a trend trader, you don't want to blindly enter in the direction of the trend. You want to wait for a pullback. We call these healthy pullbacks. And for example, here we are on a long-term short trend. We're waiting for a pullback, and we enter when this pullback happens. And this gives you a much better entry price, first of all. And secondly, it allows you to put less risk onto the table because your stop loss will be much closer by. And these kind of pullbacks or healthy pullbacks, you can spot with our trend radar indicator. Now, there's a whole ebook with that, which teaches you all the different patterns that you can spot with this indicator. And as I said, whether you have our power bundle indicators or not, this is one indicator which I use very frequently, just because it helps me very easily to see what's going on with the market. I'm also going to throw in a lot of training material. For example, our 5-hour masterclass on demand, which will teach you, as I mentioned before, every single thing you need to know about our power bundle indicators and these super signals indicators. You will be part of our community. We have every second week we have we call a tech talk, where we showcase our indicators, where we teach our indicators, where we help you answer your questions and so forth. And this happens every second Thursdays at 6 p.m. And of course, as a member of our also use of our indicators, you will be invited to these tech talks every single time. All right, so guys, if you want to take advantage of this, here's the link again with the QR code. And I think now it's time to answer perhaps a question or two. So Bobby, do you have some questions for me, for example? Real quick, let me see.
Hey, Daniel. Yeah, I have
Yes.
a few questions that I saw that came in.
Great.
Yeah, so let's see here. We have, so someone's asked, to trade this, do they normally enter at the long signal and then sell at the sell signal each time?
No, actually, the way to trade is you would enter at an entry signal, but we would get out when there is an exit signal comes up. So this is typically how it works. So we have one entry and then you have multiple exits along the way. But you would also close your long position when an entry signal in the opposite direction comes along. But yeah, this is stuff we will teach you in our masterclass.
Okay, perfect. Thanks for clarifying that. So someone's asked, with your divergent indicator, does it only look at trading history and not other parameters like interest rate and company outlook, etc.?
Yeah, it's based on technical analysis only.
Okay, perfect. Someone wants to know if they can configure the number of steps for partial exits.
Yes.
Okay.
Actually, basically every single thing can be configured with our indicators. So there are a lot of options. So they work well by default, with the default parameters, but you can go crazy and play with a lot of options, like how many partial exits you want to have, what kind of optimization you want to use. You have different optimization modes, whether you want to optimize perhaps only for long signals or perhaps only for short signals if you have some sort of bias and stuff like this. So lots of things can be configured.
Perfect. And then I guess on the same topic from the same person, Roger, he's curious if you can also set the indicators for partial entries.
Oh, for scaling in? Right now, no. Right now, you would enter in one shot. But that's a good idea, perhaps in the future.
Okay, great. Someone wants to know the advantage of using your indicators versus like free candlestick pattern analysis.
Oh, that's a loaded question. I'm not so familiar with the free candlestick analysis, so that's perhaps a question
Yeah, I think
we can take offline. Yeah.
Basic candles. Okay.
By the way, guys, real quick, I see some questions. How do I contact Daniel directly? It's actually quite easy. Simply go to tradingindicators.com, which is our homepage, and there's a contact form like in the main menu. Simply go there and write a message. It comes directly to my inbox, and this is how you get hold of me. And I'm sorry if I couldn't go through all the questions. If there's some remaining questions left, feel free to simply send me an email. I'll be happy to go through all these questions with you.
Fantastic. Yeah, thanks so much for that, Daniel. Yeah, so I guess with that, yeah, if he wasn't able to get to your questions today, definitely reach out to him. Check him out at tradingindicators.com. Also, the Power Bundle 360, it's available at metastock.com/PB360, or you can jump into our chat room too, metastock.com/sales chat, and we can continue to answer your questions there as well.
Great. Well, thanks, guys. Thanks for listening. I hope you get something out of it. And I'll be so happy to welcome you as part of our community. Thanks for listening.
Okay,
enjoy
thanks
the rest of the conference.
Daniel. Yep, have a good rest of your night.
You too. Thanks, guys. Bye-bye.
All right, guys, I'm going to go ahead and make myself the presenter here. All right, let's see. Yeah, all right, so that was Daniel. He did a fantastic job as always. I'm so impressed by how he was able to utilize our platform, with his background in technology and working with computers and programming and all of that. He's really been able to utilize the tools within Metastock to just create an outstanding system with that Power Bundle 360, especially with all the optimizations that are included in there. During my presentation this morning, I kind of touched on that briefly, letting you guys know that you can go in and optimize some things, but really I haven't seen any other strategy within Metastock that has better optimization. Like by far, the Power Bundle 360 has the best optimization parameters, and with the auto optimization that he created too with your explorations, it's really just fantastic. It allows you to find some of the best historically proven indicators for buying and selling based off of utilizing the best of the best within Metastock. He touched on the promotions and everything. I have a quick slide I'll go through, but normally we offer this add-on for $1,495, and even at that rate, it's fantastic. But as part of the webinar special, you can get it for just $997. We do give you a 30-day money-back guarantee for if some reason you aren't entirely happy with it. No questions asked. You can return it. That's how confident we are in this strategy. You also, as a bonus, will get his additional super signals and the trend radar as well with that. So you can call us. If you're international, 801-506-0900, or just jump into our chat room, metastock.com/sales chat, and they can help answer your additional questions on that. Something else I just really like to touch on is this is so extremely valuable. With every single subscription to Metastock, or anyone that, whether you're on our cheapest package or the highest package, it doesn't matter. We're going to give you unlimited free support and free white glove setup and installation service. We can schedule to have a Metastock professional sit down and do a one-on-one session with you where they do a full product kind of demonstration as long as you have an active subscription with us. And we'll teach you how everything works. We'll help set everything up to your standards. We'll help show you how you can, include just your markets if that's something you want. And we can help, with all these strategies that you've seen today as well. We can kind of help show you how to configure those in Metastock. So that's extremely valuable. And then, if you want even more bang for your buck, the best offer that we're going to have today is this bundled offer, the Metastock Euro Summit Traders Pack. This is going to include Daniel Sinnig's Power Bundle 360 that you just saw. This is also going to include the trading systems from Steve Bigalow, his Candle Profit System 2.0, as well as our next speaker, Colin Abrams. He has a Paragon trading toolkit as well. This is a fantastic strategy, as you're about to see. Well, if you do this full bundle, we save you over 50%. It's normally over $5,000 to get access to everything here, including additional premium training services as well. But as part of the special, just $1,995. I wanted to be sure to get up this slide. But for introducing the next speaker, who is Colin. So he's been a partner of ours for quite some time now, and I've had the opportunity to speak with him on numerous occasions and had him present at a few different summits for us. So I'm really excited to have him here today. Colin, hey, are you with us?
Bobby, yeah, can you hear me?
Yeah, I can hear you loud and clear. Thanks so much for joining us today and for agreeing to present with us. We're really looking forward to what you have to say today.
You're welcome, and thanks for having me on. I'm looking forward to it as well. Thank you.
Yes, of course. Great. Well, with that being said, I think I'm going to go ahead and make you the presenter here. And yeah, the way we've been doing it is, throughout, people may be asking questions, and you're welcome to monitor the questions throughout your demo, but also towards the end, I'm happy to read off any questions to you as well, so that you can answer those. And then, yeah, I think we should be all good though.
All right, great. Can you all see my screen there? It's a PowerPoint slide. Can you see that?
Paragon moving average 205 entry system.
Yeah, that's it. Can you see it? Okay, great. All right, welcome everybody. Thanks for joining in. And thank you for Metastock for hosting the session. So I've done the Paragon toolkit for Metastock, as Bobby mentioned, and in that toolkit, well, Bobby will talk about it, but there are 6 different scans, 6 different scans called explorations, different system tests, different expert advisors, etc., etc., and we'll take a look at that in a short while. But I'm just going to go through one of them now. Just a little bit of a background about me, very, very briefly. I've been in the market since the mid-1980s when I was in high school, and I've traded through a number of market crashes. In the 1987 crash, I lost pretty much all my savings as a student in second year university, and that was a huge learning lesson for me. And that started a whole journey of trying to work out how this whole thing called the markets actually work. And of course, it's a never-ending learning cycle. It just continues and continues. It's just so much to learn. But I bought Metastock in 1994, and I've been using it pretty much every single day since then, except some days on the weekends, perhaps. But otherwise, every business day, I'm using Metastock. It's a great package, and I absolutely love it. So the first method I'm going to go through, in fact, it's the only one in this session that I'm going to look at. It's one of 6 different methods that I do offer in my toolkit. It's called the Paragon MA205 entry system. I should just mention at the outset that all my methods are very, very simple. I can tell you, after being in the markets for 30 years, I just keep coming back to the same conclusion that simple works best. As soon as one tries to complicate things, it backfires. The reason, I think, is because the market already is a complicated system. And if you want to add another complicated system on top of that, you get an exponentially complicated result. So my feeling is, my experience is, keep it simple, and the simpler the better. So all my methods really are simple, and we have programmed them into Metastock. Let me just say as well, please feel free to ask questions. Ask as many questions as you like. Ask questions while I'm talking. The more questions, the better. Makes it more exciting for me. You're welcome to disagree with me. You're welcome to argue with me. All that makes it more interesting for me. But please don't accept anything I say necessarily. You are welcome to disagree, think for yourselves, and please ask questions. Okay, so the first method, or that I'm going to discuss in this section, the Paragon MA205 entry system, what we're looking for really is just a nice strong trend, and I'm defining that by a 20-period moving average. And everything I talk about today applies equally on any time frame, be it a 2-minute chart, a 15-minute chart, 5-minute chart, hourly, 4-hourly, daily, weekly, monthly, yearly chart, all the same principles apply. So it doesn't really matter what time frame you're using. So we're looking for a nice strong trend, and I'm using a 20-period moving average for that, which is in the simple diagram. I'm just showing you the basic theoretical idea behind it. So I'm looking for a nice strong trend with a 20-period moving average, and then I'm looking to buy pullbacks in the direction of that trend. That's all I'm doing. And I'm using a 5-period moving average to trigger the entry. That's all I'm doing. So we want a nice strong trend, and then we're buying pullbacks in the direction of that trend. And by doing that, 80% of the trade is already won because you're trading in the direction of the trend. Not only that, but you're entering after a pullback and a resumption of the larger trend, and therefore it adds to the probability of the trade. Let's look at the shorts. The shorts is the exact opposite. By the way, the black line is the price, and the blue line is the 20-period moving average. The red line is the 5. So price is in the downtrend. You can see lower highs, lower lows. The blue moving average, the 20, is angling down, and I'll show you some of these subtleties of this method as we get into some current charts. What I want to do is run a scan in this session based on what's happening now on the markets. So the US market is closed today, so we'll do scans based on Friday's close there, and we can run scans on the FTSE today, FTSE stocks, and some currencies, commodities, indices, etc. And we'll see together what comes out. But the shorts are the exact opposite of the longs. So we're looking for a downtrend. We're looking for a bounce in the downtrend and the resumption of the downtrend, and that's where you'd sell short. Here's a bounce and a resumption of the downtrend when it breaks below the 5-period moving average, another short signal, a bounce, and another break below the 5-period is another short, etc. Very, very simple. Again, you know, you should know about trading that what's going to determine whether you are a winner in the long run is not having the best system in the world, but it's managing your risk. Trading is all about managing your risk correctly. You just want a method that gives you a better than even chance of winning, something that puts the probabilities in your favor. The more in your favor, the better, for sure. But ultimately, it's about managing your risk and being extremely disciplined and sticking to that method. That's all you want. So we're just looking for something here that puts the odds in our favor. From then on, it's all risk management and being disciplined and patient to wait for the signals, which is the whole psychological aspect of trading. So that's the model that we're looking to do. And what I want to do now is just run a scan on the markets to see what comes up. I did run it earlier this afternoon, but let's see what comes up right now. So here are the various Paragon scans in Metastock, and I'm just going to run the Paragon MA205 entry system. You can see I've checked it, and the instruments I'm going to run it on are basically major currencies. I'm going to run it on a daily chart, but you can really run it on any time frame, and we'll run it on a few other time frames as well. So I'll look at currencies. I'm going to look at main US ETFs, overseas instruments, which includes commodities and indices. And then I'll look at the NASDAQ 100 stocks, as well as the S&P 500 stocks. And I'm going to do the FTSE 100 stocks as well, component stocks. So altogether, there are about 700 instruments. I'm going to run it on the daily chart. So let's just run the exploration together right now, see what comes up. So there's 710 instruments that I'm running in the scan. And let's see what comes up. Again, as I mentioned, this is a daily scan, but I like to personally run it on a weekly chart at the end of the week. And I can get some really high probability trades for the following week. At the end of each month, I run it on a monthly chart, on a monthly scan. I can get very high probability trades, even short-term trades based on a monthly chart. If I get a signal based on a monthly close, I may get a trade that I could hold just for a few days even. All that is based off the monthly chart. And then, of course, intraday, run it on an hourly chart. I personally like 15-minute, but hourly is also good, and 5 minutes. All this literally depends on your personal preference. Okay, so here's the results. It scanned 710 instruments there in about a minute. Of course, to do this manually would take you hours. So I'm going to click on the buy column, and wherever you see a 1, means it's met the condition for a 205 entry buy. If I click on the sells, which are the shorts, Wherever you see a 1, it means it's met the condition. A 0 means it hasn't met the condition. So if I click on the 1s again, you can immediately see there are about 6 or 7 1s. If I click on the cells, there are a whole lot more cells. Not a huge amount more, but I'd say probably about 3 or 4 or 5 more cells than there are buys. That's today, based on today. And that's because the markets are down today, or the FTSE is down quite a lot today, the DAX is down today, and based on that, we're probably going to get the US trading down tomorrow as well. So let's look at some of the buys first. And what you would do is you would just open them up one by one, and then you want to look at them visually. And I'm going to show you some of the subtleties of how you can find the best trades out of the ones that come up. So I think what I'll do is just open all of them, all of the ones that met the condition, highlight them and click open chart. Now, Metastock will pop up a window to tell me MA205 buy signal. That's given the buy signal. It'll put an arrow there as well. But we'll go through each one. So all the ones that have, these have all triggered the signal. So it's popping up a window for each one of them. Okay. You could also set the expert advisor to alert you when a signal pops up on whichever time frame you're looking at. So let me just minimize that. Take that off. Okay, so let's just look at the first one. This is, I think, a US stock, Westrock Company, WRK. I don't know anything about this company, and that, of course, is the beauty of technical analysis. You don't need to know the fundamentals. So the blue line here is the 20-period moving average. I don't actually have the 5-period on this chart, but the signal here is given because it closed above the 5-period moving average. I guess I could put one on just in case you don't believe me. I think I'm pulling a fast one. Let me put it there, and boom, you can see it's closed above the 5-period, this red moving average. Okay, and very nicely, it'll give you a little arrow there to tell you that it's given the buy signal. Note also the volume is bigger than the volume for about the past 2 weeks, which is very nice. That's what you want to see as well. So now we've got a buy signal. So what I like to do is wait for the high of the entry bar, or the trigger bar, to be broken intraday to enter. So we've got the signal now. So tomorrow, when it takes out that high on the stock, with the high being 29.48, there would be an entry trigger. So what you would do is you set an alert on whichever trading platform you're using, or a host of websites where you can set an alert on any instrument. And when what you do is set your alert just before the level, the entry level, so you can give yourself a bit of time to get into your platform to place the trade. And you would just put in an entry, you'd enter, or you'd set your enter, or you'd buy on a stop to enter in once the trade is above the high, trades above the high of the signal bar. So there it found you signal. I quite like this one. I like the fact that it's a nice uniform pullback, moving up from the 20 higher volume. That's quite a nice signal. Just while we're here, let me just, if I put this on a weekly chart, so I've set it up to open up with each of the charts on any time frame to open up on the template of the 205 entry. So this is now a weekly chart, and you can see these arrows here, and also where the price turns magenta is where it's given a sell or a short signal. Okay, that was a nice one there. So what I would do, the same with shorting, is when it takes out the low of the signal bar, that would be my entry to sell short. When do you get out? So we can talk about that as we go along. But what I've noticed is if you get out after 1 or 2 closes in your direction, you're going to win about 8 out of 10 trades or more. Very, very high probability. Here was a short signal over there. And when it takes out the low of the entry bar, there we had a drop, a bit of a rally, and continue down. So, if you just get out after 1 or 2 bars in your direction, you're going to get a nice trade almost every time there as well. Now, not every trade necessarily will be a profit, but look at this trade here. We've got a short signal there on this bar, but it never took out the low of the entry bar, the trigger bar, the entry bar to get in. So no trade would have taken place there. And that's why I like that extra confirming evidence. I want to see the low being taken out of the signal bar to enter, or with a long trade to see the high being taken out. And that's why if I go back to the daily chart here, I want to see the high being taken out tomorrow as my final entry trigger. All right, so that's that stock, Westrock. Let's look at the next one. This one, it's called TechNip FMC. It's in a US stock as well. We've got two buy signals here. You've got what looks like a bull flag here. So it would need to take out, that's Friday's high because the US stock in the US is close today. It takes out that high, 14, whatever it is, 1485. That would be a buy signal there. Phillips, same thing. This is a US stock. So it's given the buy signal there. You'll note that nice bullish reversal candle yesterday, moved up today. Again, I want to see it take out that high over there, and then I'd look for a signal. You can either look to get out at this resistance area over here, or just hold it for 1 or 2 days and get out. Here's one which is also a US stock, Hartford Financial, another entry over there. Now, generally speaking, I want to see the 20 moving average trading up at a steeper angle as possible. Here it's sort of sideways to up. Also a lot of resistance over here. So it's not an ideal setup, which means it probably will go up for at least 1 day. So if you buy on the breaking of the high there, 71.98, more than likely you're going to get up. You're going to make a profit if you get out on the next day's close. So that's HIG, General Electric. Okay, you can notice all these buy signals that it's given along the way. And of course, if you hold it for a few days, a few bars, you do stand a chance of making a lot more. However, it might not go for all that time. And that's why I like to get out after 1 or 2 bars, and you're almost, I don't want to say guaranteed, but as close to it as possible. And if you look at all of these trades here, the next bar, the next 2 bars almost always was a profit. That one didn't trigger because it didn't take out the high of that bar. Neither did this one. That one, it took out the high of that bar over there. So you got a few days moving up. There, took out the high there, moved up as well. There. Okay, so there it closed. If the next day it closes on a bearish candle like that, then just get out. There was a slight profit there. Here it took out the high on that bar there, and you got a few days up. Here it never took out the high to get in. Just draw that in so you can see exactly what I mean. It never took out that high until there. I guess you could have got in when it took out the high then. Either way there, you got a signal bar there, it took out the high there. If you didn't take profit on that day's close, get out on that day over there. So now we've got a buy signal based on the most recent bar here, but because we've got this big topping tail shooting star candle, what I would do here, of course, you have to use a bit of basic common sense. It's very hard to program common sense into a computer. Maybe they will with AI, who knows? But what you want to do here when you see a candle like this is wait for it to break the high of this topping tail. If it does, that's your entry trigger over there. And now we've got a currency as well, the CAD Swiss. So here we've got a buy signal over here. You'll notice that one about a week ago. Nice trade the next day. And in pips, that's quite a nice move pip-wise. I'd have to work out exactly how much, but you're probably looking at about 40, 50 pips there, just overnight, pretty much the next day. You can see all these shorts here, how nicely they worked. Just get out on the next profitable close in your direction. Pretty much each one is a profit. So there was one, and now we've got one here. Again, you want to see it take out the high of the day to get in, and then either get out 1 or 2 days later. You can maybe, because there's a bit of resistance over there, lock in a little bit of profit over there, keep a bit more on with a trading stop. But there's a signal building up there on the CAD Swiss. Let's put it on a weekly chart, see what we see here. So we've got some shorts on a weekly. This one didn't trigger, didn't take out the low. Okay, so there was no trade that would have taken place there. Here we had a short. Now let's just see this one. If you would have got in short there, so there, had you have placed your stop above the high over there, looks like you might just have been triggered on your stop over there. And of course, that's a good lesson in itself, in that not every trade is going to be profitable, no matter what method you use. That's just the reality of trading. But it gave another short just 2 bars later, and look at that massive move in your direction. I mean, that's probably, just looking at probably about 300 pips to that day's close. So you would have made up the negligible loss there many times over. Another move there, this one never triggered. So this is how you'd want to look at it. There's a long, nice profit there, along there. Didn't go far. If it comes back and closes like that, then just take a small loss and move on. another short over there, and so on and so forth. So you can see that you're winning on, when I say 8 out of 10 trades, it might even be more than that. Let me put it on an hourly chart. Let's see what comes up here. We had a trade there a few hours ago. Nice pop to the upside. Another one there, moved up, but then it came back with a topping tail. You would have got out at about break even. And that's really how it works. You know, the more you leave it on, the more the odds of the trend reversing will increase. So if you get out on the next bar's close or the next 2 bars close, and particularly if you use leverage, you're going to really make a nice profit in an extremely high percent of cases. Let's put it on a 5-minute chart. Let's see what came up just for interest sake. There's a trade there. You know, in these very short-term intraday timeframes, I would just take on currencies that is, just take profit even intrabar after a move. That one wasn't triggered because currencies can be so volatile intraday that they can come back on you before you know it. Currencies tend to mean revert intraday, whereas stocks tend to trend more. Okay, so that's a 5-minute chart, but just so you can see it works on any time frames, let's put it on the monthly chart. Some nice shorts there. That one was never confirmed. When you're in a sideways clump like this, rather just don't do anything there. That trade there would not have worked out. That one wasn't triggered, but we'll have to look on the stocks to see what came up there on the monthly chart, but it normally works very well on the monthly chart as well. So let's go back to the scan we did. And as I said, please feel free to ask questions. And Bobby, if you want to interrupt me with questions at any time, with pleasure. Let's look at the cells. So again, all the ones with a 1, that means that they have met the conditions for a sell. Okay, so let's just take a look at what we've got here offhand. See, there are some London stocks. Anything .L is London. Let's open up some of those London stocks. I'll just highlight those. And Dollar Tree in the US, the Euro CAD currency, I'll highlight that as well. And the FTSE 100 index. Good, so let's take a look at that. That's very interesting for today. And again, it pops up a window when it's triggered a signal. So these are all triggered signals, obviously, and that's why a window is popping up. And that's just based on the expert advisor. So I'm just going to, let me just maybe just order these charts, but like that. Let's just start off with the FTSE. Here we have a nice short signal today on the FTSE 100 index. So any of you, particularly any of you that are in the UK or anyone who trades the FTSE, that's something you want to know about. So there's a short signal. You'll notice the 20 is moving down. It bounced up. We got a bearish candle yesterday, but it's closed below the 5 period. And now we just want a confirmation signal tomorrow, breaking the low of today, which is 7588. An intraday break below there will be a short entry. Now, again, where do you take profits? That's up to you. And I don't want to dictate to you where to. I can only just tell you what I found from experience works well. Just now, in a short while, I'll talk about the system test here, where there are 3 different system explorations you can do to test various exits. So you can notice there was a short entry and you got a nice drop the next day. There was some profits over there, and now we've got one here. More than likely going to get a drop tomorrow on the FTSE as well. Here was one, but you'll notice that it never took out the low of that signal bar to enter short. Here was one on the long side. There was one that wasn't triggered. The entry wasn't triggered until then. A little bit of a rally here, triggered there, and then it would have come down. If you got a bearish signal like that, just get out. Worst case, you would have had a very small loss if you put your stop below the low of the trigger bar. That one was a nice rally there. This one wasn't confirmed by a breaking of the high. But you can see here on the FTSE, let's put it on the weekly chart. We've only got 1 day in the week so far. There was a buy signal, but why would you not have taken that signal? Hopefully you can all see that clearly by now, because it never took out the high of that signal bar to get in. And that's how you would use it on a monthly chart. Let's take a look there. Look at that classic short. You don't get much better short signals than that. Right before the COVID bear market, classic short there, and it just got hammered. This is a monthly chart, so it got hammered for 2 solid months. Another one there, and a buy signal there. Another one there, which wasn't confirmed by taking out of its high. You can see how it works on any time frame. Let's put it on an hourly chart. So we've got some longs over here. There, it never took out the high. Here we got one, took out the high, but ended with the doji, so just get out. And then you'll notice when it did take out the high of that candle, okay, that's when you get in, and it got a rally. On the shorts, you'll notice how pretty much every signal, the next bar is a profit. These weren't triggered. That one was. You got to move down. It comes back, then to get out to break even, so on and so forth. There's an entry there. Slight profit, really, not much in that signal. Here, some classic short signals. This is all a 1 hour chart. So just showing you how it works on all time frames. And really the secret is just to keep it simple, be disciplined, manage your risk. When you've got a nice move, just take profits or take half your profits, move your stop to break even on the rest. And if it carries on moving in your direction for another bar, take the rest of your profits and bank them. And worst case, your stop will be at break even on the remainder. So you'll get out without losing any money on the trade at all. Right, so let's look at some of the shorts that we had. What have we got here? AstraZeneca, short signal over here. This is a British stock. Got a short signal there. We need to see its low being taken out there, and that's a short. Let's take profits around this low over here. So the low there is 116 pounds, I guess, at 16 pence. Gets down to here, 114.78. Take your profits. Again, that's the kind of trade that would work very well, either with a large position size or using a leveraged instrument like the CFD. Let's see what else we've got. Okay, that was a long that we looked at. Let's look at some of the other shorts. Bremer. Okay, short signal over there. When you've got the sideways kind of thing, I tend to not take those trades. There's not much happening there. There was a nice down move telling you that there's selling taking place the whole day. That's what you want to see. This is kind of a neither here nor there bar, small range, closed, sort of doji-ish. That's not telling you that there's proper selling. That's telling you that they're selling. So that's the kind of trade you want to take. Let's see what else. The stock here, Berland, BR Land, sell signal there. Okay, it's closed well off its high, so that's potentially a good sign. Gets below there, you'll probably get a trade to the downside, like we got there, like you got there. Here, beautiful trade to the upside. There, neither here nor there. There's a nice trade. So again, the point of this is that you want it to save you hours of time. Let's look at CAD Swiss. That's the one we looked at on the long side. Yeah, EuroCAD, that's the one we had on the short side. So it looks like in the interim, while we've been speaking, the short signal was taken away, meaning that the price moved up, which removed the arrow, which is fine. So there we had a short signal, but never took out the low. So no trade, which is exactly what you want. You want something that if it doesn't confirm it, you don't want to get in. You want to see the price confirming it, telling you that there's more selling here than buying. In that case, there was no follow through, so there was no trade. Here was a short signal, and when it took out the low, you entered, closed up. I like to leave my stop above the high of the signal bar, and you've got to move down. There was an entry profit there, neither here nor there. You could have waited another bar or so. You might just, looks like you just stayed in. But, you know, when you get this kind of sideways move, I would just get out. These kind of trades, you want to see them move very quickly, like that trade over there. There was a short, if it's red the next day, just get out. But really what you want to look at is you want to find the 20-period moving average angling at a steeper trend angle as possible. Like there was a classic entry. And with this, you can afford to be picky, and you should be picky. I'm just showing you all the trades here, but you want to be as picky as possible. See the 20 angling as steeply as possible. Look at this nice, big, solid green bar. Okay, with the Paragon toolkit highlighted in blue, but that's solid green bar, buying taking place the whole day. And that's what you want to see. It's telling you that there was demand the whole day. That's where you want to get in, and there we got a big move. So those are the kind of trades you want to see. There was a nice bullish reversal candle, a hammer off the 20 period moving average with the arrow. There you got to move. There was a bullish engulfing candle. You got to move up, etc., etc. Another classic one over there. Moved sideways for 2 days, but closing off its low each time, telling you that buyers are coming in each day. And there we got the run. So that's what you want to do. You want to use a bit of common sense here. Yeah, you know, common sense is important. You want to find that 20 moving at as steep as angle as possible. Here I'm just putting the Euro CAD on a 240-minute chart. Let's see what comes up here. 4 hour buy there, buy there, buy there. Now that one didn't work out. Okay, so that's why you do need to have your stop obviously in place. What you could do if you've got a nice big bar like that, and triggers it and it comes back halfway below that bar, then just get out. That's something you could do, but you need to decide how you're going to manage your risk. I like to have it below the entry bar. There's a classic one over there. It does help by the fact that the actual signal bar is also a bearish candlestick, a reversal candlestick, a shooting star. And that just gives you more confidence in the move taking place. There's a nice one there. This one never confirmed. Did there, but you know, when it confirms a few bars later, you've got to be a bit more careful. Moved up off its lows of the bar, then just get out if you do take that. Also, if a trend has been in place for a long time, keep in mind that common sense dictates the closer it is to ending that trend. So, yeah, that's just running through a current scan. I can really run it on any other time frame. Maybe I should do that. Are there any questions at this point? Please let me know if there are any questions. Bobby, if there are any questions there, let me know. This is probably a good time to take some questions.
Yeah, someone is asking where you would put the stop loss.
Okay, so I probably did answer that after you asked your question, but I normally put it for buying below the low of the bar that triggered the signal. Well, the bar that gave you the arrow to buy, and if I'm shorting the bar that gave you the arrow to sell, call it the signal bar, I put my stop above there. We'll look at a few more examples now, then I'm going to just show you a little bit about the system test, how you can try and optimize your exits. So let's scan the same universe on a different time frame. Does anyone have any preference what time frame you want to scan it on? To me, it makes absolutely no difference. The reason why it works is because it's based on universal principles of price action. You've got a defined trend, you've got a pullback in the direction of that trend, and then you've got a resumption of that trend. These are just basic principles of price action that work. That's all we're doing. So does anyone have a preference there for what time frame you'd like me to scan it on? Bobby, I'm not sure. I'm not seeing the chat here, but if there are, just let me know. I really am happy to scan it on any time frame. Anything coming up? Should I scan it on, say, 1 hour? Any preferences?
Yeah, hour or daily. I think either is fine.
Okay, so we did the daily. Let me do a 1 hour. Let me run the same scan on a 1 hour time frame on all those 710 instruments that we looked at. So let's see what comes up from there.
Yeah, while that's scanning, there are a couple other questions coming in. So
okay.
Paul would like to know, what are the 3 moving averages on the chart that you had?
Oh, well, that's the 3 on my chart over here. Okay, let me take a look. I think it's the 20, 50, and 200, but I'll just take a look when I open up the chart next. I think that's what I've got there. If you just hang on a few seconds on that,
no
we'll take a look.
And there was another question too from Funzo. He says, is trading stock different from trading currencies with this?
Well, I find currencies a lot more volatile, particularly intraday. Intraday currencies are extremely volatile and they tend to mean revert. I find stocks a little bit smoother, quite a lot smoother actually. Personally, in my own experience, I find intraday currency trading probably the hardest trading that there is. So just don't be fooled by all the adverts out there about getting rich trading trading forex intraday. I think it's the hardest way of trading. That is, on an end of day basis, I don't think it makes that much difference. And certainly, the higher you go, the more currencies will fall in line with all the other instruments. But they do tend to be very volatile intraday. Okay, and generally the principle in charting is that the higher the time frame, the smoother the trend. And that's because the smaller time frames are the building blocks of the higher time frames. So you're going to get a lot more counter trend signals or counter trend movements in the lower time frame. So the higher time frame you go, the smoother the trends, and the easier it is psychologically as well to trade. Now let's look at ran a scan on 710 instruments on a 1 hour time frame. Let's click on the buys. Okay, so all the ones here are buys, quite a few currencies over there. Let's just click on the sells. Not that many sells, but there are a few, New Zealand dollar, and the rest are stocks. Let's go back to the buys again. So let's look at a few currencies, Euro AUD, Euro New Zealand, the HUF, which is Hungary. Let's look and see what else, any of these stocks that I've heard of. Rolls-Royce, I think you might have heard of that. Let's do that for fun. Splunk, don't know what that is, but it's certainly a spunky name. Let's see anything else. Yeah, Vertex Pharmaceutical, a well-known company. Okay, so now it's going to open them on the 60-minute time frame. Because that's one of the beautiful things about Metastock, because I ran the scan on the 60-minute charts or time frame, it'll then automatically open it on the 60-minute charts. Now, how long would it have taken to find all these signals, 710 different instruments on a 1 hour basis? Probably have taken you 2 days. Okay, and then of course you'd be then on to the next day or two. So it just, I absolutely cannot manage without the Explorer in Metastock. It's my number one go-to feature for all my trading and investing. So I'm just taking off these alerts here. So here we are. Okay, so we are about 20 minutes to the hour. So based on this hour so far, the Vertex Pharmaceuticals, that's a US stock. So that was probably after hours in the US on Friday. So I would obviously ignore that. But you can see these beautiful signals here. 1 hour chart. That one, it only triggered broke the high there. A nice move there. It broke the high there. A nice move intra-bar. I mean, that's actually a big move that came back by the close of that bar, but there was a big move intra-bar there. And shorts over here, when you've got a long tail like that, just be careful. It would at least have to obviously take out the low there. But and also when the trend has been in existence for a long time, it's closer to ending. But you've got shorts. Again, that didn't trigger. That triggered a bit. That trigger didn't do much. That triggered. It got a signal there, but you really need to find the best trades. There was a nice one over there. When you got these bottoming tails, just be a bit careful because it's telling you that buyers are coming back in again, which shouldn't be happening if it's going to be a good short. Okay, so that's that US stock on that time frame. Let's see what else we've got. Let's look at Rolls-Royce. So there we are. This is a British stock, of course. Last hour of trading has given you a buy signal on the 1 hour chart. So you can set your alert to above that hour there, 152.30 pounds. That would give you a signal over there. And then because it's on an hourly time frame, so you would take your profit after 1 or 2 hourly bars. Don't kind of think, okay, well, now I'm going to wait for a daily close, because if you're entering on the whatever time frame you're entering on, you want to exit on that same time frame as well. Let's look at, okay, Splunk, okay, again, a US stock, but that little signal, that little bar there is probably after hours trading, and I'm going to ignore that. So here we've got currency, Euro New Zealand. This is giving a buy signal so far based on where we are now in the current hour, about 15 minutes to the close of this bar. This would have to take out the high of that bar to give you a signal. If it does, I would take profits just around here, regardless of where the bar closes, and you can get a nice quick intraday trade over there. And that's why it's essential that you wait for the confirmation. There was a buy, but it never confirmed by taking out the high of that signal bar. So just to answer the question about the stop, so if it does trigger this entry on the next bar, or say 2 bars later, you put your stop below the low of that bar where the arrow is. Here's a beautiful short, and some longs here. That one wasn't triggered. That one was triggered. That one wasn't triggered. Just be careful of these currencies intraday. They are extremely dangerous. And you really have to watch them like a hawk. Excuse me. Okay, let's look at some more. Again, we're on a 1 hour time frame. This is the Euro AUD, Euro Aussie dollar. So time now in Australia is probably, I don't know, 2 a.m. in the morning. So that's why there's not a huge activity happening here right now, but it is giving a buy signal. As things stand, I'd probably want to see it take out that high over there as well before getting in. Okay, because we've got a topping tail there, and then get a bit of a move there and just take profits. All right, and so again, this is all on a 1 hour time frame. Let's go to a daily chart. The Euro AUD, some beautiful trade over there. That trade wasn't confirmed, the entry. That trade was, you got a bit of a move, not a huge amount. Get out then if it's not doing anything. There was a bit of a move. There was a very nice one over there. Just note, if the entry, the signal bar is a very large range, normally then it's a far more risky trade because most of the move has taken place in 1 bar. There's a nice one over there. Nice solid green bar, but not hugely massive like that one. There's a nice solid one there to the downside. You've got to move. There's a much bigger one, so just be a lot more careful on those ones. There was one there, big up bar the next day for profit. There was a buy, but it never took out the high of that bar to confirm the entry.
Colin, are you looking for a candle to close above the high, or just move above the high to confirm?
A good question, and an intraday break above it. Very often by the close of the next bar, you've already got your profit and you can bank it. Okay, so it would be an intraday break. And that's why you could set in your system, in your trading platform, to enter on a stop. You don't even have to be there at the time. You just have to enter. If it breaks above that level, enter into the trade. Okay. Let's look at some of the shorts here on the 1 hour, the New Zealand dollar, and I'll open up some of these UK charts. Okay, let's just quickly look at that, and then I want to show you the system tester as well. Whoops, where are we? There we are. So Pershing, okay, short there, it would need to take out the low to trigger the entry. Legal and general, here's one over here. We've got a short signal there. So either take out the low there, or because these are such narrow range bars, wait for it to take out that low. You're going to get a move down. Very small bars, so yeah, I like to see something with a bit more movement in it. By movement, I mean range of bars. And that's why you need to be nice and picky about this. This one looks nice. Landsec, land.l in Metastock. Nice short entry there. Again, you can see a nice classic downtrend. And there's your setup again. And the trigger is a break below today's low, 578.20. That's an hourly bar. I should say on the hourly low. You can see the shorts all the way down over there. New Zealand dollar. Okay, so we've got a downtrend, but look at these tails on either side, these spikes. This is what kind of bothers me about Forex. Okay, it's an hourly chart, intraday in particular. You get these spikes, which makes intraday trading on Forex very, very difficult from an emotional point of view. But we've got a short over there. So let's see where it closes in 11 minutes time, this bar. And you then want to enter short on the breaking below the low of this bar. And then if it gives you a nice move, just take your profit and bank it. Okay, so those are the shorts over there. Some of them I could have looked at more as well, but I think let's leave the charts at that. Let's just look at the system tester. So with Paragon, okay, each of the methods have got different system tests. Now, of course, the MA205 entry system, it's just one of the 6 different systems that you get. But in the system test section, I've given you 3 different tests for different different exit options. So it's called the MA205 entry system because it gives you the entries. When do you get out? That's based on you. I've given you 3 different options here that, in my experience, all work well. And because it's the system tested, you can test it yourself on whatever time frame to see how well it works for you. So the first one is a close back below a 10-period moving average. The next one is a 5-period moving average, a close back below it. The next one is exiting on the next bar's close. Okay, those are just 3 different exit options. You can run the test. You can run all 3 at the same time to see which ones tend to give you the best exit signals on your time frame. Or what you could do is run all 3, and whichever one gives you an exit first, just exit at that point. By exit in this case, we're talking, most of the time it's a profit. You'll stop, as I showed you. I'd like it to be below the signal bars low. So you can test to see which exits here will give you the best profit potential. And of course, if you've got experience with the Metastock system test, you'll get a whole profit curve, profit loss curve, equity curve, and it'll give you every single trade, the level you got in, how much you made or lost, etc., a whole range of stats on each system test, which you can really go to town on and glean a lot of info, excuse me, about the method. What I like to do as well, with just as an aside with the Paragon, if I go to the Explorer, you can run all of the 6 explorations at the same time. Okay, particularly if you're on the higher time frames. If you're doing this on a 5-minute chart, you're just going to have, too much to track at any one time. But let's say you're doing this on an end of day or end of week or end of month basis, maybe a 4-hour basis. You can run all the scans at the same time, and then just look at all the signals that come through, and then just choose the best ones visually. Of course, each different method here, it's explained inside how to use the method and some of the finer points. But I've tried to show you some of the finer points here as we've gone through it. So let's just look at, let's open one more chart, for example, Singapore dollar. So that's given a buy signal. This is still on the hourly scan. So, okay, this is giving a potential buy over here. You can see we've got an uptrend. Buy so far above the 5-period. After a pullback, it would have to break above there. But as I said earlier, you want to see the 20-period moving up as steeply as possible, not where it's sort of wishy-washy, like there. Okay, you want it steep. If there's a bit of space between the moving average and the price, that's also good. But the steepness of the 20 is important. So now if it takes out that high, you'd have an entry there, the SGD. Okay, so someone asked about what moving averages I've got on here. It's 20, 50, and 200. Okay, and that's how it works really on pretty much all time frames. There was a long, but it wasn't confirmed above the high. Okay, so I think let's leave it at that for now. If there are any other questions, feel free to ask them now. This is a good time. This is your chance to ask them. While we're here, this is a daily chart, Singapore dollar. You can see some very nice shorts here as well. The whole beauty of this is to save you time, to find high probability signals by saving you time. So as I mentioned, I'll do this on a weekly chart. Me personally, of course, everyone can use it in their own way. I do it at the end of the month, and that can tell me a lot about what's going to happen for the following month based on the end of month scan. So if I get a nice signal on an end of month basis, I know that for the next month and probably for a few months, I'm going to get a move in the direction of that new signal. That's a very, very, very useful thing to know, even if you're a short-term trader, because the monthly chart's going to move in that direction. So therefore, you want to take short-term trades in the direction or of that monthly signal. Very, very handy thing to know. Huge advantage. It'll put you at a huge advantage. Okay, Bobby, so from my side, that's pretty much it. If there are any questions, I'm happy to take them. If there are any more questions,
Yeah.
Otherwise, I'll hand it back to you.
We can take this last question here. Someone wants to know what you suggest to trade for first-time or beginner traders.
Okay, that's a good question. I would start off just trading straight shares, stocks, and do it in an unleveraged way. In other words, if you're buying, whatever, 10 shares, put up 10 shares worth of money in your account. Don't leverage it via a CFD or a future or an option. And that's the way to do it. Just trade very small while you're starting. The aim being more to learn the process of trading than to actually make proper money. Once you're starting to get familiar about the process, getting to learn about what works, what doesn't work, tweaking your methods or whatever method, or seeing what works for you, what makes sense for you, to you, what sort of method speaks to you, because we're all different. Our brains are all wired differently. Some are more visual, some are more spatial, etc., etc. Fine, it's all a learning curve. So that's why you want to start small. Start off with straight shares, start very small while you're learning. Don't even think about making money at this point. Just start small, just to get the process right. Later on, once you're doing that and becoming more consistent, then you can start going in bigger sizes, slowly, incrementally, putting more money in your account, etc. But build it up. This is something that takes time. It is not a get-rich-quick endeavor, trading or investing. Certainly not investing. Neither is trading. So don't be fooled by all those adverts out there on the internet that this is a get-rich-quick thing. It definitely is not. This definitely does take time to learn, a lot of time. That's why just start very, very small. And if you are going to trade something like, let's say, indices, I would say after stocks, look at indices, the Dow, the DAX, the FTSE, the S&P, the Nasdaq, etc. The Russell 2000 is a nice one as well. Just trade the smallest increment size that you can on your trading platform. Again, it's not to make money at this point. It's to learn the process of trading. Trading is, as I mentioned, it's about risk management and it's about managing your emotions. You just want an entry method that gives you a better than even chance of making money. In fact, as an aside in brackets, some of the best, in parentheses for the American audience, some of the best trading systems in the world only win about 30 or 40% of the time, 35 to 40% of the time. So it's all about risk management and about being disciplined. So the method here, the 205 entry system, gives you, in my experience, and hopefully you'll have seen it now, a way better than 50% probability of winning per trade. I would say it's more like 70, 80+% probability if you're getting out soon afterwards. So, and that with proper risk management and discipline, you should really be able to compound your account over time. But just start very small. This takes time to learn. It's a learning process, but you will get there as long as you're patient, you work on it, spend a bit of time every day working on it. And my feeling is keep away from currency trading intraday, certainly if you're starting out. It's the most dangerous form of trading in my experience. You're welcome to disagree, with pleasure, but that's just my experience of it. So I hope that answers your questions. Any other questions there, Bob?
Yeah, so one last question, then I'll take over. So someone has asked, are there times of the day that are better, such as near the open or the close, US or London time? What have you found to be the most successful?
So it depends what you're trading and what time frame you're trading it on. Obviously, in the first hour or 45 minutes of the open on any instrument is extremely volatile, particularly the stocks and the indices. Of course, currencies trade, around the clock. So just be very careful around the open. If you're trading on a 5-minute chart around the open, you got to watch it like an absolute hawk and have your finger on the button regardless. I don't do that. For me, if I'm trading stocks intraday, I would look at a 15-minute chart. And what I found is that you often get your best signals around about mid-morning on a 15-minute chart. You get your first opening flurry for the first hour or so. Might be a gap up, a gap down, and there's vicious activity in both directions. Normally by mid-morning, the market has settled down, and you've got to pull back in the direction of the trend that is establishing itself, and then you can get a nice entry in the direction of that trend on the 15-minute chart. But generally speaking, if you're trading end of day, so then you'd wait for the end of day close. What I like to do is run the scan about 10, 15 minutes before the close, particularly if it's on the stocks, for example, before the market closes, see what signals or what instruments are giving you a signal, and then look, you could, and then basically that's where you want to set your entries for the next day to actually trigger the entry above the high or the low.
Okay.
The bottom line, it depends what you're trading and what time frame.
Well, perfect. Thanks so much, Colin. I think that kind of wraps up your time. I'm going to do I'll showcase kind of what we have included with your add-on real quickly, and then we'll get it on to the next presenter. But thank you so much for participating today. We're always so happy to have you on, and you do a great job, and I really like how you interact with the audience.
Okay, thanks very much. I appreciate you having me on, and thanks for watching, everybody. Hope you got something out of it.
Great. All right, Colin, thank you. Yeah, all right, everyone. Before we jump into our next speaker here, just to show you a little bit more, Colin actually kind of just focused on one of his main systems within the Paragon add-on that we've actually created and implemented into Metastock. He showed you how to use it, how to use that system, and how you can easily run scans with it, as well as test the market to see which securities it performs the best on. Well, that was only 1/6 of what we've put together with him. So we actually have his full trading toolkit available here with us at Metastock, where you get 6 different explorations, 6 expert advisors that are going to give you commentary and signals on your chart. You have 6 templates with that too, so it will apply everything to your chart. You can get commentary with it, so it's going to guide you through all the different strategies that are in there and show you how to utilize all of them. Colin has also put together a fantastic course as well. It's a 6-part course, so a video course, and with the Paragon Trading Toolkit with Metastock, you get that course included at no additional cost. So you'll have all of his strategies built into Metastock for you to scan and search on, as well as training behind each and every one of them as well. Here, this kind of shows all the different sessions that were recorded that he's put together and what they work with, or on, I should say. And of course, as always, with any subscription with Metastock, we give you free, unlimited support and access to our team, where they can answer all of your questions, help install things for you, customize and personalize the software so that it meets all of your needs. With that, normally we sell the Paragon add-on for $699. Considering all the training that's included, that's a fantastic deal there. And this shows everything that's in there. As part of our summit special, though, we are going to give you guys $100 off if you wanted access to this. So basically $100 per strategy, considering you have the 6 in there, which is just a fantastic offer. And you can get that by chatting in with our team at metastock.com/sales chat. Or you can also give us a call or send us an email too. We're happy to help you out with that. I should also mention that we've taken the trading systems from most of our speakers today, all those that have systems inside of Metastock, and we've put together this Metastock Euro Summit Traders Pack. So this will have Daniel Sinnig's Power Bundle 360, who presented before Colin. It'll have Colin's Paragon Trading Toolkit, as well as Steve Bigelow's Candle Profit System, and additional premium training as well from Kevin Nelson, who's over here. And the retail price for all of those strategies in Metastock is $5,187. However, we're going to give you over 50% off if you buy them all in the bundle. So that's an offer for you today as well at just $19.95. If you need a Metastock trial to go along with that, we can help you out with that too. Just contact our team at metastock.com/sales chat, or you can get this entire special at metastock.com/Euro deal. All right, now that we've kind of touched on that, so next up, I actually reached out to my friend Simon Campbell, who's over in London, and he does actually a lot of online events as well. He's the master of them, as well as in-person events, and he always has great speakers on. So we connected and I asked if he maybe had anyone that would want to partake in our Metastock Summit. So I believe I actually have Simon and Chris on with me. Hey, Simon, are you there?
Bobby, I've never had such a lovely introduction. Thank you so much.
Yes, of course. Hey, well, you know, I wanted you to be able to speak a little bit, and I know that you know Chris better than I do.
Yeah, thank you for the invite, Bobby. The webinar is fantastic. I've been tuning into the speakers this afternoon, and I think there's some fabulous stuff. In fact, was it Colin just there, the previous speaker?
Yes.
I think just the last 3 minutes of his talk was probably in that 3 minutes. I think he gave really away the secret. It's risk management, starting small. It was just very succinctly put, and I think he's a very good speaker. But they've all been fantastic today, and I'm really pleased that we have Chris Tubby, who's joining us now for a session on fundamentals versus technical analysis. It's the old argument, isn't it? It's what works best. Is it better to look at all the fundamentals and the numbers and the reports and the data, or you just look at the price action and the charts? I think we know where this is going, but Chris is here because he's been in the markets. He's actually been a floor trader at life. He's got a long history. He knows exactly what drives the markets, not just coming to retail trading online. He's lived and breathed it on the floor. So it's great that he's here. As you can see, he's got four decades of experience. Chris, I hope you don't mind me aging you a little bit with that. Let's see if we can bring you in, Chris, and share the screen to Chrissy's screen. Bobby, would you be able to do that?
Yes, of course. Happy to do that. So, hey, Chris, I'm going to go ahead and make you the presenter here.
Chris, if you just unmute that microphone sign so it goes from red to green.
Which I've just done.
Perfect.
Oh,
we can hear you.
Yep. Hi, Bobby. Nice to meet you. Hi, Simon. Thanks for the intro. And hello, everybody.
Yeah, I just
I'm
sent
really
you.
excited about this.
Perfect. I just sent. You should receive a pop-up asking if you want to share your screen. Oh, there we go. We are seeing an email, Chris.Tubby. And now we see your slideshow here.
Okay, that's perfect. Okay, so so I'm ready to start whenever you guys are.
Fantastic. Well, I can see the slide. I can hear you, Chris. Can everybody else just check, because we've got a bit of a party call? Everybody can hear Chris and see the Chris's company, Sinnig FinTech, that does trading education here in London. Fundamental tell. Just let us know with the chat box. Just a little Y or a yes or something would be great, and then we can get straight into it. Fantastic. Okay.
Yep.
Great.
All right.
Chris, let's hand over to you. Bobby, you're in charge. I will have to, unfortunately, excuse myself. About halfway through this presentation, I need to nip off. But Chris, you're in safe hands with Bobby and everybody else. I think you're going to enjoy this presentation a lot. Chris was at our show in London a few weeks ago and gave a fantastic presentation there, so I can attest for this. So over to you, Chris.
Thank you.
Perfect.
Yep,
Yeah,
that was a great day as well, Simon. So.
I'm in the background if you need me, Chris, as well as our marketing guy, Greg, is here too.
Okay, cool. And obviously, if any questions come in and you want to stop me at any time, feel free. It's no problem. And then we can just carry on. So, hi, everyone. I'm sort of taking it from a different view because I've been much more a trader than a long-term investor, although I do hold on to some of my positions for quite some time. And of course, as we sort of said at the beginning of this, it is a really sort of an age-old question. What's best, fundamentals or technicals? And I've got my own opinion because obviously I've got a lot of experience, but I'm just going to go through some various bits and pieces And, hopefully you can make your own mind up. Maybe towards the end, I'll share mine as well. So it's just... Okay, so we just have to start with our disclaimer. So very quickly, trading involves potential risk of loss of capital and is not suitable for everyone. Just be aware of leverage if it is available, because you can lose substantially more than that initial investment. All the views, everything that's included in this is purely educational purposes. We don't want to encourage you to trade or invest. That has to be your decision. And of course, before you make that decision, you must consider the risks involved, your financial situation, and definitely your level of experience. And of course, only risk capital you're prepared, but more importantly, can afford to lose. Just keep that as a small percentage of any capital that you hold. And of course, if you've got any doubts whatsoever, seek independent financial advice before you risk that capital. I've so many people come to me that have tried and lost money, and then they want the solution. Don't do that. Go on a demo account, but practice and sort of hone those skills first, whether it's trading or investing. Just very briefly about us, I'm not going to bore you too much with this, but we are a leading trading and edtech company. We provide workshops, courses, and we've got our own academy, and they have anything from one-day workshops, 1 week intensive courses, all the way up to actually something I started today, which is our accredited masterclass in financial and commodity trading. We also include digital in that as well. I produce weekly YouTubes talking about what happened the previous week, what's coming out the following week, also my macro outlook on the whole economy globally, and then I do a lot of analysis. And then on top of that, a daily newsletter, trader mentoring, and if you feel you're underfunded, then we have an opportunity. We actually attach it onto a couple of our courses for free. Otherwise, through one of our partners, there is the opportunity to go enter a trading challenge to hopefully qualify for a funded trading account. And that can be anything from 25K all the way up to $1 million. If you've got any questions for me or us in general, then info@cymaxfintech.com will reach us. Okay, so let's get on with the show. So fundamentals. For me, this is my 50th year in the markets. Now, as a trader, 48 of those. I've been training for probably about 12 of those years, as well as doing my own trading. But I like to use a combination of both, because for me, I believe it's the fundamentals that do determine the market direction, the trend, and the volatility of anything, regardless of what that product is. Where I believe that the technicals come in is helping us to identify visually, technically, where to enter the market, and also when to get out of the market, and obviously, managing that risk, where to place our stop losses as well. So for me, I believe it's the fundamentals that determine market direction for sure. And of course, with stocks, when you look at those fundamentals, you've got to be doing an in-depth, you've got to be very granular with that when you're going into the single stocks, because you've got to examine a company's quantitative and qualitative factors to assess its intrinsic, that real value, and assess obviously the competition, the management, the economy. And, generally, if a stock is cheap, do even more research, because if it is cheap, it's going to be for a reason. And that is something that you've got to be very cautious about. Okay, so just need to move that. Now, what is going to influence the markets. When we look at the financial markets, obviously, as we've seen over the last few years, fiscal policy from the government's monetary policy, geopolitical issues. So, we've been through COVID. Go back further, we've been through the subprime crisis when the central banks really sort of started to appear and at the time put in a load of stimulus. And then, of course, after COVID, then we moved on to other factors such as Russia's invasion of Ukraine. So we've got these geopolitical issues coming through. And then, of course, COVID itself actually highlighted a lot of supply chain issues. And then that comes back to a little bit of protectionism. And even now you're seeing countries trying to sort of bring domestically these new sectors at home rather than rely on external supply, which can break down. And I think that surprised a lot of people how much we do rely on other countries, for sure. And of course, because of all that, it also generated a lot of inflation. Now, the central banks have done their best to try and bring inflation under control, but the problem they've had realistically, is that the inflation mainly was generated from the supply side. And that was something that was totally outside of their control. All they've managed to do really, and they haven't succeeded yet even, is to bring demand down so it sort of almost balances with supply. Now, market data, and again, if you're investing long term, you don't worry so much about market data. But some of that market data does give you a sort of a precursor, a little bit of a heads up of, what's going to happen in the future. Because if you go back to sort of what was being talked about 18 months ago, or maybe rates are going to go up, we've got inflation, but it's transitory and it's such like, then that became really confusing. Look at some of the American banks that actually went down because they was so long of treasuries and bonds at very low yields, roughly approximately about 2%. And of course, now we have yields 5-6%. So, all of that comes into play because it is going to impact price. And a lot of that comes from trader sentiment as well. And of course, macroeconomics, to me, macroeconomics has changed. Whatever you've read in books over the last 10, 20 years, some of that sort of doesn't really apply anymore, or it's not as accurate as it used to be. At one stage when interest rates were very flat, we almost got to this sort of MMT, this modern monetary theory that had been sort of thrown around in the late 80s and 90s. Zero rates, that sort of the government spend as much as they like almost. But it never quite got there. It got to the doorstep, and then, of course, inflation peaked, started to pick up very aggressively, and that changed things round completely. And obviously, there's, we can go on for hours, if not days, on macroeconomics, but I'm going to stop there for the moment and sort of move on. So with the central banks, we had that quantitative easing, especially over COVID. So, now they're trying to sort of control inflation, but governments and central banks, in my mind, are actually partially responsible for some of this inflation because they stimulated so aggressively and so heavily. And if you look at quantitative easing, personally, I don't believe it's the best solution. I just think it's the easiest solution for central banks. And unfortunately, they've only got this plan A. They don't have a plan B yet. But for me, there's different ways to stimulate an economy that are much more beneficial to the economy. Again, if you look at the central banks, that's sort of holding on to hundreds of billions, if not trillions, in losses because of all the assets they bought through COVID. And of course, we're going through this tightening cycle now. we're probably quite close to the peak of it for interest rates, but not quite there yet. That's even despite the Fed pausing last week. The ECB raised rates again. This week we've got Bank of England and a few others. Bank of England, I'm pretty sure, is going to raise by 0.25% and warn of potentially more, just because in the UK we've still got that higher inflation. And of course, all of that sort of is going to impact prices, not so much short term, but definitely long term. And of course, we've seen the stock markets have this tremendous rally since March this year. The S&P went back into a bullish trend again. And of course, everyone's looking at this thinking, can it keep going? And that is an amazing question. For me, when it comes to things like that, I sort of, when there's high volatility, I look at different ways of trading. I look at the options market because that way I can control my risk much more, but allow my trades to run. And of course, we had that subprime, which really sort of triggered all this off. And to me, to a degree, I'd have to say, now, for me personally, do I feel that central banks have been our saviour, or have they perhaps become the cause of some of these problems? And I'll leave that up to you to decide. Perhaps you want to share your views a little bit later on. And of course, we had the COVID, we had those bank failures. Again, those bank failures were sort of all individual cases, although closely related in some ways because of the way the pace of interest rates going faster and quicker, which surprised most people. But again, when you've been in industry so long, I've seen all this before. The only thing that really changes is the cause, the problems that triggers all of these issues. The actual issues themselves, banks failing and all that, have been around for over 200 years and will probably be there for another 100 or so years, unless everything's digital and controlled that way. Anyway, so moving on to commodities, and again, because financial fundamentals are different to commodity fundamentals. So when we look at commodity fundamentals, they're influenced, yes, supply and demand is always the major factor in any market, of course. But these geopolitical actions that come in, we've got sanctions, wars, taxes, tariffs. We go back to Trump and his tariffs that he used as a weapon against nations to try and bring them under control, or at least to stop them sort of in a way of competition. And again, that's a whole day on itself, Trump. But so we won't go into that. But these sanctions have impact price. And not just price of stocks, but prices in the shops. And of course, that impacts profitability as well for these companies. And if we look at profitability at the moment, I would say the profit margins for most companies must be at the best level that they've been for probably 2 decades or more. And of course, with after COVID, after the war, all this inflation really sort of became accelerated. That we was being warned by central banks, we was being warned by governments that expect inflation. Inflation's with us. Look at prices going up. The thing is, for me, they never come on and say, well, the costs of materials have come back down now. You should expect to pay less. They only ever warned you of the bad side. They never sort of warned you that, to have these alternative, opposite expectations. And again, for me, I think especially around food and the food industry, I think they've probably pushed themselves to their maximum boundaries. You haven't just got sort of inflation, you've got this shrinkflation as well, where, you're paying the same price, but you're getting less goods and less value for that same price. Surprisingly, they tend to keep the box or the wrapper the same size. It's only when you open it, you actually realise you're getting less. And trust me, that really hurts me because I'm a chocoholic. I do love a bar of chocolate. Okay, so with the commodities, we'll go through, the sanctions. Obviously, that impacted a lot of competition between America and China. We've had the war, Russia, Ukraine, which really spiked commodities up. It spiked oil, it spiked agricultural products, and that obviously was part through the transition of it all, actually moving the products. But also when you look at Russia and Ukraine, massive exporters of grains. And Russia obviously had a lot of energy under their control, both oil and gas. And Europe found out to their cost that it's very quick and easy for them to turn that tap off. And, I think Europe was very, very fortunate that the winter was very, very mild. If it had been a cold, severe winter, Europe would have been in a deep recession by now. So they were saved by the weather. And of course, that's something to take into account. When energy prices go up, that impacts the economy. But also the economy impacts energy prices because it comes back to that supply and demand, disposable income. Are we going to sacrifice our heating or our air conditioning rather than not being able to buy food or such like? Or we're cut down on our journeys, maybe walk the kids to school rather than drive them to school. All of these types of things suddenly start to become more important with some of those decisions in households. If you look at American households, because of the way that the stock markets have risen, they're sitting on $147 trillion in asset valuation. And actually, they're still up $30 trillion above pre-COVID levels. That's just household wealth. Whether they actually can lock that in is always another matter. And of course, seeing it on paper is one thing, but actually locking that in can be a very different thing when you get very different results, because again, you just never know what's coming next in these markets or in this economy or even in this world. So the weather has a massive impact, and recently El Nino has started to form, and this could lead to extreme weather conditions again this year. We saw very extreme weather last year, but you could see the same, if not hotter, even this year. And of course, that means that there's going to be a dryness, less rain around, more extreme heat, which will damage crops. Okay, well, how do crops impact stocks? Well, they're only going to impact certain sectors. But, it's worth sort of thinking about these things a little bit as well, because it depends on what sectors you are investing in. And again, with COVID, I mean, if you was long tech, then you was happy as could be. But of course, after COVID and lockdowns finished, then sort of tech lost its shine for a while. And of course, what happens with the US dollar? Last year we saw the dollar index, that basket of 6 currencies, go up above 111. Earlier this year, we saw it come down to test 100. Then it sort of found its level between 102.5, 104. It's been under a little bit of pressure because the Fed didn't put rates up last week. Yet for me, I sort of get it, but I don't why people want to sell the dollar all of a sudden. If you want to get away from relying on the dollar and not using it for trade, I can understand that because more and more countries are. And of course, that again, for some is to bypass those sanctions. But the dollar, when you look at it, for me, I still believe America's got the strongest economy. Even last year when they went into a technical recession. And that's why I say sometimes that, sort of macroeconomics isn't quite as it used to be. And then with that dollar having this sort of move and weakening, many countries will be pleased to see that. But if the dollar weakens too much, then again, the US is going to start importing inflation. So there's always something going on. And this is why I think the fundamentals are so important when we are looking at trading. And then, of course, what you've got to remember is different asset classes will move at various speeds. And of course, if you're investing in stocks, but maybe when people that invest in stocks, long-term investors, they tend to be very reluctant to exit them. They sort of, almost the opposite of what we talk about as traders. They do get married to their trades. They hold on to them for years or decades. Now, there's nothing wrong with that, because there's always those sort of sayings that every 7 years the markets are going to do this, double, etc., and to hold on to them. And to a degree, that is true. But there's still times where, if the market is going to have a downturn, why not take advantage of it? Even if you don't want to sell the stocks out, you can hedge using one of the indices. If you're in tech stocks, you can use NASDAQ. If you're just in like the Titans, you can use the S&P. If you're in the small stocks, there's always the Russell 2000. And of course, the Russell 2000 can be a really good heads up of what's going on within an economy, because they are very sensitive to consumer demand. And of course, if we start to back off, they sense that straight away, and they don't have that massive bank balance to sort of weather any storms of any sort of long periods, 6 months or a couple of years of us cutting back and going through recession. And of course, as much as we would like to think we're not going to go into recession, there is still that possibility. And to a degree, for me, I believe that the central banks would be very, very comfortable with us going into a recession, because they know that they can stimulate an economy very easy. So that is their solution to get inflation back under control. But what they can't do is control that inflation, because it's so much from the supply side. And so if they push the economies into recession, when they're ready to, they can start to build them back up again. And as I've been saying all year and last year, that interest rates will peak this year, but there's no way in my mind they're going down again this year. The central banks are going to want to see inflation for 3 to 6 months at their target rate of 2%, which they still haven't achieved, because they need a series of months at 0.17% inflation month on month to actually give them that 2% level. So, don't be surprised if we do go into recession. For me, the question is not so much about the recession itself. It's about, is it going to be shallow or deep, and is it going to be short or long? Okay, so then that builds up, and I've taken a lot of time on that, but for me, the fundamentals are really important. They are sort of a lot of the backbone of my courses, but of course I include the technicals as well, because they are, to me, as important, because, as I say, these help us with our timing. So, this technical analysis using these charts is to assist us in identifying levels. We can identify support, resistance, trends, breakouts even. And of course, that's really important to us, so that we can sort of calculate, we can build our structures, our strategies around that. But of course, it's great to be able to have a lot of different trading and investing techniques at your disposal, because there's times when you need to adjust to the market conditions. It's also important to know where to place that stop loss. I help investors as well, and some investors, they're happy to show me all their winning investments. Oh, I've got this that's up X, and all that. It's fantastic. And so I go, oh, so that's all the stocks you've got then? Oh no, we've got these as well, and then come out all the bad ones. All they're doing really is allowing their good selections to finance their poor selections. If they're losing X%, then don't hold on to those. You can always get back into them at a later date, or try and reinvest in something else that's actually going to give you a return, not damage your overall portfolio. Now, something that's not talked about so much is where to take profits. And again, this is where the technicals can really help to identify those areas to take profits. For example, last year, go back to March, April, the S&P made it up to 4,300. It stayed there for a while. Then it had a massive sell-off. And I identified that because, again, on the daily chart, I could see that it'd been up there 3 or 4 times. It couldn't break through. It fell, and then it had that big sell-off afterwards. And then last August, it was beautiful because the market rallied all the way back up to the 4,300 level. In fact, just a little bit above, which was an opportunity for me because I bought put options. So it gave me the right to be short, and the market fell. And now, of course, we're back up at those levels again and above. We're in the 4,400s. And yes, I bought put options again. You know, this is not a recommendation for you guys. This is something that I've personally been doing, and I want to continue to do. And, you know, this is something that over time, I hope will work for me. You know, that magical emotion, hope. Whether it will or not, we'll have to wait and see. But, you know, I've got till September. So, you know, I've got a little bit of time on my side. So we'll see what happens. You know, maybe this time I'll lose. All I can lose is my premium, though. So at least I'm locked in there. The thing I like about charts and using the technicals, very visual. I'm a very visual person. You know, as sort of was being said earlier, that, you know, different people look at things in different ways, and I completely agree with that. I'm very visual. I love to see things because it sort of just clears everything up for me. And when you use the charts, that's a great tool to be able to have. You know, at the end of it, what are we doing? We're using historical data to try and predict future markets, future actions, and identify those trends. So what I'm going to do now is I'm actually going to go through a few charts and indicators that I put together. Unfortunately, I've just run out of time to sort of bring in some new charts. So I'm using some older charts that I've had. Unfortunately, these aren't the Metastock ones, but some of these, but it will sort of give you an idea of what's, you know, just about the analysis part of it. But obviously, if I'd had time, I'll definitely have used the Metastock charts because they're so great. Okay, so just starting off here with a pure basic line chart. You know, it's pegged basically and set by the closes. It's a daily. It's a British pound. It doesn't really matter what it is. But if I'm doing long-term investments, I really don't mind using this. You know, if I'm maybe a stock or something. But for trading, I don't find it as useful. Now, where I find it useful for the longer term is okay. But you know, if you look at this chart and you look at the trend lines I've put on, it took me two and a half weeks to get the support line on, but it took me 5 months to find that resistance line. But that support line was an amazingly good line, and so was eventually that resistance line that I managed to find. And for me, I like to find sort of 3 points. So if I've got ascending lows, I can marry them up to put that line on as I have there. I'll do it. And the same for the one higher up for the resistance. But, you know, upward trend, there it was. Now, of course, when you're looking at a chart like this, your bias has got to be to buy it when the market dips, because we're looking here at an uptrend. Okay, it's a subtle uptrend, but it's still moving up. Whereas if I was selling at the resistance levels, the most I would look for to get out of that position would be 50% of that move. Not 50% of my investment, but 50% of that move, which, okay, I would have got on that instance. But I don't mind that, because if it does come back down to retest the support level, there I'll be getting long again. And then, of course, where would I place my stop loss? So my stop loss would have to be below the support line. Now, you know, when it comes to a stop loss, it's based on one of two things. It's either a financial decision. I'm prepared to lose 0.5%, 1%, 2% in this investment, whatever, you know, you set for yourself. But then again, what am I going to get out of that trade if I'm right? So, this is where an element of this risk reward comes in, which then leads on to winners to losers. But of course, knowing when to take those profits is very important, because being on paper, having a nice sort of profit on that piece of paper is wonderful. But if you never lock any of that in, that can disappear. Look what happened at COVID. Look what happened at the subprime. So, what I'm saying is if you've got good profit and you feel that there's a downturn coming, hedge with something. Don't just sit there because, you can always get back in again. So a line chart's quite limited in its use for technical analysis. It's much more suited to long-term investing and trading, but it does allow you to identify those long-term trends, identify where the support and resistance in the markets is just by putting those lines on, whether you've got 2 or 3 points. And of course, it's based on the end of day prices. Bar chart is very simple. Just shows you the high, low, open, close. And again, you can put these on any time frame. So here we're looking at how we can build up. And obviously, for me, I start with a day chart, and then I would narrow in. It depends what product I'm trading and how long I'm going to hold that position for as to how I go into that trade. But again, it's very good for trends. So it's widely used. It shows price and time, which again can be important for some people. It's based on any time frame. It shows the high, low, open and close within that time frame, of course. You can build trend, support and resistance from it. Now, inside bars, where it makes a lower high and a higher low, so it's inside the previous bar, so it's within that shadow of it. That again can give you sort of an inclination, an idea that the market's about to have a move, and then when it breaks out of that previous high or below that previous low, then my expectations would be that that trend is going to continue, not necessarily for months or that, but in the shorter time for sure. And from time to time we get these gaps appear on markets, on products, on stocks even, just basically from when they've closed to when they reopen. And again, they can give you opportunities because gaps become targets on markets. They don't always close quickly. It can take weeks or months, sometimes longer, for them to actually close. But eventually, most do. But of course, that doesn't mean that you could hold on to that trade that long, because you might not be able to financially manage that. And then, of course, candlesticks. So candlesticks are favoured by the majority of traders and investors. They show you the same information as actually what a bar chart does. It's just that you've got the coloured bodies. Now, for me, I get distracted by them sometimes. So I would rather look at just a pure bar chart if all I want to put on is, support and resistance lines. Of course, many traders go into all the different patterns that are available. Now, the candlesticks are favoured by most traders. Again, you can adjust those time frames, which is great. It's very, very visual. From the patterns, you can work out, whether the market's becoming bullish or bearish. The one I'm quite interested in is doji, because for me that's quite important, because it's indecision. And then again, I'm looking for that breakout on that next 1 or 2 candles to give me direction. And we do get that sort of double or triple tops and bottoms to help decide those support and resistance. Try not to use it on less than a 30-minute though, please. Now, another sort of one that I like is Heikkinen, and this is something that, in my mind, is great whether you're trading or investing. So there's 2 candlesticks on here. The top one is a pure candlestick. The one below is the Heikkinen. And you'll notice that there's a big difference between the 2. And for example, on the top one, in the middle of September to October, there's a gap in the chart. But on the bottom one, there isn't for the Heikkinen. and you'll never find a gap on a Heikin Ashi chart. And the reason for that is the way that each new candle forms. Its start point is always the midpoint between the open and close of the previous candle. So when you've got a flat top or a flat bottom, there's no guarantee that that is a genuine high or low. So don't use it to do your analysis for your trend lines, because you may get caught out. It's only if it's got a wick, a shadow, both sides, that you know that they're genuine. But what I like about the Heikin Ashi is sentiment. For me, it really shows sentiment. And this is a daily chart, but you know, if I want to sort of really refine my entries, I'll even go down to a 5-minute chart for this, even though I don't like to use 5-minute charts. This I'm not using for analysis. All I'm using for is sentiment. Is sentiment still is sentiment still the same? Is sentiment changing? And that's what I'm looking for. Now, if you look at the candlestick above, it's sort of very intermittent. You get lots of a blend of reds and greens, and some of them may shake you out of a position. But when you look at the Heikin Ashi, it actually has got much, much more consistency to it. And that sort of should help you to stay in positions longer, and also give you a heads up of when to get out of certain products. So it's similar to a candlestick, very visual. It's got greater consistency than pure candles. And it gives that clear indication of a trend when it's being maintained or when it's turning. Each candle starts at the midpoint of the open and close of the previous candle. For me, it removes the noise, and it's great for price action, and it does help, for me, certainly, identify when to exit a position. It does help me sometimes to stay into positions longer as well. But you shouldn't use it for pure analysis of highs and lows to put on your trend lines, because some of those highs and lows may not be genuine. This is point and figure. This is one of the oldest chart types in the world. And for me, I just use this for pure support and resistance in the chart. I'm looking at where I get a series. I only use this horizontally. I don't use it in angles or anything like that. All I'm ever looking for is where I can see a series of buying, you know, where the market's bounced from, or it's found resistance or support, and use that. And that's all I use it for. But the great thing about point and figure is there actually isn't any time element to it, not a genuine point and figure. It's just purely price action. And of course, you can tweak the value of each of those noughts or crosses. So the crosses indicate the market rallied, the circles indicated the market sold off. And here's another one which is slightly different. Some of you may have seen this or not. This is market profile. And each one of these profiles could be a day, which is based on a 30-minute chart, or it could be a month if it was based on a daily chart. And you know what you're looking at here is the first profile on the left is actually a great one for day trading, because no matter where the market went, it was almost always most comfortable around the middle of that range. And you can see that because that's where the most letters traded. Each one of those letters represents a 30-minute time period. And you will notice that the letters go back on each other. Unfortunately, the PDF to go with that is sort of like 365 pages. So it's not massively complicated once you know the basics, but it depends how deep you want to get into something like this. Now, the shadow area, that is volume profile. So that is showing you the amount of volume that was transacted at each of those prices. So the darker profile is the volume one. That's just reflecting the volume that went through. And there's certain sort of values that you can take from that chart. I'm just a little bit mindful of time. For indicators, now, you know, a lot of people rave about RSIs, but just be very cautious with an RSI. You know, everyone's like, oh, I use 70-30. Me, I look at it and I use 80-20 because I'm a more cautious trader. But even so, I've seen them go in the 90s, and I've seen them go into single digits. So don't get sucked in that just because an RSI is looking at overbought or oversold, that is the top or the bottom of the range, because it's not necessarily the case. What I look for is when the market actually starts to turn. So I want other traders, other investors to give me my sort of heads up and confirm to me. And then what I'm looking for is that hook. And that hook forms when the market price starts to turn. Now, it doesn't necessarily mean that the market's already coming off, because even if a market goes sideways, as you can see there, the RSI still starts to drop. So just be cautious on that one. What I do love is Fibonacci. Again, whether you use it intraday or whether you use it on the daily, this is based on the daily market. And here, we can see, you've got to be able to establish the low to the high or the high to the low. And then once you put that on, then you create these Fibonacci levels. Again, I could go into depth on how they're formed. The most important one for me is the 618. That's also called the golden ratio. And analysts will be sort of very strongly opinionated about that. They will all have buy orders in generally just above that, and I will do. But if it was to break on the downside through that, I'm quite comfortable reversing my position. So I would go from a long position to a short position. Now, I would have my stop loss in to get out. I wouldn't actually go short until it broke through July's lows on that left-hand side. I don't mean where A is, I mean sort of that little cluster just below the 618 level. So I may get out of my longs before that, but I wouldn't go short until then. But that still is going to give me 15 to 20% move in that market, because the 618 still leaves sort of 38% move. So if I wait another 10%, I don't mind, because I've still got potentially over 20% in that trade. Pivot points are something that's more for intraday. They've been used by pro traders for absolute decades. They're based on the previous day's high, low, open, close. Some don't use the open. And they create these series of support and resistance lines that you can be used on a daily basis. So whether you're looking to get into a stock or whether you want to intraday trade, there's opportunities to use these. And as you can see, the market's quite often rejected when it got above or below one of those lines. So again, they just experiment, read up on these. They're great to be able to use, and they do give you a lot of insight. Trend lines, very basic. Obviously, they're there. You can just, you're looking for that breakout, or, it depends what sort of trader you are, whether you want to trade within those levels or when it breaks out. And of course, here on this bar chart, again, we've got the point, we've got that channel, that upward channel. It's broken on the upside, but, there was an opportunity to get long. Now, some traders would have probably lost money on that because it sort of held inside that for a while until that breakout happened. Now, when you get these breakouts, quite often that initial breakthrough can be quite extended. And the reason for that is the fact that there are all those stop losses from those shorts coming out, as well as the natural buy-in that's coming in. Then for me, the interesting thing is to see if the market comes back to retest that, what was a resistance line that has now reversed into a support line, which a market loves to do. A market loves to retest levels from time to time. It's great for a market to have a shakeout. Just the market that goes in one direction eventually runs out of steam naturally. So fundamentals, geopolitics have been one of the main drivers for many years. Central banks' involvement has been very prominent since the subprime crisis in 2008. Just remember, economic cycles do vary in length. Financial and commodity fundamentals are very different, apart from obviously the supply and demand situation. Then, if you equities you're probably already familiar with. And of course, you know, they are a slower trade. I wouldn't say that FX is the fastest, because it's not by any means. But it depends what, you know, if you've only ever traded equities, then FX would seem fast. But, you know, if you're going to trade NASDAQ, for example, for me, that is a very, very volatile and very fast market, just to give you an idea. But of course, you know, make sure that you do your research, make sure you do your investment into anything that you're going to invest in. Make sure you understand it completely. Look at the management, look at all the different aspects, competition. You know, look what happened to them over COVID. Look what happened to them over the subprime. Look at the competition. Look at the potential. You know, are they into AI as everything and everyone seems to be getting into now? With FX, you know, it's just the exchange of one currency for another. They do trend well. Again, you just got to have your timing right. You know, you can have you can know where a market's going over time, but if your timing sucks, then you can still lose money, which is super, super annoying, trust me. But it does happen. But, you know, when you look at the foreign exchange market, it's over $7 trillion a day. And, you know, it's 24 hours a day. Rates are impacted by investors, central banks, anything political or economic. And, you know, if you're going to trade currencies, otherwise, you know, if you're very much focused on maybe US stocks, then you can look at perhaps the dollar index. So it's just this basket of 6 currencies against the dollar, but it's all about what the dollar does. Commodities traded less by investors, but, you know, you may be invested in companies that are heavily involved in commodities. And that, to a degree, is probably a safer way to actually trade commodities than rather than going into the individual ones, such as metals or silver, agriculture, wheat, or energy, oil. And, you know, you've seen what's happened to the prices over the last 18 months for many of them. And, of course, the dollar will impact them as well. There's lots of correlations that you can build on. But they are sort of fundamentally driven, and there are dangerous traps that you need to be aware of, because otherwise, you know, they can become an expensive lesson. Now, trading plan, I'm running out of time, so I'm probably going to stop here. If any of you would like a copy of the whole presentation, then feel free to reach out. You can contact Bobby. And I'm sure he will either pass it on, or I can share this with Bobby so he can pass it on to you. But a trading plan, you know, if you look at Sun Tzu, he was an amazing military strategist and a philosopher. In the art of war, every battle is won or lost before it's ever fought. And that means, you know, plan your trade and trade your plan. And also just keep a trading diary. You know, keep your trading simple. You know, it's about quality over quantity. And, you know, if you feel it's time to get out of something, then it probably is time to get out of something. Be aware of all the data and events that are coming up. There's an idea of a trading diary, which I'm happy to pass on to you in an Excel sheet if you would like it. And that brings me to the end of the presentation. Thank you very much for listening.
Hey, Chris, fantastic job there. Very informational. Really nice to have you on and to share all of this with us. You know, honestly, I think really anyone could benefit from your presentation and all the knowledge you've kind of shared in there. So yeah, big thanks. And also, yeah, I'll plan on reaching out to you, and maybe we can do some additional collaborations in the future, because I think you did a fantastic job.
Thank you. No, absolutely. I'd love to. You know, for me, I'm still as passionate 50 years on as the first days I got into trading. But also for me, you know, I know it's the old cliche of giving back, but for me, it's more about helping traders and investors stay safe. You know, there's so much hype out there that, you know, it just makes it dangerous. So I like to keep it very plain, low key. You know, warn of the dangers as well as the potential, of course.
Okay, hey, yeah, well, perfect. Thank you very much. There's some other thank yous I see coming in. I do see some people asking for the slides as well, actually. I think that would be fantastic if you wanted to share those. I'd be happy to forward you their emails, or was that your email that was on the last slide? If they wanted to rewind and they could reach out.
Yeah, it's very simple. It's info@cymaxfintech.com if they would like to request them directly. Otherwise, if they contact you, I'll happily send you the slides so that you can forward them on, whichever way is easiest for you and obviously the guys that are participating.
Okay, yeah, fantastic. Well, yeah, everyone heard that. You can reach out to him or myself or any of the contact details you see us put up. I'll actually go ahead and make myself the presenter here, and I'll share some ways you guys can reach out to us, and then we can help get you those slides or ask any other questions. But yeah, once again, Chris, thanks so much for being on, and looking forward to some more events with you in the future.
You're welcome. Thank you very much. Good luck, everybody. Have a great end of year.
All right, guys. So I'm going to go ahead and share my screen. I'll go ahead and share my camera too, just in case you want to have a quick peek. All right. So, that's taking up my whole screen. Here we go. So that was Chris Tubby. Yeah, he did a fantastic job. I really liked everything that he had in there. One thing I should also mention, all of today's presentations are being recorded as well. So you can also rewind and look at his slides there too, but I know it can be really useful to have those. So you guys can reach out to us here at Metastock, and I'm sure that I actually have a contact page listed in here up front. Oh, well, well, I know you guys can reach us at just metastock.com, and you can join our chat in there. You can also email us at sales@metastock.com, or my email is bobby.hiller@metastock.com, and I'm, of course, happy to reach out to any of our partners or forward your questions or anything like that. So you can also contact me directly there. I also know Greg has been helping to post links to people's URL and everything throughout the day as well on the marketing side. So you can look out for those. So it looks like we might be having an audio issue, a mic issue with Steve Bigalow. Says he has no sound. Hey, Steve, I see that you joined, and I actually even saw your webcam earlier when you came on for a moment, but I'm not seeing like a microphone listed next to your name. So I wonder if your headset is unplugged or turned off or something of that nature, if you maybe wanted to try unplugging it and plugging it back in. And kind of working through that. I may give you a moment to work on that while I kind of let people know about some of the other things we have going on today, and then we'll check back in. But we should be able to get you up and running. You could also try giving Jeff Gibby a call, and I know he's really good at troubleshooting you through. He's done GoToWebinar more than anyone else I can think of, so he would probably know how to help too there, Steve. With that being said, everyone else, thanks so much for watching, especially if you're still tuned in. I know we've had lots of different speakers throughout the day. I was happy to jump in and kind of go through things with you guys earlier in the day. And I know you've been seeing me in between as well. A big thing that you've probably noticed, pretty much all of the speakers today have been utilizing Metastock, and Chris as well. He was doing some really good overall demonstrations and all of his tools. I've actually worked to get him most of his materials on Metastock too, so we should have all of that shortly. And yeah, some of the key features, the takeaways that you've seen with most of our speakers throughout the day is, when utilizing Metastock, our technical analysis software, you can take these fantastic strategies from all these different professional traders and presenters we've had today, and you can scan the markets to search for not only like buy and sell criteria that have been met, but also other bits of information. You can search to get like performance results and things of that nature as well. You can also test these strategies across multiple markets. As you've seen, Metastock covers the globe. We have access to over 300,000 different securities. So no matter where you are, I know this is our Euro-focused event, but really wherever you are in the world, you can likely benefit from our platform. We can also help you out with forecasting, probable price movements. That's something we haven't really shown today, but that's a huge tool within Metastock as well. We can also get you real-time alerts, commentaries, and signals. And pretty much all of this starting at just $59 a month, depending on the package you want. And you can actually sign up for an extended trial offer to get Metastock at metastock.euro deal. If you just scroll down to the bottom of that page, there's an option to sign up for a trial. Up at the top of that page, it's letting you know about our main special offer from today's event, where we've actually taken all of the different trading systems and add-ons from today, and we're giving you over 50% off. So you can get the Power Bundle 360, which Daniel Sinnig presented on, the Paragon, excuse me, trading toolkit from Colin Abrams, and our #1 best-selling add-on over the last 2 years, I believe it is. The top seller was the Candle Profit System 2.0, and that's actually with Steve Bigalow, who is our next presenter. And so if you do this Euro Summit Traders Pack with everyone included here, you're going to get over 50% off, just $1,995. So fantastic deal there. You can chat in with our sales team if you have questions about it. Metastock.com/sales chat. This is a limited time offer. So if you're watching this super far into the future, offer's probably no longer available, but it is available today and for the next few days as well. But we are giving you some bonus offers for signing up right now when it's live. So reach out to us, metastock.com/sales chat. We're happy to answer your questions about that. And now with that out of the way, Steve Bigalow, yes, he is our next presenter. As you kind of heard from me earlier, it looks like he is having some audio issues here, but I think I have my team working on it in the background. And we should be able to get him up and running here shortly so that he can show you candlestick patterns, teach you quite a bit about them. You definitely want to stay tuned for this. Not only does Steve have a remarkable sense of the markets and really understands all the different candlestick patterns, he's also a really funny guy as well. So you'll definitely want to stick around for his presentation. It looks like we are just kind of trying to work through those audio issues at this current time. Yep. Perfect. Yeah. So while they're going to go through that, I may actually be jumping the gun just a little bit early because Steve is going to be talking to you guys quite a bit about different candlestick patterns and how they all work and everything of that nature. And I'm going to maybe just show you guys a little bit of what's included. Yeah.
Jeff is calling Steve right
now. Perfect. Yeah. Okay. Thanks, Kelly. Yeah. So we got people all over helping us out, guys. So maybe what I'm going to do for a little bit is let you guys know some of the different patterns that Steve's going to be going over today and reviewing with you. So if we take a look right here, so you'll see this is a list. We have multiple different patterns, and great news, you can actually scan for all of these patterns inside of Metastock as well. And we have multiple scans that are kind of included in there. Like if you run our price pattern scan, this is going to allow you to look for different fry pan as well as bullish belt hold. I won't read these all off to you guys, but these are all the multiple day patterns. We also have a single bar or single day patterns. So you're probably familiar with like a doji or like the bullish engulfing and bearish engulfing, etc. And so we're going to be going through a lot of these different signals. And after Steve presents today, I'm actually going to do a real quick demo inside of Metastock and kind of going to showcase some of these. I'm actually seeing a microphone for Steve. So
yeah, my sound is off, Bobby.
Perfect.
Okay. All right, now I'm back on. Should I do the video cam?
Yeah, that would be great. Currently, it's just me on video with my messy hair here. Let me.
Yeah, me too. Me too.
Oh, yeah, okay, great. So we're both ready for Monday, right?
Yeah. Okay,
all
so
right.
now need to share the screen, right? Let me
yeah,
see.
I'll send you. I'll make you the presenter here.
Okay.
All right, you should have a pop-up there that you can click on.
Show my screen now.
All right.
Which one is it sharing?
So I'm seeing the connected to GoToWebinar in your internet browser.
Okay, now how do I, show screen, number 3.
There we go. Now I see Candlestick Trading Forum, MetaStock.
Yep.
All right. Perfect.
All right.
Well, yeah,
Okay.
I'll let you do your thing. I know you know what to do. And then I'll be here at the end to kind of go through things as well.
Okay, great. Welcome, everybody. Sorry for the delay. I was just sitting here waiting for the sound to come on and had to click on a couple of things. So the first question I always ask is, how many people have seen my presentations before? I guess Y for yes, or yes, N for no. Whoops, I don't see anything yet. Oh, there we go. No, all right. All right, any more? All right. Well, my name is Steve Bigalow. I came across candlesticks by accident, 30 some odd years. I've already written 3 books on how to use candlestick analysis effectively. And the reason they're written simply so people can understand is prior to candlesticks coming along, I was the worst investor in the world. I was even a stockbroker for 8 years, and I realized that the brokerage firms had no more ideas about what made prices go up or down than the man on the moon. So I started learning candlesticks, and I discovered there's about 50 or 60 candlestick signals that the Japanese rice traders have illustrated over the last 400 years. However, there's only 12 that you need to learn. And the reason we call those the 12 major signals is because they are the ones that occur 99.9% of the time, and they're the ones that are going to produce the major change of investor sentiment indications. So the one thing I've learned once I've identified these signals, back then, there was nobody to confer with. Again, this was over 35 years ago. I would always, I mean, when you're trying to learn something new, it's always good to have somebody around where you can get a second opinion. And there was nobody around to get a second opinion. The only time I could get a second opinion is when I'd go to the doctor. I'd say, "What's wrong with me?" And he goes, "You're fat." I said, "Well, I think I want a second opinion." He goes, "All right, you're ugly too." So I learned every single signal that I could. And then eventually learned that these are the 12 major signals. And the big thing that I learned about candlestick analysis is prices do not move based upon fundamentals. Prices move based upon the perception of fundamentals. And the Japanese rice traders had very simple logic. They would say, where do most people buy? They buy exuberantly at the top. Where do most people sell? They panic sell at the bottom. And the reason I became so good at candlesticks is I could see where I was panic selling at the bottom or getting all my clients out at the bottom and thinking, or a rhetorical question was, how come every time I get everybody out, the thing turns around and heads straight up? Or every time we start buying, it turns around and heads back down. That's just because the Japanese rice traders were able to illustrate to us what indicates the strongest price moves. And as we go through this, we're going to go through some moves that not only are high probability movements, but high potential movements. And the patterns, we can see the patterns that the Japanese rice traders have illustrated to us over the last 400 years, and how to use those signals and patterns. This is what we call a trend kicker signal. Notice how it opened here and closed down here, creating a dark candle. Then they gap it up through the breakout area. That tells us exactly what's happening coming out of this fry pan bottom, which is what the Japanese rice traders have illustrated is a high probability trade setup. And not only a high probability trade setup, but produces big price moves. Oh, so just so that look, if you have questions as we go along, Bobby, how long do I have? I mean, is there anybody behind us?
So actually, I'm the only person behind you, and I ended up presenting earlier today. So you have as much time as you like, but about an hour, I would say.
All right, I'll keep it less than an hour so we don't all doze off. But here's the high probability trade setups. What the Japanese rice traders have illustrated to us about what happens in investor sentiment, a big buildup. You couldn't trade this up or down if you wanted to until you got out into this area and the breakout. Now, through the years, I've seen so many people demonstrate how their successful trade setups work. Well, I imagine every single one of you have been told that you want to cut your losses short and let your profits run. And I've been trading for over 45 years, and I have never heard somebody tell you how you cut your losses short and let your profits run. It's very simple logic when it comes to candlestick analysis. You want to get out of the trade or into the trades that are going to work. You want to get out of the trades that don't work. So if we have expectations of a fry pan bottom breakout and it does this at the breakout level, you close it out or you don't get into the trade. So this is just simple logic. Where should a pattern be breaking out? Well, we can see visually what everybody is doing right at levels that everybody else is watching, like the 50-day moving average and the 200-day moving average. So the big advantage we have with candlestick analysis is it tells you when something new is coming into a sector. It tells us when to buy and when to sell. So here are the indicators that I have on my charts. The 200-day and the 50-day moving average, simple moving average. We don't use those to make our decisions. We're using those to see what everybody else's decisions are. Every major money manager around the world uses the 200 and the 50 to make their decisions about their portfolio. This black line is the T line. I'll go into that here in a second. But there's very simple logic when the Japanese rice traders show us when to be buying and when to be selling. And part of that is, if you see a candlestick buy signal close above the T line, the 8 exponential moving average, you can start buying and hold it until you see a candlestick sell signal and a close back below the T line. With the caveat that the further away you move from the T line, the higher the probability it's going to come back and test it. So anytime we see that type of setup, the dojis, one of your 12 major signals, well, for crying out loud. You stay in a downtrend, and then doji, doji, doji. Remember, or I say remember, a doji represents indecision between the bulls and the bears. So you're in the oversold area. I use stochastics at 12.33. And so there's very simple logic based upon the Japanese rice traders' criteria. If you see a candlestick buy signal in the oversold area, the probabilities are pretty strong that you're now in an uptrend. If you see a candlestick sell signal in the overbought area, the probabilities are pretty strong you're going to be starting a downtrend. So the T line is an indicator that we've come up with over the last 20 years. The T line has Fibonacci characteristics. It acts like a natural support and resistance level of human nature. So there's a very simple logic to all of that. If you see a candlestick buy signal and a close above the T line, you can stay long until you see a candlestick sell signal and a close back below the T line. Now, why is that important? Because being the worst investor in the world, all my trades were done on emotions. So what's the normal reaction to a trade that has a big profit or starts acting profitable? What's the biggest fear of most investors? Boy, would I look stupid if I had a profit and I let it turn into a loss. So I'm going to take profits just because I have profits, which has absolutely nothing to do with what the price trend is doing. So here is a very important truism that if you see a candlestick buy signal to close above the T line, you've got an extremely high probability that you're going to be in an uptrend until you see a candlestick sell signal to close back below the T line. Now, the reason this is important is that the T line has natural support and resistance levels of human nature. So here's the most important statement of this whole presentation. If the candlestick signals are the graphic depiction that illustrate what's occurring in investor sentiment, which works extremely well, or we wouldn't be looking at them 400 years later, and the T line acts like a natural support and resistance level of human nature, when you combine those two, you've got an extremely strong trend analysis confirmation. And this is what keeps your emotions out of your trading. If you see a candlestick sell signal and a close below the T line, you can stay short until you see a candlestick buy signal to close back up above the T line. Same scenario. If you're in an uptrend and your uptrend finally sees a candlestick sell signal to close below the T line, that's the high probability of that's when you want to start taking profits. The T line is the 8 exponential moving average. You put it on your chart just like you would the 50-day simple moving average or the 200-day simple moving average. So having that information allows you to take advantage of the investor sentiment breakouts. We started buying the artificial intelligence stocks even when the rhetoric out there was, oh, stay away from artificial intelligence. It could destroy the world. Well, we started buying because there's your alert. There's your gap up best friend. There's your J-hook pattern, which we'll get into. And then how long are we holding this? Until we see a sell signal and a close below the T line. Now, there are times when you see a sell signal. This is a bearish engulfing signal. But look what it didn't do. They didn't close it below the T line. So this is what keeps your emotions out of your trading. If you see a good reversal signal, like a piercing signal, double bottom, close above the T line, you just stay long until you see a sell signal and a close back below the T line. Now, the important factor is you'll see so often where the T line acts like a support level or a resistance level. And the reason that's relevant is nobody has the 8 exponential moving average on their chart. So it's not like everybody's waiting for it to open or trade back to that level. We've discovered that it is the level that is illustrating the natural support and resistance level of human nature. Same scenario on the downside. If you see a sell signal in the overbought condition and a close back below the T line, and at a level everybody else is watching, the 50-day moving average, you can stay short until you see a buy signal and a close above the T line, with the caveat that the further away you are from the T line and you're in the oversold area, you're going to be more alert to get ready to take profits on the short side on any buy signals. So this can be broken down into specific power signals, like the best friend signal. The best friend signal, when we do our top ranked signals and patterns, there's about 18 of them. These are the combinations of the signals and patterns that not only produce high probability results as far as direction, but high profit results as far as the magnitude of that trade. These are what we call the trades we like to get stuck in. Because once you see the buying right here, there's your best friend signal, a doji in the oversold area, and a gap up and a close above the T line. If it opens positive the next day, now you're in a long position where you don't have any analysis to do each day. So how long does it take us to analyze this chart each day? About 3 seconds. Say, well, we're still above the T line, we're still above the T line. Oh, they open it down here, but closed above the T line. So this is not rocket science. This is just applying the information that the Japanese rice traders have provided for us over the last 400 400 years. Now, I always tell people the Japanese rice traders did not become wealthy trading candlesticks. They became legendarily wealthy. They were the financial powerhouse in Japan for centuries. And they did it on the most boringest commodity in the world, rice. So anytime we're in the oversold area and we see that best friend gap up, that tells you there's a lot of power coming into this. Not only did they tell you there's going to be a change of investor sentiment, but that change has a lot of strength to it. This is where the combination of knowing what price movements do based upon candlestick signals and patterns. AEHR, we recommended this because it gapped up. Then it did a J-hook pattern. You can see how the consolidation occurred, and then notice where they supported. Right smack dab on the T line. Wave 1, wave 2, now in wave 3. So anytime we see that doji best friend gap up, we know the probabilities are not only strong that we're going to be heading in the right direction, but in a very strong price move. Same thing works on the downside. The Japanese rice traders illustrate to us the bigger the signal, the more compelling there's a downtrend. And then we have the advantage to observe the obvious. Look where this doji, which is a day of indecision, right smack dab at the 50. Now there's a doji rule, just like there is a T-line rule. The doji rule is the price will usually move in the direction of how they open after the doji. So if we were long and we saw this, it would have to open positive and trade positive to stay long. If it opened lower, it told us they failed at the 50. There is still more downside. So knowing what these patterns represent allow us to take advantage of what the Japanese rice traders have illustrated to us. The J-hook pattern is just one of the about 8 different patterns that you'll recognize that human nature does time after time. It looks like a J-hook, and the prerequisite is a strong price move, wave 1. Wave 2 usually pulls back, and it usually pulls back right to the T-line, which we can identify. And then wave 3 is usually going to be the same magnitude as wave 1. So if we see wave 1, and we see this pullback, and then a buy signal, we can pretty much calculate that this move right here is going to be the same move as this. There's our target. That allows us to have all sorts of very strategic strategies that if we're buying calls right here, we continue to see it move, we might be buying spreads up here with very little money involved, but the profitability will be extremely good because we can recognize what the direction is. So the J-hook pattern has 2 places where you can buy. This is what we call a doji sandwich, a bullish candle and a doji. The doji rule says the price is usually going to move in the direction how they open after a doji. That positive trading, this candle right here is usually going to be the same magnitude as this candle with the doji sandwiched in between. And the implication is pretty strong probabilities you're going to have more upside. So you could either be buying here, watching to see what happens here, or you could be buying in here, knowing that they broke out through this level, that wave 1 and wave 3 are now going to be the same. So again, this is not rocket science. This is merely taking advantage of what the Japanese rice traders have illustrated to us over 4 centuries, that prices move and human nature trades in the same way. So look at your best friend signal, wave 1, pull back, and then there's your kicker signal, one of your strongest reversal signals. So when they did the kicker signal, we could already see the J-hook setting up. If we're buying right here, where's our anticipated target that everybody else would be watching for? Up here at the 200-day moving average. Because if wave 1, wave 3 is going to be the same magnitude as wave 1, this is where you get a much greater advantage of knowing whether to be buying stock here, buying calls, buying spreads, because we know where the high probability target will be. Would you support a rule J-hook buy when the opposite candle is green? would you support a rule J hook buy when the opposite candle is green? Walter, I don't understand that. This is still a signal right here. So if we've got wave one, we can see the pullback's indecisive right back to about the T line, and then they're gapping it up. We can pretty much now estimate that we could be buying on strength because the J hook is in progress. And then what's our simple rule to stay in this position? You stay long until you see a sell signal and a close back below the T line. These are all high probability situations. Wave two, right to the T line, looking for wave three. So a J hook gives you much more clear analysis of what's going to happen at resistance levels. If you can kind of calculate, there's a resistance level right here. That's right where that sell signal and evening star signal occurred. But notice what they couldn't do. They couldn't close below the T line. So when the buying starts, what's our calculation? There's wave one. If wave three is starting and they're going through this level, which we can see immediately, we're buying right here with the anticipation wave three is starting because everybody else could see that it was through that resistance level and they're going to start coming in. So the J hook plus is even a more visually advantageous pattern. Wave one, wave two comes right back smack dab to a level that everybody else is watching. This is what we call left-right combo. It's one of your strongest reversal signals, a doji followed by a bullish engulfing signal. You add the fact that it did it right at a level everybody else is watching. When they gap it up the next day, we've got a very strong indication that wave one and wave three are now in progress, which means more than likely the resistance level of the 200 is not going to be a resistance level. Not all J hooks are successful. I found that there is a higher probability when the actual candle of J hook is green. The actual candle of a J hook is green. Yes, that is true. So, for instance, if this was starting a J hook pattern, and then this day they opened here and closed down here, that would tell us that J hook pattern wasn't working. You close out the trade. All these price moves are based upon what human nature has illustrated for hundreds of years. So there's a very simple trading strategy. You stay long in wave three until you see a sell signal close below the T line. Now, does that mean every trade is going to go up? Absolutely not. But through the years, I've discovered that probably 70% of my trades are successful. Now, some of them are only 0.3%, some of them are 300%. When I was first in the brokerage business, somebody was telling me that if you were trading commodities and you could hit 50% of your trades successfully, you'd make a fortune. And I'm thinking, man, oh man, if I'm hitting 70% of my trades successfully, I'm going to be wealthy beyond all expectations. However, there's one statistics that most people forget, that if 70% of your trades aren't or are going to be successful, 30% of your trades aren't. So I used to get so upset with myself that I put on a trade because everything's set up perfectly, and then it didn't work. And I'm sitting there thinking, what's wrong with me? Am I stupid, or did I misanalyze this? And then through the years, I discovered no matter how well things set up, there's going to be approximately 1/3 of your trades that don't work. That becomes a very vital part of successful investing, is knowing when a trade's not working so you can close it out quickly and move on to another trade that has much better probabilities. So you can see how we had a left-right combo gap up. Anytime you see a candlestick signal followed by a gap up, that's usually telling you not only have they had a change of investor sentiment, but that new change of investor sentiment is going to be extremely strong. So this is where we can take advantage of as we did in AMAT, notice when it came up through the 50, there's a very common practice of human nature. When they come up through a resistance level, they'll come back and test it to see if that resistance level is going to act as support. We can see immediately that it was acting as support because there was that indecisive trading at the 50, followed by a bullish candle, your morning star signal. What was our next anticipation? It's coming up to the next resistance level, the 200-day moving average. An even more decisive J-hook pattern is what we call the bobble breakout. You can see wave one came right up to the 50, which had been acting as resistance. But then when it pulled back, notice what it did. That's a hammer harami. And they couldn't close it below the T line. When it opened positive, we could be buying right here because we could see the bobble breakout where they came up, they bobbled it, and then they broke it out. Now, why are we buying right here? Because we got a J-hook pattern. If you took out the 50, you essentially have a J-hook pattern. The reason this becomes more relevant is we're watching the J-hook pattern at a level that everybody else is watching. When it comes through the 50, everybody and their brother is saying, boy, oh boy, let's jump in, because how many have you been, or how many have you heard or been taught that you don't buy and if it's trading below the 50 or the 200? That doesn't mean a hill of beans. What we're doing is buying price, not what's happening at the moving averages or using the moving averages to make our decisions. So anytime we see this resistance and then they do the J-hook pattern, we know we've got a bobble breakout right here. It's going to the next resistance level. Then we can see what's happening here. This was a bobble breakout. This was your J-hook plus. So if we're taking profits in here, we're buying back here because we know exactly what they're doing at the levels that everybody's watching. Whoops, I don't want to. So on something like this, you can see the J-hook bobble breakout. That tells you there's probably a lot more upside. So these are just basically high probability trade setups confirmation. And for example, the fry pan bottom is a junky trade. What we're looking for is that gap up or that breakout. So anytime we see this fry pan bottom, what we're looking for is...
Hi, Kelly Clement here from Metastock. Before you go, I have two quick things for
you. In the overbought area. So you can see how this was setting up. You couldn't trade this one way or the other until they gapped it up out of this fry pan bottom through the 50. That gave us that much more evidence that the bulls were in control. Fry pan bottom, there's your breakout level. So the rhetorical question is, do you always get big price moves on these breakout levels? Definitely not. What you do have is the probabilities that you're heading higher and the probabilities that you will be in one of these big moves at a pattern breakout. So essentially, knowing what investor sentiment is doing, building up, allows you to take advantage of being in the right place at the right time. So the opposite of the bull or the fry pan bottom is the dumpling top. You have a slow rounding curve. Basically, what this is illustrating is bearish sentiment starting to build up, and then bam, they slam it down. So not too long ago, we were in Dollar General because there's your dumpling top. Notice how they started selling it off here and then gapping it down. This is the type of moves that you're more likely going to be in based upon a pattern setup. So the reason they work is they have proven results. They've been used for 400 years. The kicker signal is one of your strongest individual candlestick signal. It opens here, closes here. The next day they gap it up and go the opposite direction. Or essentially the investor sentiment has been kicked in the opposite direction. Moderna, Notice how long you would hold on to this. So you see the candlestick sell signal close below the T line with your J hook plus right here. Or a bearish kicker signal. They gap it down. That's pretty much a strong illustration that the bears want to get in this, or the bulls want to get out as fast as possible. And how long do you hold on to it? When you start seeing indecision in the oversold area and they close it above the T line, that's where you're starting to take profits. Or you start taking profits in here, because what are the probabilities starting to tell you? You're in the oversold area, you're seeing lots of indecision. That's exactly where you're going to start seeing a change of investor sentiment. This is a trend kicker signal. You can see the fry pan bottom. A trend kicker signal opens here, closes here, opens at the previous day's open, goes the opposite direction. That's telling you there's still lots of bullish sentiment in this trade. Where is it happening? Right off the 50, confirming the fry pan bottom. So every trade we set up, we're just looking for what would have high probabilities. Wave 1, wave 2, opens positive in the overbought area, but where do you think the next target is? Wave 3 is going to be the same as wave 1. That's where you start watching for sell signals. Now, candlestick signals work on all time frames. The definition of a candlestick signal and pattern, it is the accumulative knowledge of everybody buying and selling during a specific time frame. I used to trade the E-minis off the 1 minute, 3 minute, 10 minute combination. Right now I trade commodities usually using the 10-minute chart as my bellwether, and then buy on the 5-minute chart. Long-term investors may use a combination of daily, weekly, or monthly. I'm a swing trader in my stock accounts, which means I'm usually using the daily chart. So my average trade is anywhere from 2 to 10 trading days. But as a day trader, if you see something happening like this, and this is the advantage of our chat room, is you've got 150 people in there all looking for the same type of pattern setups. But if you see somebody says, oh, look at HPCO, they've gapped up, kicker type signal, the question is, should you be buying here, buying here, buying here? Well, remember, they work on all time frames. So you flip to your 10-minute chart. You can be buying here, 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 here. You may not be buying in here. As a matter of fact, you might even be taking profits right here when it came back below the 10-minute T line. You might be buying back here. These are buy signals. And you re-engage in the day trade. If you see something like this, remember what the simple trading rule of the T line. If you're trading up here, where are you to the T line? A good fur piece, as they say in Texas. How do you trade that if you catch that? You go to your 10-minute chart and look where you are seeing some indecision up here. Look how far away you are from the T line. I hope I did mention that. The caveat to the T line was that the further away you are from the T line, the higher the probability it's going to come back and test it. So you take your profits. And there would be two places to take profits. This is open here and headed up. You can see how far away you are from the T line. You put your safety stop right here. If you didn't, your next safety stop would be right there at the bottom of the doji. So here's just simple logic built into candlestick analysis. If that's a change of investor sentiment, look at all the indecision down here. And then they close above the T line. That tells you there's a new alert that something big's happening. Now, where would you start getting ready to take profits? When they gapped it up and started trading positive, look how far away you are from the T line in the overbought area. Very simple. You put your safety stop right there because logic says if they're taking it up, something good's happening. If they come back down through that level, this is where the smart money is probably starting to take profits. And this is what has changed my my investment perspective from being the worst investor in the world, now being able to recognize where the smart money is buying and selling. All we're doing is graphically identifying where The exuberances come in. Where do most people buy? They buy exuberantly at the top. Where do we set our safety stops? What are the high profit, high probability trade setups? There's your J-hook pattern. There's your left-right combo. So same scenario. If you're in a downtrend in the oversold area, where do most people sell? They panic sell at the bottom. Everybody's always asking, how do you know when to grab for the fallen knife? The charts will tell you when there's been a change of investor sentiment. Look at your left-right combo, one of your strongest reversals. You can start buying on positive trading. Where you might take profits. There's your evening star signal, hanging man signal, all major, of the 12 major signals. And look where they pulled back to, right smack dab to the 50 and couldn't close below the T line. You could be buying again right here with the expectation of wave 3 being the same as wave 1. Bearish signal. This is what we call a McMuffin. The morning star signal is a 3-day pattern with a big down day, a day of indecision, and the third day is a bullish candle that closes more than halfway up this candle. Notice how this one gapped up and then closed well above the halfway point and above the T line. Then it's followed by a doji sandwich. So the morning star signal is one of your 12 major reversal signals that tells you the bulls are probably taking control. The doji sandwich is another bullish signal that tells you the bulls are probably in control. And so when you combine those two, you've got the morning star followed by a doji sandwich, or your morning sandwich. That's your McMuffin. That's an extremely high probability reversal signal. So here's the simple logic built into candlestick analysis. See a strong signal like a kicker signal, that starts your uptrend. What do the Japanese rice traders tell us where everybody exuberantly buys? At the top. They gap it up. Look how far away you are from the T line. That's a good place to take profits, and you don't get back into this trade until it comes back up into new highs. Everything built into candlestick analysis is just simple logic put into a graphic depiction. I know a lot of you, or I say a lot of you, I used to follow all these analysts that would say, oh, you want to be buying XYZ, you want to be buying Apple because if their earnings do this, they have no more idea where the price is going. Candlestick analysis gives you a much greater probability because the charts are indicating what investors are actually doing, not conjecture. Could you briefly summarize the time frames you use for trading equities intraday and day trading? Are you using the lower time frame as an entry and exit strategy? Let me go see if I can go back one. Go back a couple. This could be a 5-minute chart, a 10-minute chart, a 1-minute chart. If I'm trading soybeans or cattle or the dollar, I'm using the 10-minute chart. If I'm getting ready to buy and I see this on the 10-minute chart or even seeing the setup, I might flip to the 5-minute chart and say, what's this look like on the 5-minute chart? Is the 5-minute chart still trading up, which would be confirming the 10-minute chart? Back in my younger days, which was many years ago, I would use the 1-minute, 3-minute, 10-minute combination trading the E-minis. Now I don't have time for that because we're usually, I'm in the chat room a good portion of the day, as well as analyzing which new trades are setting up. So our chat rooms are open all day long. And as I said, we've got about 150 people in the main chat room. They're all looking for good price moves. So the what we call putting all the stars in alignment is if we can analyze very effectively which way the market is going, the market indexes, and then we can see which sectors are the strongest in that price move, then we can even move down to say which stocks in this sector are acting the best. And that can be done both on the bullish side as well as the bearish side. So every time I put on a trade, I know the probabilities are in my favor because we know what to expect based upon the expected price moves of human nature. And it also gets us out of bad trades immediately because we have the expectation of what it should do. And when it doesn't do that, we just close out the trade and move on to something else. Are you using a lower time frame? If the market opens, let's say, negative, I mean, let's say we think the market's in an uptrend and it opens lower that day and the stock we're watching opens slightly higher, yeah, we don't have to jump in. We can watch to see what the market is doing and then see what that stock is doing. So there's 4 quadrants of how do you enter a trade. One, if the market opens higher and the stock you're looking at opens lower that you think should be trading bullish, well, you don't go after it until you see it trade back up above the previous day's close. If the market opens lower and the stock you're trading opens higher, you don't have to jump in right away. You can watch to see what the 5-minute and 10-minute chart are doing on that individual stock and watch to see what the market is doing. If the market opens positive and the stock that you were looking at that was confirming a buy signal opens positive, yeah, you can buy it within 90 seconds. And then if the market opens lower and the stock that you're looking at opens lower, tells you, oops, today's not the day to be buying. You don't execute that trade until everything turns around. All right. So if we thought the indexes were going to open lower, now remember, these work on all trading entities. Candlestick analysis is the graphic depiction of everybody buying and selling during a specific time frame. Doesn't matter whether it's stocks, bonds, currencies, commodities, tulip bulbs, anything that has fear and greed in it. Fortunately, Metastock has our scanning program where you can scan anything, anywhere, no matter where you're trading. So logic says if we think the market's going to open lower tomorrow and trade lower, we want to go after the ones that have strong down moves. If we think the market's opening positive and trading positive, we want to take advantage of the fry pan bottoms or the other patterns that are going to produce high probability trades. So Jeff, Gibby, and I have been working together for probably at least 15 years now, putting all our formulas on the on Metastock. And I'll let Bobby kind of explain, not only does it identify the signals and patterns for you, but it also describes what those signals and patterns are and what the results should be. So again, I tell people constantly that fundamentals do not move prices. The perception of fundamentals move prices, and all that is built into candlesticks. A lot of people ask me, don't you look at the fundamentals of a company before buying? And the answer is no, because 90% plus of all investment decisions are based upon fundamentals or the reasoning to buy or sell because of fundamentals. All we're doing is identifying what everybody else's decisions are based upon those fundamentals. So that's about all I got. Are there any questions out there or anything I need to clear up?
Yeah, thanks, Steve. It looks like there's a couple of questions that came throughout the presentation. I can read those off to you if you like.
Go right ahead.
All right. Well, you probably said what this one was, or we might have missed it, but can you tell us what the T line is once again?
The T line is the 8 exponential moving average.
Perfect.
Why it acts like a natural support and resistance level of human nature, I have no idea, but it does. So I tell people, don't be afraid to put it on and try it. You'll find there's an extremely high correlation of where prices confirming that that is a natural support and resistance level. So I tell people you don't have to overanalyze candlestick charts. Once you learn the candlestick signals, you're basically looking at a probability factor that the Japanese rice traders have observed for us over the last 400 years of when there's going to be a reversal. I always kind of use the illustration of the lady that brings her parakeet into the vet and lays it down on the table and says, "Can you help my parakeet? He's been my best friend for years." And the vet says, "Ma'am, I think your parakeet's dead." She goes, "Oh no, isn't there something you can do to oh, he's been such a good friend." And the vet says, "Okay." So he goes to the back of his clinic and comes back in with a cat, lays the cat next to the bird on the table. The cat kind of sniffs it, looks up at the vet, shakes his head, and he goes, "Ma'am, I'm sorry, your parakeet's dead." And she goes, "Oh no, you're sure? Isn't there something else? Do you have something to tell?" "Oh, and something else." And he goes, "All right." So he goes back to his clinic again and comes back in with a great big Labrador retriever. Labrador retriever comes bounding in, puts his paws up on the table, sniffs the bird, looks up at the vet, kind of shakes his head and goes, "Ma'am, I'm sorry, your parakeet's dead." She says, "Oh no." And so they go out to the front of his office, and he goes, "All right, well, that'll be $250. She goes, "You're charging me $250 just to tell me my parakeet's dead?" He goes, "No, ma'am, I would have done that for $18. Then you wanted a live report and a CAT scan after that." So you don't have to overanalyze candlesticks. They are the information that's telling you exactly what everybody else is doing. All you have to do is learn the 12 major signals and the patterns, and you're going to be way ahead of everybody else.
Fantastic. Thanks, Steve.
All right.
Love that analogy. One more question here. So someone asked if you could summarize the time frames you use for trading equities intraday and day trading. He wants to know if you use lower time frames as an exit signal.
Yes, and that's all based upon what your trading technique is or your trading style is. If you're day trading something, you might use a 1 minute, 5 minute, 10-minute combination. So you're in and out 4, 5, 6, 7 times a day. If you're day trading something where you're only in and out 2 or 3 times, you're using a 5 minute, 15-minute combination. So because the candlestick charts or the candlestick signals work on all time frames, all you have to do is kind of research to see which one of those time frames or multiple time frames work the best for your trading. Are you using? Yeah. So if the as far as an entry and exit, yes. If I'm not sure what the market's doing, and I'm getting ready to buy something, I'll watch the 10-minute chart to see if the that trading entity, that position is starting to come up, and also watch the 10-minute chart on the indexes. If I'm ready to get out, again, using the parameters that the further away you are from the T-line, the higher the probability there's going to be a change or come back and test the T-line. If I see something that is way up in the overbought area, got good profits, and now you see that exuberant buying coming in, moving much further away from the T-line, now I'll flip to my 10-minute chart and watch the 10-minute chart, because the logic says if I'm already too far away from the T-line or way far away from the T-line on the daily chart, let's flip to the 10-minute chart and tell me when the selling starts. That's where we take profits.
All right. Perfect.
All right, everybody. Bobby,
Well,
what
thanks
else?
so much for coming on, Steve. Yeah, I'll go ahead and showcase some of the tools that we've been building with you and kind of let everyone know how that goes. Thanks so much for joining us and for presenting today. You always do a great job. You always get some laughs from me and our viewers. So thanks again.
All right. Thank you, everybody. Have a good afternoon.
All right, guys, so I'm going to actually show you some of these tools and how they're built right into Metastock. So let me go ahead and make myself the presenter here. All right, so right here, I have a chart. This is just a chart of forward, a basic one that I've opened up just to kind of show you guys Metastock and what I've, and some of the systems that we've built with Steve. So what I've done is I've applied, this is one of the 3 templates that we have with him currently. This is the candle profit system template here, and you can see all these different candlestick patterns are being identified right on my chart. As well as I just have like some moving averages and things applied here as well. And what I want to actually show to you guys in regards to this is some of the commentary that comes with this as well. So if I click here, where actually are we today? So here's the arrow that I just moved this over to. And so you'll see on this candlestick right here, this blue one, this is a left-right bullish combo. And it's letting me know that's what that pattern is. And say maybe you don't remember off the top of your head, like Steve, what that means. You can come over here into the expert commentary, and this is going to let you know that a left-right combo bullish is a bullish signal. It's a doji followed by a bullish engulfing signal. And then it lets you know how you can actually take advantage of that in your own trading. So it says traders can take advantage of this signal and look to go long with prices in the oversold area, but that's not a necessity. And it's letting you know the oversold area are stochastics below 20. And if you look at my template here, I have the stochastic oscillator applied right here. So you can just look down here to see if it's over the 20 or not. I know I just docked that, might make it harder to see, but you can look down here. So that lets you reference this. It also has some enhancements in here. So other things you can look out for when identifying those patterns and what they look like. And that's just one of the many. Let's look at another example here. So I'm going to go ahead and open up Apple. And with this one, I actually might have typed that wrong, I just realized. Oh, I did type it wrong. AAEL.O. Let's open that up. So this is Apple, and this is just a standard blank chart. Oops, I'm clicking on the wrong things here. I got to slow down. Let's close that down. So I showed you the template just barely. I'm going to show you the expert advisor. So I come into here, and I'm going to scroll down. Oops, I scrolled too far to CPS, Candle Profit System. And we're going to go ahead and click OK. Now this one, there's a little less going on. This isn't the full template. This is just the expert advisor. So you can still see it still gives me some color coordinations. I have this set as bars currently. Let's go ahead and update that to candlesticks. Oops. Candlesticks, apply, OK. So now we have the candlesticks here. And once again, these are being identified. And I can actually well, let's actually go into the properties for that, and I'll show you guys a little bit more. So if we go into the expert properties, I can actually see a full list here of all the different symbols that are identified and the symbol that's going to pop up. So normally if you have like an up arrow, that's somewhat of a bullish signal. And if it's a down arrow, that's going to be normally a bearish type of signal. But you can even go in here and customize these. So if you really love the Doji Best Friend, and you want that to show up as something else, you could come in here and you can, attach a different symbol to that if that's something that you really want to be able to easily see on your chart. You can also run scans. You've seen a lot of our presenters today run their different scans in our Explorer and Metastock, so you can search for different candlestick patterns really easily by simply running these different scans. But you can see just how easily they're all identified here, and we have color codings and everything on them. There's a lot of different symbols that show up. I guess I should also mention, if you're inside of these properties here, you can turn these off. If you don't care to see some of these different patterns, you can turn them off so they're not showing up on your chart or cluttering your chart. You can also go in and rename them or abbreviate them or look at the symbols behind them. There's also different highlights that show up. As you can see here, and you can change these as well. So you can really kind of make it show whatever it is that you want to be able to see, but it really simplifies those patterns. But that's not it. You don't just have those expert advisors and the template here, you also have explorations as mentioned. So if I come in here, I'm going to type in CPS. So you can see we have the several different scans in here, including like a universe scan, which will help you identify just high volume securities that are within a certain range. So then you can potentially just run your scans off of that universe that you've created initially. But you can look for J-hook patterns. And if I hover over that, it's going to tell me what's included in that scan. You can do major patterns. So just this one scan will actually search for all the different, the 12 major price patterns that are in there, as well as we have power signals, doji dynamite, etc. So you get all of these explorations included. I guess I could also kind of show you what that looks like real quick. So if I just click on the power signal scan, and from earlier today, I ran a scan on it was the FTSE 100. So we'll go ahead and do that scan again. And we're loading 5 records of data. Oh, I also have the MACD expert system selected. I forgot to deselect that, but that's fine. We'll go ahead and let that one run. And there's the results for that. So actually what I did is I had this set up to first search for MACD crossover and then search for candlestick patterns that match up with that. It's actually a really interesting, nice thing that you could do with Metastock, but because I only had 9 results on the MACD, none of those 9 today had one of the CPS patterns. So I'm actually going to come in here and let's remove that MACD from this scan. I also could have done them as separate explorations entirely within one scan. So you have a few different options here, but let's see if we have anything show up this time. Once again, not. And the reason for this, I believe, is because I'm doing the power signals, and there's actually a lot of criteria in order to get the power signal. I actually meant to do these major patterns here. So none of the FTSE 100 were showing me a power signal today, which that's all right. That means it just saved me from looking at 100 different charts to see if they had a power signal. But if you scan a larger universe of securities, whether it's stocks or commodities or options, etc., you're likely to get more results. So now that I've ran this scan in Metastock, these are all the different patterns that it searched for. And if I just filter by these, I can see, okay, so these 3 securities in the FTSE 100 have a doji signal today. That's what that means. Here in the engulfing, I can do the same thing. I can see those. These have it as well, like bullish, and then these ones down here have bearish, and etc. So that's how you would go through and run these scans. And you have multiple different scans included inside of the system. So not only do you get to see them on your chart, you can search for the ones that you want to find. You can kind of create your own universe or watch list of securities to scan through. And I've got to say, this has been our top selling trading system with Metastock for a couple of years in a row now, or actually, I think even several years, because this is the version 2.0, and previously the CPS 1.0 was a top seller too. So this just allows you to identify so many different things, and it's going to save you so much time in your analysis. And let me actually jump into my PowerPoint here, and we can go through some more of the details. So I showed this to you guys right before Steve was speaking for us, but you can see these are the multiple day patterns because you get multiple days as well as the single bar signals. And here's a list of those. And Metastock will identify all of them for you. It'll give you pop-ups for all of those. You can scan for all of them. You also get commentary on all of them. And this is all from years and years of working alongside with Steve Bigalow to put all of this together. So all of this is created with him and his expertise knowledge. The full system has 6 explorations, an expert advisor, 3 layouts or templates, and 36 different patterns currently. And the retail price for this is just $499 for our top selling add-on. But as part of the Euro Summit webinar special, we'll let you guys pick that up for just $399. I mean, the amount of information that you're getting in there, the amount of time savings for just $399 is absolutely fantastic. And if you don't have Metastock already, we'll give you a trial of Metastock to have along with the service as well. And as always, we'll give you full support on Metastock and getting everything set up and put together. And that's actually not all that we've done with Steve. This goes a length farther as well. So we've also, over the years, put together a Candlestick training boot camp with Steve, where he does market trend analysis. He identifies all the most robust Candlestick trade setups. He shows you how to enter, how to get out, when to close, everything you can think of. So this is actually 10 hours of recorded training from Steve. So this is significantly in depth on all of this to help you get the most for your money on the candle profit system. Once you truly understand how everything works, you're going to make even better trades and save even more time. So you get all of that. And normally that training course for 10 hours of Steve and his knowledge, you're looking at $8.99. But once again, we're going to give you guys the webinar special, 50% off. That's just $4.49 as a one-time cost. If you want to get his expert training boot camp, so if you're already a user and you were looking to just pick up his boot camp, you can get that. Or the best offer as far as the candlesticks go, we'll give you the add-on plus the 10-hour boot camp, plus a free month of Metastock Real-Time and Zenith and our Unleash the Power Metastock, a full bundle, so you get the add-on, all the training for $698. So that's a saving about 50% versus what we would normally charge at the retail rate. And you can chat with us at metastock.com/sales chat to take advantage of that. Or if you want to get even more value for your money here, I've said it a couple of times today, but we have a Metastock Euro Summit Traders Pack available. And so what this pack includes is Steve Bigalow's candle profit system. It includes his full 10-hour boot camp as well. And you get the Paragon Trading Toolkit and the full 6-module training course that comes with that, as well as Daniel Sinnig's Power Bundle 360. And he's put together a boot camp video with us as well. All of that, plus 3 months access to our LearnMetastock.com. This is a partner of Kevin Nelson. He's created the LearnMetastock.com brand and website, where he's dedicated himself to far more in-depth training on Metastock, and he has hundreds of hours of recorded training. Plus, he does live weekly classes as well. So we're going to include that too. So the total value here is $5,187. But if you get the full Summit pack, we actually give you more than 50% off for getting everything at once. So you can save even more on the CPS and the bundled program, plus getting our other strategies that we've shown you today as well. And I mean, you really can't beat that price. We really had to jump through some hoops to be able to get the price down this low. So this is a limited time offer. And if you guys, if you're an active trader, these systems are designed to help you do analysis of the market and to help you perform better in your trading. And so really, this is an investment, and you're not going to get really more return on your investment than an offer like this today. So I highly recommend you visit us at metastock.com/Euro deal to take advantage of that. Or if you want to have someone help get this all set up for you and answer any additional questions that you might have, jump into our chat room, metastock.com/sales chat, or give us a call, 801-506-0900. And we have people standing by ready to answer your questions, ready to help you out with this. And of course, if you're also just looking to get your feet wet and you just want to try Metastock out, we can help you out with that too. We can get you 3 months access to Metastock daily charts, which is pretty much what we've been showing through the majority of the day, for as low as $59. So just reach out to our guys and we can help you out with that as well. The metastock.com/sales chat or metastock.com/Euro deal, and we'll help you out with that. Now, I know there was a slight discrepancy this morning. We had the Eastern time listed incorrectly for today's event. So I actually joined and did my presentation at the start of today. So if you're joining right now because you're looking forward to watching me present Metastock, well, hey, thank you. You're fantastic. You can actually see the exact presentation I was going to do by just rewinding if you're on YouTube, because we are broadcasting live on YouTube, which I know there's a handful of you guys there, and then we have a couple hundred of you in GoToWebinar. But youtube.com/Metastock, and you can find our entire recording there that has my presentation as well as all the other speakers today. Yeah, so I highly recommend you go ahead and visit there. We also have links up available as well on the YouTube where you can easily jump into our chat room or look at today's offer. Maybe I'll even show you guys if you were to visit metastock.com/Euro deal. This is also going to give you access to the video. So metastock.com/Euro deal. That'll take you here and you can find the YouTube video as well as today's offers. You can sign up for that discounted traders pack, or you can get a 3-month trial down here at the bottom. So again, that's just metastock.com/Euro deal. That's what you guys are going to want. And when you hit that, it'll take you right to this page. Let me see. I have a couple of questions coming in, so I'm happy to answer your guys' questions. If you have any more, otherwise, thank you so much for joining us. And I think that's going to wrap things up for most of the day. It looks like we have lots of thank yous coming in. Someone's asking, will you make a recording available? Yes, we will. Those recordings, like I said, metastock.com/Euro deal. And you can find the recording and the offers there. And then, is it true that Metastock is only $60 a month? Yes. And you know what? It can actually get even cheaper than that. So it's the $59 a month for the Metastock daily chart subscription. That includes our software and data. Well, if you like the software, you can actually buy it outright. So normally the cost for that is a one-time payment of $4.99. And then you can either use a local data provider or you can use our data starting at just $27.95 a month. So you can actually get your monthly rate down to under $30 a month, or if you do an annual plan, it comes out to like less than $25 a month to get data to power your Metastock. And we have some promotions available for that too. If you're an existing user or if you're a new user and you know you just want to buy Metastock outright, jump into our chat room, metastock.com/sales chat. If you're on the Euro Summit page here, you can just click the live chat button down at the bottom, and that'll take you into our chat room as well. And we're happy to answer any other questions for you and help you out. So someone's asking if you can analyze the NASDAQ. Yes, so you can use Metastock on the NASDAQ, pretty much everything you've seen today. You can use all of these different strategies on the NASDAQ. You can do system testing on there as well to kind of see which systems in Metastock have performed the best on there. So yes, we have access to global markets. Let me see too. I've been reading the GoToWebinar questions. Let me see if we have questions on YouTube. So just, yeah, we're not broker affiliated, so you don't actually place any trades in Metastock. So you can use any brokerage you want for actually placing your trades, but you can do all of your analysis with us inside of Metastock for global markets. All right, well, I think that's, yeah. So our data comes from Thomson Reuters, or now known as Refinitiv. It's one of the most well-known trusted data suppliers in the world, and it's actually an aggregation of all of the largest brokers out there. So you're seeing basically the combined price of multiple brokerages put together. So you're not going to find an outside broker likely with the exact same. Sometimes you can, if you have a Zenith subscription, you can go in and see prices from specific brokers or exchanges and match it up that way. But normally you're seeing pretty much the same pricing data wherever you're looking, unless you just have a really, really small brokerage that doesn't follow like the overall price of the markets because they have such a small customer base. So I normally wouldn't recommend trading with a broker like that. But for the most part, you're going to get the aggregated data of all the largest exchanges. So you're going to get, we have the same data feed that professionals and institutions utilize in their trading and their analysis via Refinitiv. So yeah, you're not going to find really maybe exact specifics if you're looking out like 9 decimal points, but it should be able to meet your needs for pretty much any trader with Metastock. All right, I think that is the last question. So I'm going to go ahead and wrap it up and sign off from there for today. So Again, here's that offer just one last time to kind of show you guys. If you wanted to take advantage of the bundle, this is the best deal that you'd be able to get on those 3 trading strategies, hands down. But if you're interested in just one of them, you can also chat in with our guys and we can help you out with some the promotions from the individual speakers as well. But thanks so much, everyone. Have a great rest of your night, and we look forward to seeing you during the next event.
Hi, Kelly Clement here from Metastock. Before you go, I have 2 quick things for you. 1, thanks for joining us today. We love having you here at our webinars and viewing our videos. So what I'd like to invite you to do before you go is like and subscribe. Like the video, subscribe to the channel. It helps us a great deal and it helps us bring you more awesome content like today's video. The second thing is we have a great ebook on trading that you can get for free. If you go to metastock.com/YouTube book, you can get a free copy of The Secrets of Successful Traders. It's a great book with lots of content from traders just like yourself who can teach you some of the secrets that they have learned. Thanks for taking a second with me and learning about those 2 things. Thanks for joining us and keep on trading.